movies The Mandalorian and Grogu topped the weekend box office. It brought in $82 million in its opening weekend and an estimated $102 million through Monday. Turns out that is the worst start for an installment of the Star Wars franchise since Disney bought the franchise back in 2012. The Mandalorian cost a reported $165 million to make, and now people are wondering if the franchise is running out of steam, the Star Wars overall. Disney milked it. They've gotten a lot out of that franchise, and some people say it was there too much. But we'll see what happens in the second weekend, too.
Coming up, we got a lot more on Squawk. We're going to talk about the U.S.-China relationship and why currency may become a more important policy lever. We'll do that right after the break. Do not go anywhere. Welcome back to Squawk Box. The U.S. relationship with Beijing back in the spotlight. Joining us right now is Peter Alexander, ZBAN Advisors founder and managing director. Good morning to you. We're all trying to figure out what is happening with that relationship post the big meeting between President Trump and President Xi Jinping, that is, still trying to make sense of whether a lot was accomplished, a little was accomplished, and frankly, if you could project it forward to how it may relate or not to what's happening in Iran right now.
Well, I think it's safe to say that the meeting was more of a photo opportunity for the president and even Xi Jinping for himself. But nothing materially, as I could see it, really came out of the 1.5 day meeting. And, you know, I think that's a positive. I mean, my outlook has always been, as long as the United States and China are talking, that's always going to be a positive, not just for those two nations, but I think for the world as a whole. But what really stood out to me is the complete difference in approach to the relationship. You know, I'm sure Secretary Besson is doing a great job trying to figure out exactly what can be done between, you know, the two economies, trade and whatnot. But he needs better advisors on China, because the Trump administration has been running into one buzzsaw after another over the course of the last, I don't know, better part of 18 months, especially after Liberation Day. And it just doesn't seem like there's I think, a duly appreciated acceptance, if you will,
blah, blah, blah.
degree of leverage that China has. And it goes far beyond rare earths. I've been advising clients that rare earths is really just a MacGuffin. You know, it's one of hundreds, if not thousands, of points of potential leverage that the Chinese can use, given their sheer dominance in global manufacturing.
Always
Okay, so
negative.
if you could advise the Treasury Secretary right now, where do you think he is missing something in this regard?
It's all about dialogue, and it's all about finding ways to be able to figure out what exactly China would be able to deliver. And I know, use the examples of EVs, right? It's a matter of time. You know, as much as there's pushback, I feel very confident, given the quality. I own an EV from China. They're going to come into the U.S. market. And if there's a way in which I think the U.S. government can take a page, if you will, from the Chinese playbook of the 1990s, when General Motors entered the market here, you just begin to be able to build sort of joint ventures, try to find ways in which you're able to take a majority shareholder. I think that would be highly contentious for the Chinese, but it's working in ways in which the Chinese would be permitted to come in with investment and to leave the politics as far aside from that as possible. And I think we can all agree that right now the only bipartisan topic where there is agreement is against China. You know, China for me is neither good nor bad, it just is. China is, however, the apex predator or apex competitor. And the more that I think Secretary Besson and Ambassador Greer are able to provide dialogue and be able to find ways to engage where the Chinese can bring in expertise into the United States, I think that's a win-win for everybody.
Right.
I just think the politics probably will make it impossible.
Peter, what is the reaction in China to what's happening in Iran right now? I mean, we heard on Friday that there was a deal in the offing, imminent deal by Friday night. It appeared that there was no deal in the offing.
It's probably the one question I've gotten from clients over the course of the past month when I talk with them, and my response is, it's just Tuesday, meaning that here in China there's no drama, no one's really thinking about it. They're all, the Chinese citizens and people here are just going about their day, trying to get, you know, through and work and do what they need to do. There's some conversation about it, but this is far more of a Beijing issue than it is, I would say, a Chinese citizen issue. It's not really a topic of conversation. Right now, the topic of conversation is the stock market, quite frankly, and the excitement that's coming out with regard to, you know, the new Huawei technology that they talked about yesterday. We've got new memory chip companies coming out. We got, you know, end-to-end companies coming out as well. So there's a lot on the technology front that China's pursuing, and it's got the Chinese themselves very excited about what that could mean for, again, stock market returns.
Do they have conversations, by the way, there about AI and what it may do to workers and the dignity of work? We've been having a big debate here in this country about that.
There's a conversation for sure, but it is nowhere near as elevated as it is in the United States. And the primary reason for that is there are uniquely different approaches being taken, where the United States, as I view it, is trying to look at, you know, creating God in a box, if you will, when it comes to AI. The Chinese are looking at deploying, and have actually been deploying, AI across their entire manufacturing ecosystem to find ways to increase efficiencies. So you would actually think this would be more of an issue with regard for the Chinese, because the displacement of workers could be more elevated at this very moment than it would be elsewhere, especially in the U.S. But I think right now it hasn't reached that point. and people are just trying to figure out the best way that it can be used to improve efficiencies. So it's not, again, it's far more elevated in the United States than we've seen here.
All right. Peter, got to leave it there. Thank you. Appreciate it very, very much.
All right. Thank you. All right.
You bet. It is just past 7 a.m. right here on the East Coast. You're watching Squawk Box on CNBC on a Tuesday morning that may feel like a Monday morning for a lot of folks. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. The futures, they're moving higher on hopes of a U.S.-Iran deal. At least one may be close. We were told that on Friday. It's unclear whether it is still that way today. The Dow, though, up about 295 points. The NASDAQ up about close to 300 points, 297 points. The S&P 500 up about 53 points. Also helping the futures, the price of WTI crude. It is down this morning while Brent is up after U.S. conducted self-defense strikes in the Gulf. You're looking at crude at 92.16. You're looking at Brent at 98.57. I don't know if we want to talk treasuries as well, because you have the 30-year and the 5-year coming as close as they've come in quite some time, which I think, you know, people say signals we're going to have higher rates for longer, which is therefore surprising given the equity markets.
Yeah, the 10-year, though, back at 4.48 after being above
Right.
4.6% last week. So there has been some movement and some confusion about where things are headed. But, yeah, stubbornly high rates.
Well, let's get to Eamon Javers for more on the situation in Iran, the rising tensions. There was, seems like a shooting war. I don't know. What do you call it?
Yeah, it feels like that. Good morning, guys. CENTCOM said last night that the U.S. had conducted strikes on targets in southern Iran, including boats suspected of laying mines in the Persian Gulf, after a weekend of apparently intense negotiations between the United States and Iran produced no results. In a social media post on Monday, President Trump raised the possibility that a shooting war could erupt again, writing, "Negotiations with the Islamic Republic of Iran are proceeding nicely. It will only be a great deal for all or no deal at all. Back to the battlefront and shooting, but bigger and stronger than ever before, and nobody wants that." Now, the president mocked his critics, some of whom suggested over the weekend that he risked signing off on a deal that failed to achieve his war aim of ending the Iranian nuclear program and left Iran in a stronger position than before, with de facto control over the Strait of Hormuz and the ability to charge ships for passage, generating enormous new revenue for the regime. The president wrote, "I laugh at all the dumbocrats, rhinos, and fools who know nothing about the potential deal I am making with Iran." Meanwhile, Iran's foreign ministry spokesman said in a press conference Monday that a large part of the issues under discussion have been concluded, but that negotiators were not discussing nuclear details. He also said that although Iran is not collecting tolls in the Strait of Hormuz, the strait should be managed by the two countries that flank it, Iran and Oman. He said the two countries are drafting a protocol for ships to transit that would involve paying what he called fees to the two governments. Now, the president also said on social media that he is mandatorily suggesting that the remaining countries in the Middle East sign on to the Abraham Accords. That was the agreement to establish economic and diplomatic ties with Israel that he led in his first term. Trump said Saudi Arabia and others should sign on as part of the Iran deal, but that he would accept it if one or two countries did not end up signing. Guys, back over to you.
Yep. I call it a fluid situation, but we'd be talking about oil, and we have to wait and see. Eamon, any conjecture is I'm exhausted just from conjecturing, and
It's impossible to say from the
we don't know
outside.
what's going on. We really don't know what's going on. We don't know who's talking to whom and who's speaking for Iran or any of those things. So we just have to just wait for Team Social
Interesting
Post.
to watch oil move over the weekend, because you saw, the president said that negotiations were proceeding nicely on social media, and we saw some coverage that said, well, that lowered oil prices through the weekend. I think markets are reading a lot into these social media pronouncements from the president that's maybe not there, right? I mean, the president's sort of giving some kind of directional stuff on social media saying, things are great, but there's nothing really to react to. There's no specific detail there. And then you see the Iranians saying, well, we're not even discussing the nuclear material.
Some would say, well, yeah, but the markets are all knowing, and whatever they do, that's all that matters. There must be
Right.
something going on, but we've seen it before.
The markets have never gotten it wrong before.
Well, no, yeah, we saw before where all of a sudden oil is all the way down in the low 90s, and then a week later we're back at 108 because whatever got it down into the 90s was not happening, and that, I mean, that could always happen again. You know, those futures markets.
Yeah, I mean, the thing to remember about the oil markets, of course, is that the oil markets don't care who wins the war, right? I mean, they just want the strait open because that will lower the price of oil. So, you know, in terms of a winner, right, the president wants to achieve his war aim of eliminating the Iranian nuclear program. That doesn't really matter to the oil markets. The oil markets want the strait open and the ships flowing. And if it opens because Trump throws in the towel, or it opens because the U.S. wins the war, either way, that's good for the oil market. So,
And
you
the
know, they
oil
don't
markets have an
necessarily care
ultra-short-term
whether
focus
Trump achieves
because
his
these are
aim.
futures contracts that
Yeah.
expire, and it's tough on delivery for those things, which is why you might see a very different price as soon as the contracts roll.
Right, right. So, you know, you get a lot of speculation around these social media posts, which are sort of directional, and so it's like vibe coding the oil market, right? But is there anything real behind it? You know, I didn't see anything over the weekend that indicated we're closer to a deal.
Eamon, thank you.
You bet.
When we come back, strategist Ed Yardeni will join us and talk to us about the difference between market FOMO and something he is calling FEMO, fabulous earnings momentum. That's what he says is driving equities higher. He'll be with us when Squawk Box comes right back.
there you go. More new highs indicated. Join us now. Ed Yardeni, president of Yardeni Research. He came swaggering in here like he knows everything.
No, I don't.
You've been right though.
Thank you.
You are welcome. Last time you were on, you went from, I think you went from 77
7,700 to
On the S&P.
8,250.
to what?
8,250
By
by the end of the year, and 10,000 by the end of the decade.
Tom Lee recently has said best couple of years that we're going to see in the stock market in his lifetime, or something similar to that. You've got some non-obvious reasons to make that case, don't you?
Well, I think it's actually the obvious reason, and that
Earnings?
it's earnings. Yeah, you know, I've been recently talking about FOMO versus FEMO. FEMO's fabulous earnings momentum, and that's really what's been driving the market, not FOMO, not fear of missing out.
So it almost makes sense. I guess when I said not obvious, I meant given what's right in your face that causes people to think, oh my
Yeah,
God,
of course,
stocks
yeah.
are, you know,
Yeah,
all the
there's
things
plenty
that
of
make
things
you
to worry about. Yeah.
Yeah, the people that consistently build a wall of worry that the market climbs.
Yeah, I think what's been largely missed is the resilience of the economy. You know, the economy is kind of like Rodney Dangerfield. It's been getting no respect.
And then we got to figure out what is responsible for that. We know it's the greatest economy in the world.
Yeah.
It always will, always has been. But then what else? Is it AI? Is it
I think
deregulation?
I think, you know, what was it about in 2024 that everybody was talking about American exceptionalism, and then that the whole thesis kind of fizzled out in 2025. But we have amazing capital markets. There's a tremendous amount of capital available for innovation that's driving the technology revolution. The technology revolution is driving productivity, and productivity is fairy dust. It makes everything better in the economy, better growth, lower inflation, real wages go up, and profits are great.
I mean, you look at the rest of the world, and all you got to do is look at the leading companies in any industry, especially technology.
Right, they're here.
Over the last even 20 years, even back to Google or, I mean, even anything involving the internet, and you got Amazon, then you got social media, and you got Meta, and now you've got AI. It's all happening. Biotechnology or pharmaceuticals.
That's a huge
It's all here.
Yeah, it's all here.
Why?
Well, I think this is still a very entrepreneurial society. There's a lot of people that are constantly looking at opportunities to come up with better products, better services, cheaper, better, and we do creative destruction better than anybody else. You know, famous economist and way back when, by the name of Joseph Schumpeter, said that you know that's what entrepreneurs do.
He said a lot of smart things, especially about the permanent leisure class,
Yeah.
which ends up being so well off that they think they don't need capitalism and don't realize capitalism is where it came from. There are people pointing out that in terms of risk premiums, or premia, that we're at a point similar even to the bubble. Though there is froth, there is call buying, there may be some disconnect between fundamentals and the lofty levels.
Well, we've already had a few crashes, right? I mean, we had a crash at the beginning of last year. It turned out to be a great buying opportunity. We had a crash in March, turned out to be a great buying opportunity. I mean, the market.
The best one was in the pandemic at 2,300 on the S&P.
Yeah, I mean, that was an amazing buying opportunity. So I think there's a tremendous amount of wealth in the U.S. on a global basis that wants to invest in the U.S. And I think there's earnings is what's driving it all.
The thing that the unknown that we don't know, the unknown unknown. That's a crazy term, but what is it? What's looming that could cause a big problem?
Well, I think it's on the geopolitical.
Nuclear holocaust is always.
Yeah, I mean, unknowns are unknown, but known unknowns. We know about the possibility that China will invade Taiwan. I mean, that would be a calamity, but it would be a calamity for China too, which is why
$150 oil might be a calamity, or not so.
Well, I think oil prices are going to be coming down.
You do?
Yeah, look, geopolitical crises have traditionally been, almost always been great buying opportunities. Market figured it out this time around as well. The shooting was still going on right through the end of March.
Right.
On March 30th, we made a low, and it's been up and away since then.
I'm just trying to think of a perfect storm issues with China, issues bogged down in Iran, higher interest rates,
Yeah, I mean,
$40
you
trillion
can- yeah.
of debt.
Yeah.
I can paint a scary picture if you
Well,
want.
the debt story's been around for a long,
I
long
know.
time. I've been doing this for over 45 years, and the perceptions that debt is going to create a calamity just hasn't happened. One of these days, it's conceivable, but you know, the reality is the Treasury and the Fed can always finagle things. That's what happened in 2023. The Treasury said, okay, we'll issue more bills and it won't increase the amount of bond issuance. No, we've, you know, I'll worry about the debt when my friends.
Interest rates might be going up. The Fed might be raising rates.
Well, look, the thing is, as long as somebody's buying the debt, that's also the flip side of debt is wealth. You know, I mean, a lot of people that are very concerned about debt are saying, I don't want to be in the stock market. And then you ask them, so where do you want to be? They say, I want to be in 10-year treasuries. I said, how does that make any sense?
All right, Ed Yardeni, we'll still, when I listen to you, I still get nervous. It just seems too good to be true, but I appreciate it. Thank you.
Thanks, Joe.
Okay. Coming up, World Cup Mania has reached North America. The game's set to begin next month. We'll get into the business of all the action with the CEO and Secretary General of U.S. Soccer's Federation next. Squawk Box comes right back after this. A new reminder of the ties between global soccer and global politics. Mexico has agreed to host Iran's World Cup team out of concern the U.S. would not. All three of Iran's opening round matches are in the U.S., 2 in L.A. and 1 in Seattle. The U.S. roster is set to be released today. The match is coming up with a lot of excitement, and also we should mention some complaints over ticket prices and questions about how big soccer can get in the U.S. after it is all over. We're going to touch on all of this. JT Basden is the CEO of U.S. Soccer Federation. He joins us live this morning. Good morning to you.
Good morning.
So maybe we should start with the last part. How big can U.S. soccer get when this is all over, do you think?
Well, we know that there are over 100 million Americans who are fans of soccer. There's a recent poll in Semaphore that 20% of Americans are obsessed soccer fans. And there are a lot of projections that through this summer, through LA 28 and the Women's World Cup in 2031, which we're hopefully hosting, there'll be over 150 million Americans who are fans of soccer. So incredible growth, come a long way from '94, and obviously we want to keep going.
What do you make of worries about price gouging during this World Cup? Well, I mean, that seems to be a big ticket item, if you will, everywhere across the country right now.
Well, U.S. Soccer, we've been focused on ensuring that every fan across the country can be part of this World Cup. So we have more than 300 what we call Soccer Forward Fest, so watch parties and play soccer festivals all across the country. Later today at Pier 17, we're formally introducing our roster and our team. That's free and open to the public. We've had about 2,000 people will be there, so lots of great opportunities there. But I think the bigger thing is that the tickets, the revenue for the World Cup, that's what FIFA uses to fund soccer growth all around the country. And one of the things that we don't talk enough about is the majority of the countries in the world, the majority of their revenue comes from the profits of the World Cup to be able to fund soccer. So much of this is an effort to grow soccer around the world.
What's it going to, if I want to really go to MetLife Stadium, between the bus, the tickets themselves, the consent, what do you think it's going to cost me all in? Let's say family of, let's go just 2 people and make it corporate.
Well, the tickets for the final have long been sold out, although I saw yesterday that a ticket for the Knicks in the final is $287,000 for front row. So,
wow. Okay.
So tickets for big-time sporting events are definitely robust.
Right.
I remember the '94 World Cup. I grew up in Augusta, Georgia. We couldn't go to the games. We couldn't afford to do that. I still fell in love with the sport, and so there are going to be all sorts of great opportunities for kids and for those who love our sport to be able to experience it this summer.
What do you make about the situation in Mexico, the Iranian team?
I think they'll have a great base camp in Mexico, and FIFA yesterday announced all 48 locations for where teams are training. What's cool about it is there are cities in America who are going to be able to host teams that aren't hosting games, and so more and more cities will be able to experience the fun of the World Cup this summer.
But does that become a sort of a political flashpoint? You're trying to stay out of the politics, I can tell. Let me ask you a different question then. Heat. It is going to be hot.
It will be warm.
And there is a lot of concern that there could be break requirements potentially even. This has happened in Brazil in the past, where it's just so hot, the players have to stop because they can't play.
Well, Major League Soccer, MLS, USL, and every youth soccer kid in this country has played in the summer in the United States. Soccer has thrived in the summer here, '94 World Cup, '99 World Cup, so we know how to do this. Now, FIFA has introduced a water break to ensure that there's fairness across all games, and that would be something that will be, for the first time in the World Cup this
What's that going to look like?
About halfway through the half, there'll be a couple-minute water break. Not more complicated than what you'd see if your kids are playing, over the weekend.
Hey, JT, just in terms of the, go ahead.
Go ahead. No.
Just in terms of the television rights, I mean, you look at what soccer is being paid right now. They're on Apple. I know the viewership is down on Apple TV versus where it was on ESPN before. And the rights package, I think, works out to about $500 million a year. That's far below, maybe not surprisingly when you look at football, but it's below baseball. NHL gets about $1 billion a year. NBA is $7 billion a year. Obviously, soccer's come a long way, especially if you look at the youth leagues in this country and the excitement. If you're a parent of a kid who's playing soccer, you get into it too. Where do you think those numbers are going to head as you get to the end of that Apple TV contract?
So, Major League Soccer's deal with Apple TV ends in a few years. I can share, U.S. Soccer renewed its media rights, our Spanish language rights with Telemundo a few weeks ago, and that was 3x over our prior deal. And overall, over the last 4 years of U.S. Soccer, we've tripled our revenue, and most of that has come from incredible growth from commercial partners. Just went by Bank of America's headquarters as we rolled in here this morning. A great example of a company who's investing at record levels in soccer, and I think that'll only continue to grow.
Do you think the Apple deal was a mistake?
I think as a fan, it's been incredible. When I'm feeding my 8-month-old at night, I can turn on Apple TV and can see.
Do you think it was a mistake in terms of just pure eyeballs, broader appeal, broader numbers in the end?
Well, I think they've learned from this year. This year, it's now available to any Apple TV subscriber, and their numbers are up. And so I think making sure that their next deal includes broad distribution, I think is going to be really important.
This goes to a larger question about streaming versus broadcast.
Yep.
Would have they been better off in the end, being attached to a broadcaster or splitting the rights, if you will, between a streamer like an Apple, giving them a foothold in this business, but also being on broadcast?
The current deal does include a partnership with Fox, so a number of games are on Fox.
But not a lot.
And I think the beauty is there are learnings from this.
Right.
They're an innovator around how to use streaming partners, and Apple's of course a great technology company. I think the opportunity as you look a few years ahead is to maximize the global distribution that comes from streaming, while also making sure that your sport is accessible to every kid, every fan, anywhere in the country.
JT, thank you.
Thank you.
Good luck this summer.
Appreciate it.
It'll be fun and
Thank you.
hot.
Nice and warm.
News update for you. Energy giant BP has removed Albert Manifold as the chair and director effective immediately. The company said that the move follows serious concerns raised to the board that are related to important governance standards, oversight, and conduct. BP has appointed Ian Taylor as its interim chair, and it's going to start searching for a new chair. There aren't any more details available at this moment. But BP shares are off by about 3.8%, probably because oil prices are down today as well. When we come back, we are going to look at some stocks on the move, including Micron and some of its fellow memory chip stocks. Specifically, we'll also be checking out Eli Lilly, which has been on a spending spree. Don Chu is going to run it all down for us when Squawk Box comes right back. You can see the Dow futures up by 312 after closing at a new high yesterday. S&P futures up by 52. The NASDAQ up by over 300 points. And Squawk Box will be right back.
Let's get to Don Chu with a look at this morning's pre-market movers. Hey, Don.
All right, so Joe, Becky, Andrew, we're going to start off with shares of Micron, which are jumping right about 6.25% in the pre-market right now. after UBS analysts more than tripled their target price for the stock up to $1,625 per share from a prior $535. That's an implied upside of over 115% from Friday's close. Now, the analysts there say that AI has changed the entire memory complex and that Micron's longer-term contracts puts it in a strong position. CEO Sanjay Mehrotra also made some comments earlier this morning on Bloomberg that he says he sees the memory chip shortage lasting beyond 2026 on Friday. He made those comments. So Micron overall about 6% on some of those bullish pieces of commentary anyway. Other chip names like SanDisk, Western Digital, Seagate, and others all getting a boost from some of those comments and analyst notes as well. So keep an eye on the memory chip space. Moving over to Marvell Technology in chips, jumping another 5% this morning after JP Morgan released a bullish note ahead of tomorrow's earnings report. Those analysts there expect the semiconductor company to post stronger results because of its exposure across the entire AI infrastructure build. Those shares are up about 240% over the past 12 months. And then finally, shares of Eli Lilly are up about 1% or so this morning after announcing it will acquire vaccine developer Curivo, Limitech Biologics, and vaccine company for about $4 billion combined, marking a new push into infectious disease prevention. Analysts of Bank of America also see Eli Lilly's market position in GLP-1s to remain relatively dominant, especially with prescriptions of its oral GLP-1 Foundayo. So Eli Lilly up about 1.25%. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers get all the context and detail around the day's notable upgrades and downgrades. Joe, I'll send things back over to you guys.
When you say it, it just all seems so simple and normal, Don. But Micron is at $800, $798.
Yeah, $800 just about.
It was at 92 in the last 12 months. It was a commodity chip maker that was never going to amount to much. This was the J.R. Simplot days, remember?
Yeah.
Micron, Idaho, the Lord of the Fries.
Sure.
And now it's almost $1 trillion.
And it's not just that, too, right? It's carried across everything else because there's been this mad rush. And it's kind of curious because we thought about some of the ripple effects from some of these types of companies over the course of the kind of last 2 or 3 years in AI. But the memory chip side of things and all the new entrants there that have kind of come to market, it's a big deal for sure, Joe.
Words can't describe what a big deal it is.
No.
I don't think. I wonder that.
I mean, it's
it's not, and it's all AI, I guess, but it's not out over its skis at $1 trillion.
It's not, I mean, it's the valuations are interesting because they're not nearly as crazy as some of the valuations we've seen over the course of the past 20, 30 years in technology, right? So, I mean, but this is parabolic. It's almost the definition of it. So.
All right. So Scotty Scheffler, top 25 in 32 straight tournaments, but only one win.
Apparently no wind at TPC Craig Ranch, so the course played relatively easy, I guess.
That's ugly. I thought that was kind of an ugly course, but it was a cool course, but just the surrounding areas, warehouses, weird.
They need more wind.
Okay, see you later.
You got it.
Thanks, Don.
Coming up, Pope Leo warning about AI and its potential threat to humanity. He did so alongside Anthropic's co-founder. We're going to get into the Pope's message and the AI race with more with author Sebastian Mallaby. We're going to do that next. Do not go anywhere. Squawk Box. Be right back. Welcome back to Squawk Box. Pope Leo warning about the risks of AI, saying it threatens to normalize an anti-human vision. He invited Anthropic's co-founder, Chris Olah, to present alongside him. Joining us right now, Sebastian Alabi, Paul Volcker Senior Fellow for International Economics for the Council of Foreign Relations. He's the author of multiple books, including a great new one called The Infinity Machine, about Demis and deep minds and AI, and you are like the perfect person to talk to about this situation with the Pope and what the Vatican was saying over the weekend. What did you make of what he said? Were you surprised, by the way, that Anthropic was like right there as part of this?
Classic Anthropic, right? They're always reaching out and being the most keen on safety, and if somebody's going to say that AI, as it's currently configured, is going to delight domination, exclusion, and death, which is what the encyclical says,
right,
there'll be somebody from Anthropic there to listen and to sort of say this is an important statement.
What do you think the rest of the Valley is thinking right now?
It's funny, you know, I mean, I think they know that there's this huge backlash, right? And this is an extra dimension of the backlash, because the classic backlash is jobs, it is my kids, their education is going to be messed up by these LLMs. You know, it's maybe, you know, a sort of sense of, but this is existential. So I guess that's the difference thing. This is the Pope saying humanity itself is being challenged by a new form of intelligence, and there are all these debates about can they be conscious? You know, we used to talk about the rapture in religion, now we talk about the singularity, the idea of the afterlife, this transhumanist idea, you upload your brain to a computer. There are all these religious overtones to the AI language, and maybe that's also part of the backlash, is creeping people out, and that's what the Pope is articulating.
But when you think about the folks at Anthropic, or by the way, even Sam Altman early on and others who've talked about sort of the real dangers that this technology poses. Demis has talked about the dangers.
Sure.
Is that a marketing ploy to sort of prevent, or they thought it was going to sort of prevent the pushback later? Is that real to you? What do you think what is this?
No, look, I think it's totally real. If you take Demis Hassabis as an example, he founded his company after going to a safety lecture in 2009 by his co-founder Shane Legg, at which it was predicted that humans would be threatened by machines around 2030. And so this idea that this is not just a normal technology, this is not a shopping app, this is existential, and this is foundational to how these tech founders think about it. You know, and it's not true that they're motivated just by profit. They're motivated by something more crazy, which is power, the sense of having humanity's destiny in your hands. It's even beyond the 21st century version of the nuclear material.
That's what I was going to say. The whole idea that in order for this to be safe, you have to keep it open source. He's kind of pushing back on that. The idea that there should be any open source, I think he thinks is a little crazy, and maybe you do too, because would you do an open source nuclear project?
No, exactly. I mean, I think open source is the biggest miss by both the Biden administration and the Trump administration. Nobody's willing to say this is too dangerous. There was just some research out recently where some people took hold of the open source models, both from Google DeepMind, the Gemma series, and the Meta models, which are open source, and showed how you could remove the guardrails super easily, and then ask it to talk to you about chemical weapons and how you would make them. So this is way too dangerous. And we have Mythos. That was proprietary. It was restricted proprietary. Only 40 institutions got it, right? That's where we're moving to. That's where we need to move to. It's like being very careful about how we release this stuff. An open way where everybody can do whatever they want, nuts.
You've studied Google at great length, given your book about Demis. They just came out with some new models last week. I'm curious if you wanted to stack rank them for the viewer right now in terms of how you think about where Google really lays in this game versus where Anthropic is versus where you think Sam Altman at OpenAI is, and maybe even where Meta is right now.
Yeah, so I think Google is sort of the second-placed runner that always ends up winning, right?
Okay.
It did not come out with ChatGPT first. It did not come up with agentic models as quickly as Anthropic. It did not do coding genius as quickly as Anthropic. But it comes from behind. It's got so much resources. Google's profits just since 2022 have doubled. Mm-hmm. They are monetizing this directly. They are turning it into clicks and to, you know, click rates. They are charging, not only has the click rate gone up, they are charging more per click because the clicks are more valuable with AI embedded in search.
Right.
You know, it's more accurate in terms of what people want to buy. So Google is just like minting money, and they've got a deep scientific bench. They have this enormous surface with consumers, so you can serve them through search, AI mode, AI overviews, more than 1 billion people.
And they're about to be able to do that with Apple in terms of
Absolutely.
all of the phones. So how does that change things?
Well, I mean, it's already embedded in the Android phone, you know, the Gemini system, as you know, the Google model. As you say, it's going to be an Apple phone. Now, everybody's cell phone in the world has, you know, Google first. Yeah, they're winning, right? Not in a flashy way of having the best science at all times,
Right.
but in a kind of commercial way of getting it to more people.
And then finally, I wanted you to weigh in on what we were hearing late last week, which is just that the cost of tokens is so high and probably going higher,
Right.
that there's a conversation, at least at Microsoft and some other places in the Valley, that maybe we're spending too much on tokens. Maybe it's actually cheaper for us to actually use humans to do our programming and coding and things like that.
Yeah, but you could use Gemini 3.5. That's the new model from last week. And its great selling point is that it's fast and very cheap relative to some of the other frontier models. So, you know, again, I mean, look, I hope that humans don't get displaced en masse really fast, because that's going to be horrible. And I support a tax on capital and less tax on labor to try to even out that balance. You know, the frontier models are super expensive, but you can go to Google.
Do you want to weigh in real quick? David Solomon, CEO of Goldman Sachs, had an op-ed, I don't know if you saw it.
I did,
saying that
yeah.
the AI apocalypse is not going to happen.
Yeah.
It's overdone.
Yeah, another oracle who seems to know the future. I mean, look, it's super difficult. It's about the pace of disruption, right?
Mm-hmm.
I mean, and the other thing is the political consequences of AI disruption could exceed the actual labor market effects. If you think about the China shock, when China entered the WTO, over a 12-year period, there was a grand total of 2 million jobs lost because of Chinese trade. It's not very many in an economy which churns the whole time at massive speed.
Right.
And yet the huge globalization backlash. And we could say the same with AI. Maybe David is right that we create as many jobs as we destroy. But even so, I think the political backlash is a threat to these companies. It's a threat to being able to monetize the capex that they are doing. It's a question over the IPOs that they want to do. I think it's pretty important.
Okay, Sebastian, thank you. It's a great book. Go check it out.
Thank you.
Thank you. Infinity Machine.
When we come back, lenders have been skittish about financing 3D printed homes as they are skeptical about that technology. But one major bank is stepping into the market. We have that story and much more when Squawk Box comes right back. 3D printed homes are slowly becoming more mainstream, but it is still hard to get a traditional mortgage for one. Lenders aren't totally comfortable with the new technology, but that is about to change, and it could give a big boost to the business. Diana Olick is here to explain in this week's Property Play. Diana, good morning.
Good morning, Becky. Wells Fargo is announcing right here on CNBC that it is jumping into 3D in a big way. We took you to this 3D printed community last year just outside Austin, Texas. It was a collaboration between Lennar and Icon, the nation's largest 3D developer. Lennar did the mortgages on those homes, but now Wells Fargo will be Icon's preferred lender and will also offer an incentives to buyers. That is a 50 basis point lender credit to buyers of Icon homes using Wells Fargo mortgages.
Having one of the big banking players make such a strong and pointed announcement that we like these houses, we're excited about these houses. In fact, we're going to give preferential treatment to these houses, I think helps people just in a broad way who don't track the minutia of the housing mortgage industry.
It was tough to get the loans because there had been concerns among lenders over the viability of the technology, the potential appreciation of the homes, and the ability to both sell and insure the loans.
We don't have any reason to believe that the long-term value for these homes will be any different from homes that are built based on traditional construction technologies.
Icon is also starting to sell its new Titan 3D printers to developers. The price tag, $899,000. Wells Fargo will offer financing to builders interested in buying the printers, as well as mortgages on the homes built with the Icon printer. That is signaling institutional confidence in alternative construction. Now, for much more on this story, it's all in the Property Play newsletter about to drop at 8 o'clock. It's free. Go to it, cnbc.com/propertyplay. Becky?
Hey, Diana, I remember the company, but remind me the advantages of getting one of these 3D printed homes. I take it it's cheaper, maybe it goes up faster?
Well, yeah, exactly. It's cheaper to build, goes up faster, literally takes 3 guys to build one home, and it's also much more environmentally sound, energy efficient for heating and for cooling, and it's really a better way to build more affordable housing more quickly, and that's the whole push behind this, and so that's why the bank's getting in.
Okay. Diana, thank you very much. Diana Olick. When we come back, former FDA Commissioner Dr. Scott Gottlieb on the global response to the Ebola outbreak. We'll get to that and much more when Squawk Box comes right back. Welcome back, everybody. The number of Ebola cases continues to rise, along with concerns about budget cuts making the United States more vulnerable to diseases like this. Joining us right now is former FDA Commissioner Dr. Scott Gottlieb. He is a CNBC contributor, and he serves on the boards of Illumina, Pfizer, and United Health. And Scott, let's talk this through, because already, I think it's over 900 cases, over 220 deaths. This is already the third largest outbreak of this disease in history. What happened? How did things get so out of control so quickly?
Right, well, this is with a new strain of Ebola, Bundibujo, that we haven't seen before. It's been isolated in two prior outbreaks that were both very small, the last, I think, in 2007. So they weren't looking for this particular strain. So when cases started to surface, they weren't testing for it, and it took a while.
It was a couple of months before anybody...
Right, so it looks like the earliest cases may have been in March. And so this has been spreading for a very long time before it was ultimately detected, and they started to take actions to try to mitigate further spread. It looks like there's multiple chains of transmission now that we haven't fully isolated. And so this is an outbreak that's out of control in West Africa. It's going to take them a long time to try to get control of this, unfortunately.
And the risk beyond that, it's spreading to other countries as well. We've already seen some planes that have been turned around, borders that have been closed as a result of this.
Right, and we've seen travel restrictions imposed here in the United States as well. I think the risk to the United States is exceedingly low. I think there could be isolated cases from imported cases. There were people traveling into this country before these restrictions were put in place. We know the incubation period is about 21 days. So it's possible that there'll be cases here. I think there could be some isolated situations where you see a small chain of transmission. Again, I think that's low odds, but we need to be prepared for it. The real risk is to West Africa, where this virus is out of control right now. And if they can't get control of this epidemic in West Africa, that it could spread to other populated regions of the world that don't have good public health infrastructure, like India or South Africa. That would be a public health disaster, because then it would become exceedingly hard to get control of this. That's, I think, the biggest risk right now, that it continues to spread in West Africa and then jumps to other markets that don't have the kind of public health infrastructure that we do.
There's a lot of criticism about funding from U.S. aid that was cut beforehand. Is that part of the problem here, or is there anything we can do at this point?
Yeah, I think it's very hard to draw that conclusion right now that the funding cuts contributed to this. I think, we'll see how this goes forward. I know the U.S. government, I spoke to people within the administration just last night. There's a lot of effort underway across the State Department, BARDA, CDC, HHS, sort of an all-of-government approach that putting tens of millions of dollars into the region right now. So I think the administration's focused on it. I think, we can look back a year from now and see what impact, if any, the funding cuts had, but it's too early to draw that conclusion.
There is a new acting commissioner at the FDA, Kyle Diamantis, and there's a stat story out today.
I'm quoted in it.
Yeah, that takes a look at him, and overall, he's getting pretty high grades from a lot of different people, yourself included, about what's going on. And I think the key that at least staff points out is that he's earned the trust of key career staff. He came in, he was relative unknown, a lawyer who'd been representing food and beverage and tobacco industry clients, but he's won over some of the staff there by listening and kind of following what recommendations have been made by the scientists.
Yeah, look, I will tell you, I speak to staff at the FDA. He has a very good reputation inside the agency as someone who's worked through the process, works with professional staff to try to advance policy. He goes through notice and comment rulemaking guidance. He does everything a good regulator should do and a good leader of that agency should do. And I think he's well regarded internally. I do think that there is this view that a food and drug lawyer can't run the FDA. I disagree with that. There's a view that it has to be a physician, but that's sort of an outdated view that I think stems from when George Bush tried to put forward a lawyer to run the agency, and ultimately the Senate rejected it based on those grounds. But that was more of a political fight that was going on between certain senators and the administration at the time. I think an attorney can run the FDA, and I think he certainly has a good reputation in the organization as someone who's been very effective.
Andrew, you want to talk GLP-1?
I always want to talk to GLP because I'm fascinated by it all. And the new report last week that got me even more intrigued by all of this is this potential that it is reducing the risk of cancer. What do you think of that?
Yeah, look, these were multiple observational studies right now that showed this effect, and so I think it's very interesting. They obviously need to be replicated in prospective studies right now, which are underway. There's been situations before we've had drugs that affect metabolic health, like metformin, that showed an anti-tumor effect in observational studies. It didn't pan out in prospective studies. That said, I think there could be something real here. The drug is impacting overall metabolic well-being. So that could impact glycemic control.
But on top of the idea that if you're losing weight, you would probably naturally be less prone to cancer,
There's anti-inflammatory properties here. We know there's GLP-1 receptors on certain cancers, so there could be a direct effect, but I think most people who are speculating there may be a real effect here are speculating around the anti-inflammatory effects and the overall improvement in metabolic health. Again, we don't know. The observational studies are very intriguing. They need to be replicated in prospective trials. I wouldn't take the drug for that, but this could be something we ultimately discover.
What are the, just back to Ebola, what are the possibilities for therapeutics that
There's good possibilities. So there's a drug by MAP Biotherapeutics, Biopharmaceuticals, called MBP-134. That's a monoclonal antibody that looks to be effective preclinically. That's going to go into clinical trials. Gilead has a drug, obeldesivir, that looks like it's effective in preclinical studies.
Something in the genome.
Yeah, they block viral replication. The antibody obviously directly targets the virus. Also, molnupiravir, the drug from Merck that was approved for COVID, looks potentially effective. Remdesivir is being used in the region and showed some preclinical activity.
You can't use an anti, like retroviral drug.
No, it doesn't replicate that.
It doesn't.
Yeah, and there's 2 vaccine programs that are, relatively advanced preclinically. One is built off the platform of the approved Zaire vaccine. Another one by Oxford University and the Serum Institute in India also looks like it could advance. The vaccines are at best 6 to 9 months away. The therapeutics could be available right away. And the other point I'd make is Regeneron's approved antibody that was approved for the Zaire strain of Ebola. It's a 3-drug cocktail. It's a monoclonal antibody. One of those monoclonal antibodies in that cocktail looks to be effective against this, and they're actually using it. I think the physician who was hospitalized in Germany or Czechoslovakia received that.
But is it this?
He's doing okay.
He's doing okay.
The cytokine storm? Is it? Are we dealing with sepsis?
So what it does is it hijacks immune cells. So it hijacks dendritic cells and then causes dysfunction of macrophages, and that ultimately leads to a cytokine storm, and that's and DIC, sort of breakdown of clotting. So with supportive care, you can get these patients through it. The fatality rate with this particular strain is lower than with the Zaire strain.
What do you call the strain? What strain you called it? I want to be able to use that term.
Bundabuji? Bundi Buja.
Okay.
Yes, I mispronounced it. I looked down my notes.
I know what I'm talking about. So I'm worried about the Bundabuji.
I had to circle it in that because I've never heard of it.
Bundi Buja. I'll give you the phonetic spelling. I had rehearsed it.
What was the other strain?
The Zaire strain. That's the one from 2014. That infected 28,000 people back then.
Jesus. What's with the constant pandemic worries? Since I guess we've always
had. I think there's more focus on it now. Coming out of COVID, everyone's worried this is going to be the next COVID. But we've always.
I guess it can happen.
We've always had these epidemics, unfortunately.
Dr. Gottlieb, thank you. You're our own AI chatbot when it comes to all things health. We appreciate it.
But you're not evil.
No.
As far as we know.
So I won't be denounced by the Pope.
Yeah, exactly. We won't have
Our resident Doogie Howser. Let's take a quick look at futures right now. Dow up nearly 300 points. NASDAQ up 330 points. You got the S&P 500 up as well, about 52, 53 points. Want to get down to our friend Mike Santoli at the New York Stock Exchange. Looking at the markets, equities, they're cruising here, Mike.
Sort of upside inertia. The pre-market gains are a little bit moderated from the peaks we saw kind of overnight and yesterday, but still would basically put the S&P 500 at a new record. We're just about less than 1% from the intraday highs that we hit a couple of weeks ago. So here you see a 1 year. We blasted off from those March 30th lows. That was very much tech-driven, clearly with oil prices not making new highs and all the rest set the scene for it. But we did take a little bit of a 2-week break here, a little bit of a reset. We're only up 1% over the last 2 weeks, even though we have 8 straight winning weeks for the S&P 500. Now, we do again have yields down and oil off a little bit as we get some incremental reports of potentially a reopening of the Strait of Hormuz. Take a look at how the market has kind of isolated the impact of what's going on in Iran here, with the equal-weighted S&P 500 kind of going sideways, and then the equal-weighted consumer cyclicals, that's the lower line right here. That's where the impact has been felt most. And then the NASDAQ 100, that's the mega cap tech, that's the semi-trade, has just absolutely carried the market since then. So there's one case to be made that if we do get a true reopening, what we're really going to see is more of a rotation, an unwind of that hyper-tech trade, and then maybe a little bit of relief in some of the more cyclical areas of this market. Who knows what impact that'll have on the S&P 500? That was the backdrop we had from October to February, when the overall S&P kind of did nothing, but underneath the surface, most stocks went up. Here's the VIX volatility index. It closed under 17. It shows you it's in the normal range. This is not a market that is highly stressed and in need of relief from what goes on in the Strait. It's more like a deal is a nice to have, not a must have, as far as the stock market's concerned, guys.
Mike, thank you. We got a lot more going on this morning, including we've got a new Fed chair.
Yes, we do. In Washington, Kevin Warsh beginning his tenure as Fed chair. In a Wall Street Journal op-ed, Judy Shelton says Warsh can tackle inflation without raising rates. Judy is a senior fellow at the Independent Institute. Good to see you, Judy, this morning. And if we knew this, if someone would have told us that you didn't have to slow the economy every time you had an inflation problem, history could be much different if it's really a viable way of doing things. And I guess that you'd argue that it is, but it goes against everything the Federal Reserve has been doing in recent years, their whole stance towards things. How would it work?
Well, I think we need to abandon this very old Keynesian idea that economic growth is inflationary and that having low unemployment is inflationary. When you have strong economic growth and it's productive activity that increases economic output, you're increasing supply. So even if consumer demand goes up, you're battling inflation by meeting that demand with the increased output. And the Fed sees it the opposite way. The Fed says all we can do is crush demand with restrictive interest rates. By restrictive, they mean that they're higher than they would be if they were set by the free market mechanism of demand and supply for loanable capital. And I think it's important to start transforming away from this government knows best approach and let free enterprise flourish based on free market mechanisms.
It just seems like you can make the case that a really tight labor market allows for individuals to ask for more money, and then you get higher wages, and then because you get higher wages, prices go up, and then you need higher wages to deal, the classic wage price spiral. I mean, you really don't think that very low unemployment can cause inflation?
Well, I think that as the wage gains go up, you attract more people into employment. We have a lot of people who are not participating who could. And I think that has to do with our welfare programs. I think people, very savvy people, find that it's easier to just play these bailouts from government instead of getting an honest job. And it would be really good, and it would not be so demoralizing for people who do work if other people saw that they had a chance to be productive and earn money by actually producing real goods and services for which there is real demand.
There was an interesting piece this morning. I don't know if you saw, you wrote something for the Journal as well, but the Journal in the op-ed page is talking about already he's getting some pushback, Kevin Warsh, from someone who seemed to be like-minded. Waller has shifted now and says there's no way he would cut. He thinks we probably need to raise. And Barr, Michael Barr as well. So already, I don't know whether the knives are out at this point, but how hard is it going to be for the new chairman to get everyone on the same page?
Well, I think that Waller has kind of shown his true colors. The Journal, he was all ready to lower interest rates, but he based that on a labor market that was falling apart. Well, now that labor looks pretty stable, he's saying, well, maybe we have to raise. So he's embracing that Keynesian trade-off. Michael Barr is more predictable in opposing the incoming chairman, but I think the worst case is that Jerome Powell is sticking around. I think that shows great disrespect, not just for the incoming chairman, Kevin Warsh, but for the institution itself. He's compromising its leadership. How would he have felt if Janet Yellen had remained on the board after he took over as chairman? So that's the kind of pushback that Warsh is unfairly facing The good news is I think he can stand up to it in a persuasive way and make the case that more of a supply side appreciation for how lower taxes, less regulation can help improve economic growth. The way you can be part of that and align monetary policy with that is to facilitate access to capital. And that goes back into this idea that what you want is greater output. And in the process, you're giving more opportunity. We have this innovative economy. You're going to raise prosperity because you give people a chance to get their hands on capital and pursue entrepreneurial ideas.
So Judy, your idea or your thesis doesn't even require the productivity gains from AI, but that probably will increase productivity. But you're saying just less regulation, lower taxes, all the supply side issues. That in and of itself would be enough to change the whole rationale that the Fed has for raising rates. That you can. So that would that be additive AI if it really is productivity enhancing and give you even more of a reason or an ability for Wars to lower rates eventually?
Oh, I think absolutely. The increase in productivity is key to increased output with your existing resources. So you want to tap that, but we wouldn't even have that opportunity if we weren't already unleashing through the tax treatment of capital expenditures to develop the innovative technology that allows us to be more productive, that increases growth. That's how you raise living standards for everybody. So it's really about transforming the economy from just one that services the financialization of the economy, where people just game the anomalies in our financial and monetary system, to one that really supports the people doing honest work and producing real goods and services. And I think that's from the Wall Street to Main Street approach. And that's what we want to do. That's productive output, and that helps everybody.
We won't have to wait long. We'll see. We'll start hearing things, on June 16th, I think. Don't we? These guys meet all the time.
That'll be the next FOMC meeting and the press conference afterwards.
We have a lot of meetings. We're gonna hear a lot. It should be really interesting all of a sudden, instead of not quite as interesting as prior to. Anyway.
Right.
Judy, thank you.
Thanks.
When we come back, Problem Solvers co-chairs Congressman Brian Fitzpatrick and Tom Suozzi on their bill to stop the DOJ's anti-weaponization fund. And later, Warby Parker unveiling an intelligent eyewear frame design in a partnership with Google and Samsung. We'll speak to the company's co-founders. Squawk Box will be right back. The Problem Solvers Caucus co-chairs, Republican Brian Fitzpatrick of Pennsylvania and Democrat Tom Suozzi of New York, are teaming up to try and shut down the controversial anti-weaponization fund at the Justice Department. Their new bipartisan bill would block the nearly $1.8 billion in taxpayer funds, which critics say could function as a slush fund for President Trump's political allies. Joining us right now to talk about that and much more is Congressman Brian Fitzpatrick. He is a Republican from Pennsylvania, and Congressman Tom Suozzi, who is a Democrat from New York. And Congressman Fitzpatrick, why don't we start with you? This is your party that you're kind of moving against on this. What do you think? What's your reasoning for this? What do you not like about this fund?
Yeah, good morning. Thanks for having us. You know, it's a simple matter of checks and balances and priorities. Congress needs to authorize these programs and fund these programs, whether it be the ballroom, whether it be this fund that apparently was created under a 1956 statute that nobody really knew about, but we certainly know about it now. We're going to fix it. And also priorities. You know, you got half of this country living paycheck to paycheck. Many people in my community that are stressing over the kitchen table this morning, figuring out how to make their weekly budget work. We shouldn't be talking about ballrooms. We shouldn't be talking about DOJ slush funds. That's not what our country wants us to be talking about. Certainly not what my constituents want us to talk about. So, you know, we have a very independent-minded district in Bucks and Montgomery counties in Pennsylvania. They want independent representation, and I'm going to reflect their voice on the floor of the House.
Congressman Suozzi, what kind of support do you get in terms of the bipartisan nature of this?
Well, it's important that we get Democrats and Republicans, and Brian's not the only Republican. There were a lot of senators the other day that came out and said how bad an idea this was. Mitch McConnell came out and said, this is either incredibly stupid or just plain morally wrong, take your pick. And Tom Tillis said this is stupid on stilts. And, you know, this is the purpose of the checks and balances in government. Sometimes the legislative branch will make mistakes. Sometimes the executive branch will make mistakes. Sometimes the judiciary will make mistakes. But the purpose of our system of checks and balances is to hold each other accountable. And the president can't just go spending $1.8 billion on a fund that will reward people that say that they've been aggrieved by the government, including people that came to the Capitol on January 6th. I mean, I always talk about the case of this guy, Daniel Rodriguez. They were beating up a police officer, and he was lying on the floor. People were yelling, kill him, kill him, kill him. And Daniel Rodriguez comes up and sticks a taser in the police officer's neck. Police officer has a heart attack and now has traumatic brain injury. He pled guilty, got 12-year sentence. Did social media say, originally saying, I got away with this. I just tased the you-know-what out of the blue. This guy can now apply to the federal government to get paid for being aggrieved by the government? That doesn't make any sense.
But Congressman, what kind of support do you get within the House? You mentioned several Republicans in the Senate who have spoken out. What are your numbers, just in terms of what you two have put together? How many congressional leaders or how many congressional voters in the House have come forward and said they want to support this?
Many Democrats and a few Republicans have spoken to me and said that they support this idea. The question is whether they'll step up and actually sign on the dotted line and say that they want to do this going forward. But I've heard from several people that they think this is the right thing to do and what the president did was wrong here.
Yeah, Congressman Fitzpatrick, you've spoken to several of your colleagues on the Republican side too?
Yes, ma'am, I have. And, I've gotten several people that told me they support it. Whether they put pen to paper, that's another story, as you know. We're happy to take the lead here and take the slings and arrows because it's the right thing to do.
You know, I don't think we talk often enough about the bipartisan bills that do make their way through Congress. And last week you all had something that you pushed forward. It was the 21st Century Road to Housing Act. It had overwhelming bipartisan support. There were 396 to 13 who voted in favor of advancing this. What does that bill do, and what does it mean in terms of what you can get accomplished in a bipartisan nature on the Hill?
Is that for me or for Tom?
Actually, both of you, but Congressman Fitzpatrick, why don't you go first?
Yeah. It's number one, it's a two-party bill. So, kudos to the Financial Services Committee for putting a two-party bill together. We need much more of that. We don't get enough of it. And it basically tackles regulation. It tackles, the cost of goods and services and materials. So basically the affordability issue really needs to be siloed out. You can't talk about affordability just at a 30,000-foot level. You got to drill down. What's causing childcare costs to go up? What's causing food costs to go up? This drills down on the housing situation. with regard to imports, with regard to materials, with regard to labor, with regard to regulation. And it starts to thread the needle to figure out what's a bipartisan way that we can start to relieve the cost pressure and the pricing pressure on houses, increase availability of housing, which is very, very important, including to veterans and people on the lower end of the income continuum.
Yeah, Becky, you make a great point here, because the number one issue in the country right now is affordability. Housing affordability is at the very top of that list. And we got bipartisan support in the Senate, bipartisan support in the House, and very few people have actually reported on that, because the division in our country is what's leading the conversation. The American people want us to focus on, what are you going to do to make my life better? Well, I go to the gas station and I can't afford my gas. I go to the grocery store, I can't afford my groceries. Or at least I see the prices going up every day. Health insurance costs, utility bills, everything's going up. And our kids can't afford to buy a house because it's just too expensive. And so we believe, Brian and I, that there's so much more that we agree upon than what we disagree upon. And we need to break out of this shirts versus skins, attack all the time, and start working together to try and solve the problems that face the American people. And this housing bill is a good example of that. You had, people from Maxine Waters to French Hill on financial services working together here. That's a pretty diverse group of people working together to try and accomplish something, and you received overwhelming bipartisan support.
Yeah, I'd like to see it, but Tom, you also had Nicole Malliotakis, who's a Republican from New York, who was the vice chair of the Problem Solvers Caucus, who just left the caucus last week and said it's a one-way street. Time and time again, she said Republicans in this caucus cross party lines to advance key pieces of legislation, whether it be with their voices or signatures, yet the Democrats do not. What do you say to that?
I say that, I like Nicole Malliotakis. She's another fellow New Yorker from Staten Island, and she's very, very passionate about this Women's Museum bill. And the bipartisan Problem Solvers Caucus actually endorsed the Women's Museum and the bill to move forward with it until there was an amendment made in the Rules Committee that made it very limiting to some of the people in the Democratic caucus that they couldn't support it. Listen, I voted for a lot of things that went against my party even to support Republican efforts, even including when it came to reopening the government. But we've got to take it on a case-by-case basis, and we hope that Nicole will continue to try and work across party lines.
What was the rule change that made it unpalatable to members in the Democratic caucus?
There was really an effort to try and call out people that are LGBT and transgender people to not be included in the museum at all.
Congressman Fitzpatrick, it's probably tougher to be vocal right now as a Republican voting against something that the president has endorsed, particularly with some of the election results that we saw just last week. Have you felt a lot of pressure for coming out and supporting this legislation on the anti-weaponization fund?
Well, there's always pressure in the job, but it's not going to deter me from doing my job, which is just to represent the people that I represent in Bucks and Montgomery County, Pennsylvania. They're my bosses. I don't report to any person or any party in Washington, D.C. And by the way, that's a perspective that every member of Congress should be taking. Our bosses are the people that sent us here in the corner of America that we represent. And it's our job to reflect their interests, not the interests of any person or any president or any party leader. That's not what the job is. So is it hard to represent your constituents? No. It actually makes the job much simpler, because with every piece of legislation, with every policy, if you have a simple litmus test, is it a net positive or net negative for the people I represent? It makes the job easier, actually, not harder. So, there's a lot of outside pressure with every vote. A lot of people, a lot of stakeholders with divergent views. You just got to do your best to reflect the voice of the people that sent you here. As long as you take that pure perspective and you trust the people to vote and to express their voice, then it's all good.
Congressman Fitzpatrick, Congressman Suozzi, thank you both.
You bet. Thank you.
Okay, coming up next, what do these things have in common? Star Wars, The Phantom Menace, Slim Shady, and Pete Sampras. We're going to tell you right after the break. And later, the co-founders and co-CEOs of Warby Parker on the release of their intelligent glasses. You got to check these out. We're coming right back.
we went to break, we showed you this. What do these have in common? Star Wars Phantom Menace, Slim Shady, and Pete Sampras, and the answer was 1999. Star Wars Phantom Menace was released along with Eminem's hit album Slim Shady, and Pete Sampras won his third consecutive Wimbledon title. It was also the last time that the New York Knicks appeared in the NBA championship. Now they're back after sweeping the Cavs and the 76ers to win the East and advance to the finals, and they're going to face either Oklahoma City or San Antonio, and nobody knows at this point. That series
Spurs look really good.
Yeah, they have.
Surprisingly,
Oklahoma City
was saying that everybody thinking
Gilgis dude who's Alexander. So
look at that.
And of course Wemby. It's kind of compelling. The stars keep coming when the NBA needs them. New York has won 11 straight playoff games, and why do I have a blank on 1999? I didn't know it was that recent. What happened? You were.
It was a lockout, right?
But what happened to the last time the Knicks went, Sorkin, and who were the
NBA lockout year, I think.
Yeah. I mean,
what happened, and who did they lose to?
In 1999?
How come you don't remember?
I don't remember this. I mean, because it was such a
hammer.
Get it out of your brain.
I'm not from New York, so I'm a Cincinnati Royals fan. Big O and Jerry Lucas. You remember them? No, probably not. So you're looking it up? What happened?
I don't. It's funny. I don't.
Was that Walt?
It was a 204-day lockout that shortened the 50 games.
Who were the stars? Was it Walt Frazier?
Yeah, but it was such a non-event.
Retirement of Michael Jordan that year.
Yeah.
Spurs.
I was kidding about Walt Frazier. He was before Bill Russell.
In 1999?
I'm kidding.
No. Anyway, when we come back,
Bill Bradley.
More coming up. Bill
Bradley.
We've got Warby Parker's new intelligent eyewear, letting people see the world in a whole new light. The co-founders joining us right after this. Welcome back to Squawk Box. Warby Parker has unveiled its intelligent eyewear frame. It's developed with Google and Samsung, and joining us right now with more. They're not wearing them, just so you know, folks. Neil Blumenthal is here, Dave Hagaboa is here, and they're the co-founders and co-CEOs of Warby Parker. Good morning to both of you. You're wearing some Warbies, but not the intelligent version. So I think we all know about what Meta's done with their glasses. What do your glasses do? How are they different? And when are we all going to see all this stuff?
So we're launching this fall.
Right.
These are what we believe are really the first truly intelligent eyewear. And we've been sort of looking forward to this moment from years past. Like, do you remember entering sort of you're typing into a prompt into a browser and doing any sort of search that we all do every single day? Well, now you can do it just through your glasses. You don't have to take out a computer or a phone, look at anything, ask any question. We just had a team member who was able to capture his son's first steps using the glasses. I was using it this weekend to figure out whether I should water a plant or should move it to put it in a place with more sun. So it's pretty powerful stuff.
And in terms of, so you guys are doing this now with Google and Samsung. Obviously, Meta's doing that with Ray-Ban and Oakley and the others. And then you'll have what we think is Apple trying to do something. Do you think they're going to partner with somebody? And so what does this whole marketplace look like to you in the end?
Yeah, we expect intelligent eyewear to be the next major computing platform. And the moment that you put on our product, it becomes clear that this is a fundamentally more natural and human way to interact with the world than kind of staring down at a screen in your hand. And these devices allow you to do the mundane, check your calendar, get directions while you're engaging with the people around you, or give you the superpowers, like be able to understand any language. This weekend I used them to install a car seat where the glasses identified the make and model of the car seat. I didn't have the manual with me. It was observing how I was installing it.
This was putting stuff into the glass itself?
Yeah, so there's...
In terms of images into the glass?
So our first product will be audio only. So they'll have cameras that use as visual input, speakers and microphones, and so you can speak to the glasses and they'll speak to you.
How light are they ultimately going to be? The ones that are ultimately going to put images into the glasses for us, so that we're like living in this sort of different reality.
Yeah. For us, we come in from eyewear designers, and it's really important that they fit great, that they're comfortable, that they're lightweight, that they're designed for all day, everyday wear. So they'll weigh the same as a normal pair of glasses.
And what about, so one of the things that's interesting about what Meta's doing is they actually have a wristband that you have to wear to be able to do certain things with your hands. Similar with you?
So our glasses will be a standalone product that you can interact with by speaking to them. They'll have some tactile functionality.
No, but in terms of long-term being able to put stuff into the glass, there's a big question about like what you can do with your hands to change the interface, right?
Yeah, over the long term, we don't think that you necessarily need sort of other
the extra
devices.
stuff.
Exactly.
That's the real question. How much do you think it's going to cost? What's the price point going to be?
So we'll share more specifics as we get closer to launch this fall. But like every product by Warby Parker, we expect that they'll deliver tremendous value and be very competitively priced.
What do you think? So your main competitor, I assume, right now would be Meta. Would be an agreement that that's the one that's the most similar? What is this going to do that's different than that, for example?
Yeah. So this has the power of Google, the power of Gemini behind it. So, again, you can ask it any question. We were walking in the office and we randomly saw some balloon animals. And some of our team had used the glasses to teach themselves how to do balloon animals. I had a meeting, and in between meetings, Dave and I are constantly sort of staring at our phones, trying to quickly read an email or respond to a text. And this way we were able to have our heads up and sort of ask, as we were going from conference room to conference room, how long is it going to take us to get to this meeting in Midtown, for example? And these productivity gains, this a way to sort of pique your curiosity. There's nothing like it on the market right now.
Culturally, how long do you think it's taken? What will it take? And will we get there? where people genuinely feel comfortable with your main pair of glasses that you're wearing every day, having a camera on it, having a microphone on it. You're going to walk into the bathroom, maybe with other people. Like, when do you think people in society go, this is cool, we're totally okay with this? Or do you think that in the same way that we're having commencement addresses about AI and people are booing, that that's going to happen on the other end?
So we designed these products with privacy first in mind, and we feel really, really grateful to be aligned with our partners at Google and Samsung. And so the cameras will be off by default. If they're ever recording, it'll be incredibly visible with LEDs that can't be turned off. And we recognize that any technology creates change in behavior, and there's anxiety around how AI is going to transform how we all live.
Do you see them as persistently listening, though, at becoming devices that persistently listen? The reason I ask is, OpenAI and Johnny Ive, they're talking about trying to create a device that's persistently listening and potentially even watching everything you're doing, so that ultimately the AI can be so smart about everything that's happening in your life. But there's lots of questions about how that's going to work.
Right. Our phones are already listening to us, so we've already sort of given that up. Now, for us, you're going to need a prompt. Right. I think we probably have to have honest discussions on what we've already sort of decided.
Sometimes, at least I'll be honest with you, sometimes I'll see somebody who's wearing a pair of the Meta glasses, and they'll come to a meeting, I've seen it, and I get a little just more reticent, hesitant, I don't know what the word is, but I'm just aware that that guy's got a camera on him.
Like when the camera's on here, the way you are.
I'm not that reticent when this camera's on. But no, in terms of how you think it's going to change the way we talk to each other, do you think it's going to shift things?
These are general rules, right? I remember my parents are always saying, hey, don't do anything that you wouldn't want on the front page of the New York Times, right? And
page 6.
Or page 6, exactly like that.
Or your grandma.
Right, but here's the distinction. The distinction is, so I tell my kids, don't type anything. I mean, if you're on Snap or this, don't, because it could last forever.
Right.
And I say, if you have to have a complicated or private conversation, you should get on the telephone and call the other person and tell them whatever the thing is. But that changes the whole dynamic if everyone's listening all the time, because then the phone call doesn't matter, right? And I just wonder what that does to us.
I think it's one of the primary reasons that we're so excited to partner with Google. And if you think about Google's business model, it's designed to help people find information and then move them kind of off of Google properties. That's how their search business works. Others in the market are really designed to try to keep you in their ecosystem, try to incentivize you to capture content. For us, it's about making the world more useful and giving the wearer the information they need and having kind of the sensors off.
So now people have oftentimes a pair of reading glasses, they might have a pair of long distance, they might have sunglasses that are long distance, all of the above, right? I think that people who need glasses oftentimes are having a lot of, do you expect everybody to have one pair of these glasses that is, what's the phrase?
Like a transition.
A transition glasses, that everyone's just wearing one pair because they're so expensive. How do you think that works out in the end?
These are still a fashion accessory, and we think that people will have multiple pairs. This industry is going to go through a transformation like many industries, and we're going to drive that transformation just as we have for the last 16 years. It might take 10 years, it might take longer as sort of this original wearable becomes now a digital wearable. That will take time, but we'll make sure that we're making it affordable so people can have a wardrobe of glasses.
And last question, what do you think this does to contact lenses? Because you guys actually got into the contact lens business, and I think you're doing quite well in it. But I wonder if in the future we're all just wearing glasses because we need all this other tech, what that does to that part of the business.
Or you can you do it on a contact lens?
Well, that would be
one day, yeah.
We think smart contact lenses are many years away. In the meantime, You know, we think people will want choice like they have today. Some people will want to wear you know, these glasses and put their prescription in them. Other
So you're
people
not shorting the
might-
contact lens business long term if this becomes successful.
Right.
That's what I was thinking. I was thinking if everyone's going to wear these things, who needs the contact lens?
Yeah, we think, you know, the prevalence of you know, vision correction is increasing by the year, and that's going to continue. And there's going to be, you know, lots of opportunity for both the contacts and
I'm
glasses
waiting
category.
for when the lenses can transform themselves so that the prescription's constantly changing to actually match your eye, similar to what I think the Apple headset folks,
Vision Pro.
the Vision Pro guys eventually wanted to get to a point where the video on the other end was transformed to your eyes so you wouldn't even need lenses, if you remember, and whether you'll ever be able to pull that off in these kind of glasses.
Right, one day, and you can also imagine sort of supervision as well, and that's how we think about these products. How do we give ourselves, you know, superpowers?
Right, I love it. Neil and Dave, thank you guys. I can't wait. I can't wait to be wearing these things.
Everyone has superpowers. No one's super.
That's true.
You know,
Humanity is super.
Yes, it is. That's what Syndrome said. It is Jason. Great voice.
Up next, Jason Trennert says it's hard to get bearish right now, and definitely today. There's the futures. Dr. Howard, we'll be right back. Energy giant BP has removed Albert Manifold as chair and director effective immediately. The company said it follows some serious concerns raised to the board related to important governance standards, oversight, and conduct. BP has appointed Ian Tyler
as interim chair, having deja vu. Remember that nut job they had?
VP guy.
John Brown, was that his name?
What was his name? Thank you. I was just trying to remember.
We don't need to go back into that. He had all kinds of crazy stuff going on. VP, let's get it together. Come on, join us now to talk markets. Jason Trenner, chairman of Strategic Research Partners of Baird Company. And I honestly thought you might sit down and start going, your mother, your sister, because you have no idea what you're thinking here.
I really.
You are so positive about so many things that you're seeing, immediately saying, but then again.
Yeah, no, it's very true, and the big question to me is inflation and whether the Fed might have to tighten it.
Because sorry to interrupt.
No.
Because you're so bullish about everything that's happening, it's impossible for you to be bearish. But then you come up with, but I just can't help but worry that valuations aren't great.
Precisely right, and you don't want to get there. In client conversations, I were constantly asked about 99, right? And so it's hard not to be focused on that. There are a lot of differences. We just looked over the weekend. The market's been up 8 weeks in a row, S&P 500. And we said, well, did that happen in 1999? The thing is, it didn't. But it did happen in 1982, happened in 1981. It happened in 2003 and 2009, meaning when it did happen, actually, it was the signal for much more to go. It was a signal that you were ending either a recession or you were in a second leg of a bull market. And so that gives you hope. Earnings are fantastic, but there is this kind of growing problem.
You would not be putting fresh money to work here.
I really would.
After at the very beginning, you're impossible to be bearish, but you wouldn't be so you feel you've got guilt about feelings.
Because also, Joe, if you have an asset allocation that's here and the market keeps moving, your allocation to equities is significantly higher than it was 3 months ago, right? So, and you're just trying to play the odds, and you're saying, do I want my asset allocation in equities to be more than 75 or 80%?
A nervous bull?
I'm a nervous bull.
You're a nervous bull.
Nervous bull.
You're not an early bear.
No, I don't. Listen, when we did look at when the market really got tagged, in the big bull runs where the market got tagged, the Fed or the central bank, so whether it was U.S. in 87, U.S. in 99, Bank of Japan in 89, the central bank was tightening.
That could happen.
It could happen, but I still think, my own opinion with Kevin Marsh there, it's unlikely before the midterms in my.
You saw that journal piece, Waller, but suddenly some of the doves, they didn't get the job, maybe. Now they're getting hawkish.
Hawkish. It's all the W's, they say, right? Waller, Warsh. So I don't know. I think you have to be mindful, if you're on the central bank, of what's happening with inflation and the fact that the war is probably going to bake in some inflation for the next 3 to 6 months, something along those lines. So it's going to be hard to
even into headline, not just, or even into core, not just.
Oh yeah, no, and frankly, I'm a big believer from a political standpoint. We have something called the common man CPI. I don't like core because it gets rid of the affordability issue when you talk about core, which for most people,
it's still around,
even though staying warm is pretty core. So I don't like getting rid of it from that perspective.
Can I ask a question? Between Warsh and Waller and the others who were calling for lower interest rates, do you believe that they were calling for lower interest rates in the past, while Jay Powell was not, because they were simply trying to get the job and then are now changing their mind, or that they were wrong? You're either wrong early, right? Because that would have been also the wrong choice to have done that, given where things ultimately went. Or you think it's political, or you think what? What do you think is going on here?
The other thing, I can only speak for Kevin Warsh a little bit. He's a friend of mine. He is a dyed-in-the-wool supply sider, meaning he believes good CapEx leads to productivity, which leads to lower inflation.
Right.
And he believes that, and I believe that as well. So there's no necessarily tension between strong growth and higher inflation. There's no those things don't necessarily have to go together. He believes, as I believe as well. So I don't think he was just doing it to get the job. I think he's a true believer on the fact that.
But if he's a true believer, that in a weird way, that's worse, because that would have been the wrong decision at the time.
Well, Yeah, I'd have to think
Do you
about
see-
that.
do you
So
see what I'm saying?
I say in 2002, right now, I'm not so sure that that's the wrong decision because AI is so transformative. At the
You
time,
think that you think lowering interest rates in the fall compared to where we are now would have been the right decision if you had lowered interest rates 3 months ago?
Now, the only thing that changed that, which was of course
I appreciate
unknowable,
that.
is
I
the
appreciate
war,
that.
right? So that has to change. I think it might have been the right decision without the war, but when that decision was made. But
we got to go. We got
yeah.
15 hard, and we like to follow the rules.
Oh, it's no problem.
Okay.
I get it.
Thank you.
Joe, you seem like a rule follower.
Yeah, rule follower. Thank you. Do it.
That does it for us today. Make sure you join us tomorrow. Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Colonel Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Stocks look for some all-time highs at the open as investors watch signs of progress in talks with Iran, along with some fresh U.S. strikes on southern Iran on Monday. Long bonds right at 5%. Oil's holding 92. Brent did flirt with 100 this morning. We got our eye on that. Our roadmap begins with renewed investor optimism that a deal might be close. Also keeping an eye on oil after Iran vows to retaliate for those U.S. strikes.
Plus, we're keeping an eye on semiconductor chip stocks, the AI trade, of course, as well. For example, shares of Micron are rallying as one firm more than triples its price target on the stock. Even as companies such as Uber say it's getting a bit hard for them to justify the high costs that come along with deploying AI. Eli Lilly shares, they're edging a bit higher. The company planning nearly $4 billion worth of deals for vaccine makers.
Let's begin with the markets, though. S&P aims for a 9th straight week of gains. Dow's trying to extend its record run. David did mention that Micron target over at UBS, Jim, as they go to 1625. They were at 535 prior.
All right, well, what's happening is that people are realizing
okay, maybe they had too low a multiple on memory. That memory's in short supply. So now people are just in a race to be able to raise, whether it be Seagate, whether it be Western Digital, Micron. And I'm not going to disagree with it. I just think that it doesn't happen in a straight line. More of a straight line has been what Ben Rice just talks about. Mellius Dell was a straight line. They report this week. And
Friday's action was crazy.
Yeah, and I think that Intel, bit of a straight line. David, we know we've never seen anything like this before.
Well, let's stop for a second. What is the thing that we have never seen anything like?
Okay. All right, that's a great question. So here's the way I look at it. Micron, we know Micron as a old-fashioned company, right, that is in a very cyclical business.
Correct.
You agree? And it's
Yes.
been up and down,
Up and down, up and
Right,
down.
so-
That prices go up, everybody adds capacity, prices come back down.
Well, we haven't had anything like the capacity added that we thought we would. We haven't had any of the demand like we thought was far better. But one of the more important things is when you're running money and you look at a stock that's up 163%, you say to yourself, I guess I missed that one. But when you see a price target that's like
double
that,
what the
160,
current stock
have
price
you
is.
missed it?
Right.
So you tend not to look at how much the stock is up, and instead you think about the opportunity. And I think a lot of us would say, are you kidding? Let's just stop this. All right, let's just stop this. But there is no stopping of it, David. You can't stop it. You can't say, wait a second, time out. This shouldn't be. David, this is faux.
Yes, that's the Knicks, actually, yes. Well, we got one more 4 to go.
Well, I'm saying that it's faux.
It's looking good, is what you mean. And any worries about the multiple or anything else is, you sort of take a look.
I just told you that.
Oh, there's the game, by the way. Yeah, I can watch that all day long. Knick fans across the country, but right here, of course.
I went there. I gave
73 was the last time we won a championship. Have another chance. Yes.
I know they wouldn't do that in the show before. They're much
No,
more
they
serious
wouldn't.
about
They
this.
wouldn't. We can get to it right away.
But there's long-term memory supply,
There's OG to
AI-driven structural change.
Brunson to OG. Beautiful.
Stop.
Okay. All right. Coming back to Micron, as we
How much
I
is
could
the
watch it all
ticket
night.
price going up for the
Well, you saw, I think it was Darren Ravel tweeted over the weekend, roughly 280,000 for 2 courtside seats for the championship.
Why can't we accept the percentage for Micron? What has happened with Micron? It is every bit in the playoffs as the Knicks. But we accept the fact that the tickets have gone up for the Knicks. But what? We're supposed to say to 1625?
Well, the point is it was 61 last spring.
Well, I think that we're looking at it and saying, you know what? There is a shortage. It's a shortage that we've never seen before. It's a shortage that when we're listening to the NVIDIA call, it's for the earnings call, we realize there's an amazing shortage. You can't make the equipment. If you go listen to the Lam Research and the Applied Material call, they're doing everything they can flat out to build more equipment, and they can't meet the demand. No one can meet the demand.
So it's a commodity crunch.
Right. And remember, commodity.
Like all commodity cycles, it's another crunch.
Exactly, and this is the year of incredible thinking. And we've got a commodity crunch in Seagate, and we've got it in Western Digital and Micron and a lot of others that we can follow. And there's the equipment; those are intellectual property plays, and they're just up. So, Carl, I don't know what stops it, but that's not the question. It's I think there's money to be made still. That's the question.
Right. And these budding conversations from Uber or Microsoft that token cost is beginning to become non-economic, blowing through your AI budget in 4 months.
Those are underperforming stocks that just shut, that have very little relevance. Right?
Oh, that's unfair.
Oh,
That's
okay.
unfair.
Oh, well, okay. I taught my gardener.
Very little
My
relevance.
gardener, member of the club this weekend. Member of the club. Comes up, thanks me. No doubt in that exclusive category that we begins with Lena. And he says, how did Salesforce and Microsoft become irrelevant? How'd that happen?
That's what your
Your
gardener said.
My gardener's a genius, first of all.
No,
I don't know if you see my garden.
Is
I
he-
mean, no deer are going to get in there because I got Claymore mines and I've got machine guns. It's just quad 50s.
Chauncey Gardner is going to be growth in the spring?
But
Yeah.
he's right.
Yeah.
Look at the irrelevance of that top one. Look at the irrelevance. Oh my God! It's for no Trump. Doesn't even have an additional court.
It's hard to be irrelevant when you still have a almost $3.1 trillion market value, don't you think?
I got to tell you, that may not last.
It may not.
You know
But
what he asked me?
Carl's point is actually that the price of compute is still, so much compute is being used as a result of the agents that are now being deployed, that companies at the very least are saying, okay, is it worth it? Am I getting the kind of return I want for what I'm spending? Because it's not just your Anthropic subscription.
Why not?
It's the additional compute you're
so
using,
Anthropic was
and
worth-
every employee is using when they have 5 agents.
Anthropic was worth $300 billion in February. Now it's worth $900 billion. It might be profitable. Why is it worth the trade?
No, I think Anthropic, without a doubt, many people who own it would tell you it's worth even more than that.
Yes,
it could
I
end
would.
up being, one of the most,
Anthropic, they're raising space.
one of, if not the most highly valued companies the world has ever seen. That said, interestingly, on Anthropic this morning, the conversation I was having was actually about the historic sales acceleration slowing. So remember, this is a company that came into the year at a $9 billion average annual revenue rate, then immediately went to 30, then to 40. In mid-April, it was 44. Now they're talking 50 billion by the end of June. So adding 6 billion in incremental revenue over a month and a half is less than they added previously. That's the conversation.
Low end ball.
Wow, come on. Second derivatives have been around forever. We always watch those.
Look, I see no end, and I see.
Well, there may be no end, but there also may be those who say, all right, at least things are going to slow. I don't know what the end of the year ARR is going to look like.
Okay, but let me tell you something. When you can read that prospectus, they ain't going to talk about Mars.
No, it's not going to talk about Mars. It's not going to talk about Mars. It is going to talk about all the things we talk about every day and the opportunity there and the continued diffusion of this incredible technology into the enterprise and how early it is, and growth of inference and agentics and everything else that is going to.
With tokens, and there are issues with the fact that NVIDIA, without a Luca Maestri capitalization plan, the way they gave Apple, that stock may not go up. That was a brutal throwback. That was just a tossback.
What are you talking about? Sorry.
When NVIDIA reported, the stock went down?
Yeah.
I don't know if you caught that.
No, I'm aware. Our viewers are well aware, too, of your emotional response to that.
Since you brought up Apple, though, B of A going to 380, Jim.
I love
talking
that.
about Siri as an AI agent, assistant, manager, privacy, wallet,
I think
custodian.
Siri and Righteous, to give him his due over at Amelia's, it's happening. You're going to see WWDC. It's going to be incredible. I have been fooling around. I don't know if you guys have been fooling around with Siri. Siri's gotten really intelligent, man. I'm not kidding. I mean, it's like, I know it's like 6th grade, but this thing is headed to high school. And by the time we get to WWDC, I'm talking a freshman.
That's like in a week or two.
Yes.
I guess there is this way, as you see the B of A, and you pointed out that right, it's also this idea that basically it's going to enable your apps to do so much more for you, and you're going to be able to communicate with them in a new way, and it's going to also empower the actual companies behind the apps. So, your Uber now, you can talk to it or talk to your...
All without having to invest $1 trillion in
CapEx. Be ahead in AI because they let the other guys handle it. Now, which one of these did you use to
summarize?
To make it concise. Did you use ChatGPT?
No, we usually on these...
Did you use a...
No, on Team Faber, which basically means Casey O'Brien, we use Claude. We mostly use Claude.
Which one did you use?
We use mostly Claude for this. Yes.
I was using a lot of Claude, man.
I use Chat for my own life, even though Chat will not actually say my name. Still has that issue. Don't know why, mystery, David Faber, don't know why, won't acknowledge me. That said, I still use it for my personal stuff. Its memory is incredible.
I use Claude for my wife.
But we use Claude in the, we use Claude here at CNBC, even though CNBC doesn't pay for it. Yeah, we're have to pay for it ourselves.
Okay.
Good morning, retail traders. Morning, retail traders. Hope everybody had an enjoyable, relaxed weekend. Mine was more relaxed than anything. I didn't do, just kind of tidied up the house, cooked coffee, did my paperwork. Bought some shirts. I did notice one thing. I went to the mall and I dressed up kind of nice. And I had 3 compliments on how I looked by total strangers. Girls staring at me. I'm going, what the heck? And I just kept carrying a smile, and I had a sports coat on, dressed in white, with a fanny pack and my jewelry on, and it just tells you how much appearance means to people, how you carry yourself. Big old smile down your face, and it was weird. I'm not used to, I used to be used to it, but I'm not like when I was younger. I mean, but it just kind of brought back memories, and just people say hi, and girls looking up at you, you know, minding their own business, and all of a sudden they're staring at you with a smile. I should have walked out of there with a date, but I just kind of was going, what the heck's going on here? Man, you look, the guy with his chick says, you look swag. I said, swag? I had to go home and look what that meant, look up what that meant. Swag. That's interesting. You look swag, man. I looked back at myself about 7-8 years ago on a picture, and my eyes were a little puffy, and they're not that puffy anymore. So we hit my resistance level. Jimmy called out 750. We hit 750, 760's next on the SPY. SPX has a big old lot of 5 million on it for the 29th. The 7475 calls, 5.22 million block. Better make sure my platform's up and get my drinking water. I think I got time to make a cup of coffee. Oh yeah. Here they come up with that peace agreement. Man, all I heard was we're bombing the hell out of these people, and I can't believe anything I read anymore. I just can't. I can't believe anything. I think the Democrats are going to lose again this coming election, because all they can talk about is Trump. They can't talk about policies. I wish they'd get back to talking about policies. they're ashamed of their policies, so they can't talk about them. Because Trump's doing everything that they used to whine and gripe about. Maybe that's what it is. But I think they're going to end up losing again. Trump this, Trump that. Just makes me more eager to want to buy calls. They get on CNBC, bitch, 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 bitch. Market at all-time highs. All they can do is bitch, 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 bitch. It ain't working. They did a pretty good little, well, I don't know. Sometimes when I do a video, I talk too much about supports and pivot points and resistance levels. I even have to go sometimes and go back and kind of go through, like if I mentioned Apple, I want to go back and look at it and see what. I watch my own videos. After I make one, I'll sit back and listen to it, see if I missed anything, or I felt like I was just carrying on with too much support levels and trend lines, but we'll see how good they are. I was really serious about the /ES. We come real close to hitting that support this morning. I mean, real close. We're at the VWAP right now at open. I had some guy on YouTube mention the /ES, and I told him, I said, "You're a smart trader." He says, don't go buy the SPY and the SPX. And I should have started off with the /ES, because that's what I'm using when I'm trading the SPY and the SPX. If I see it at the VWAP, which it is right now, or I want to wait to see if it holds that VWAP, like we hit here, VWAP, 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 two-headed snake, VWAP, VWAP resistance, VWAP, it acts as a pivot point. So I've got that /ES next to my SPX. And then on the SPY, I've got the SPY with the VWAP. So I can always flip real fast over here and look at that SPX and then maybe take the SPY with it. So yeah, that /ES has really been a game changer. And I want to thank, I can't even remember his name now, he ain't been in here for a while. Funky. I used to watch it, but not that much. But then I got to watching it, and I said, shit, it's pretty more accurate than trying to trade the SPX. But if I look at the /ES, and I see a good setup on the SPX, on both of them, but the /ES a little bit more tighter in the patterns. Probably get up to 75.50 on it. Good $8 bounce. And that would be to the 200 on the SPX on the 1 minute. So I'm gonna go get my coffee ready, and I really don't need it, but man, I'm just addicted to drinking it. Some people have never drunk coffee in their life. Well, they just don't like it. They have, and they say, ugh. I look at coffee as a roto-rooter. The only bad thing about coffee is when you add creamers and shit to it. And I've not found that perfect blend, especially with my sugar issues. And I think that's part about getting old too. They say old people can't eat ice cream like they used to. Except a politician.
And enforcement.
Okay, I heard you. Already starting in on me.
Thanks for calling homes.com. Press 1 to be connected with the agent.
Say what?
Thanks for calling homes.com. Press 1 to be connected with the agent.
Homes.com. What the hell is that? Someone wanting to buy my property. I'm getting a lot of letters. People want to buy my property. Homes.
Sorry, we are not able to connect you at this time. Please
I didn't hang up. Homes.com. Introducing Homes AI. I was looking for a home in Hawaii. You get a pretty nice home here for $500,000. My old home I gave to my girlfriend, probably worth $250,000 now. I don't know why I did that. I know why I did it, to get rid of her. Here, take the house. Just get out of my life. Here's one for $700,000. I'd buy this. I want to make sure I don't have a lot of yard to do. It looks perfect. Nice archway kitchen. Oh man, I love this house. There's my office. Wood floors. Walk-in closet. Homes.com. We've got 1 minute left, and I didn't get my shit started. Oh, I gotta clock in. I got to reading about Home Depot. The guy asked why they weren't busy. I told him I go to Lowe's, plus their protest against ICE. I say, screw them. Big knife right there on the spy, ready to open. Microsoft hit my support that I called out in the video this weekend. And that's another one that I'm kind of iffy about trading because I don't like Bill Gates. But Wall Street doesn't care. So we dipped again here. The 750 lottos or the 751s. 751's got 5,000 contracts. We got a double bottom. Prepare ye in the name of the Lord. I'm going to get the first trade out of the way. At 106, the 751s. 101, 102. 3 black crows. I'm going to get right here at buck. Could dip a little bit more. I feel like we could pull back and hit the 749.14, but we'll see how this works. Might get in and out of it. Got inverted hammer. Got another alert. RGTI got an alert on Regretta. RGTI. Mark at below. Come on now. Be a little careful this week. fat cats have been looking for any kind of excuse to bring this market down. Damn. Okay, we're about to support right here, so I'm going to add on. .86. I wanted 8.5. There it goes. Shit. Just had to wait a second. Now, if this doesn't hold, I'm out. I'll take a loss. Right there. Has to hold. We just hit it. And watch SPX. There we go. Break it. Now we're at the 9. So if you got the dip off my support, it'd be a good exit idea. Or scale out. I'm green, so I don't know what to do here. I want to kind of break this 9 and run it up to the VWAP or get another big candle. But all in all, it's a good time to get out. Get your first scalp out of the way. 93-cent average, I'm going to do it. I got 20 contracts. I'm up $200. I don't want to screw around. I'm going 103. So, I don't know if you take time out to watch my videos. But I would, if I had someone like me out there doing what I do. And you're not batting at least 80%. I'd definitely want to watch them. Because we nailed that support that I called in the video. To the penny. That was the previous resistance. See, we broke out of it. That was the previous high. That was a double, triple top break counting the wick. SPX bounced off the 9. That would have been another good trade. We got to break, and this was my resistance on the SPX. 751712. I haven't touched the chart. So I'm coming up here and I'm looking at my scan now, my watch list. Today's losers is PANW. Now, they were pumping the heck out of now. I don't ever take a pump from CNBC. I wait for the pullback. We're at the 200 right now. Pun intended. We're at 106 on the calls. 108. 110. Mind you, I'm very bullish in this market, and this is the best time for learning how to trade my strategy. Dang, gummit. 113. That'd been another $200. 116. Now we're at the 63. Definitely an exit idea. SPX just broke out, new high. I showed you why to take the SPX. Because of that big lot, big block. 5 million. Today's the 26th. And 777 on the 7530s on the volume. That's a lucky number. We got 401 at the 7550s with 14,000 contracts. So I'm setting my alert at the triple top break at my previous resistance off the 9. I'm going to go get my water started and come back. We hit the VWAP on the /ES. I just got another alert. SPX hit my alerts. Or I didn't set it up right. I don't think I set it up right. Or something went weird there. We just broke the VWAP on the /ES at the 63 right now. I'm going to set an alert off the 9, off the /ES. $4. We got the 200 on its way. just kind of give them my support levels and resistance level. Questions on the stock. So that was like a solid support. And what I'm news events or not. So I'm going to say resistance to break, and if that breaks that, that'll become support. This is on the SPX. Right around 75.17. Then we're going to take this to the daily. Perfect. Man, I should jump in that trade. Regret is right at my support level. I should have raised it up just a little bit above that body. But we still hit it. Just a little shy of 823.85. $13 billion valuation on quantum. New quantum stock. What is it? Honeywell and Quantum has set terms for an IPO. Honeywell spinoff Quantum is looking to raise up to $1 billion IPO. MW? Is that what it is? It probably won't be on here. No. Baba's, oh, that's not right. Baba has a Head and Shoulders around 128. Okay, we're pulled back here on my SPX. Prepare ye in the name of the Lord. I'm going to move this up above the 21. On the 1 minute, and I got an alert set here. I'm going to raise it. There we go, right there. So 350, 75 50s, 330. There it is. Triggered. Triggered. The 75 50s at 350. Triggered. The 75 50s at 350. I'm dialed in. Come on now, hold your horses. Got to hold this support level. That was resistance that I called in the video. Now it's become support, so it has to hold. Or it can be a bigger drop. $3. I got $3.50 and $3. I'm green right now. $20. Well, more than that. Tweezer bottom on /ES, and we got a Head and Shoulders. We're at 350 right now. I can get out of this trade if I wanted. I want to see if we break the VWAP or the 9. I think the 9's more important right now than the VWAP. We're at 360. $370. Now we're squeezing between the VWAP and the 63 on the /ES. We're above the 9, and we're still bullish as long as the 9 stays above the 21 on the SPX on the 1 minute. We could reach a double top or new high. We're at a head and shoulders right now. So when you hit a shoulder line, what do you do? What do you do? Horseshack. You scale out, Mouse. You scale out, Miss Akata. Now I can go make my coffee in peace. I scaled out, and that doesn't mean I sold everything. My eyes have seen the glory of the coming of the Lord. He's stamping out the vintage where the grapes were rather stored. Yeah. Truth is marching on. Glory, glory, hallelujah. Glory, glory, hallelujah. So I'm done for the day. My retirement plan. INTC, boom, right to my support. Intel, we're at 380. Jimmy said we were approaching a double top. Jimmy said we were approaching double top. If you don't pay attention and not be dialed in, you will not get the double top. Boom, boom. I fell in love with a new cook over the weekend. She has a very nice set of boobs. They shake real well. She cooks when she's braless. I just love my new cook. I don't even know her name. She ought to get 5 million followers. We just got a new high. Woo! Jim, your contracts are now at $4.20. I was going to say 10, but now they're at 20. So what are you going to do, Jimmy? You're up $100. You got 3 of them. Well, I'll tell you, little fella, I'm going to hold. If we stay above the 9, I'll stay in the trade. Trick. Trader's tip. If I stay above the 9, I stay in the trade. And I'm going to go into the kitchen and grab some coffee. The SPY calls are at 138. And the SPX ones that I'm in are at $4.
Meet QuickShot 2, the next evolution of airless spraying.
They're at $4.20, and I still ain't got into the kitchen and turned on my water yet. I really don't want to walk away from this inverted hammer. It's a red one over here, but that one did okay. That one did okay. Oh, I didn't want to do that. Ah, shit. Pop out. We're at 440. Can we break the wick? Intel pulled back. No, beautiful trade. Still got to hold it here. $4. Bounced off the previous resistance. And I talk about this a lot. What was resistance, I called this out yesterday, now becomes support. As long as you stay above the 9 stays above the 21, you're still bullish in the trade. So as long as that 9 stayed above the 21, you're still bullish in the trade. If you missed it here and you got stuck. Say you got stuck. Jim, I'm stuck in the trade, man, but I remember watching your video yesterday and it stayed above the resistance level, but the 9 also stayed above the 21. I remember you talking about that back in the past video and on live here on YouTubers. And we just had a new high. There's a point where you get tired and you might want to sell it and go into the kitchen and make a cup of coffee. Now I just ate a banana while I was waiting for this thing to create a new high. And right when I took my last bite, boom. Now we have a triple top. I don't see the triple top, Jimmy. Well, let's point it out to you. What do you do when you see a triple top? And you know how to count to 3? You can trade with me. 1 bits, 2 bits, freebie. So you're still above the 9, you're still in the trade. But it's getting a little old. After a good night's sleep, I woke up and drank a glass of water, needed hydrated. Then I followed it up with some fresh grounded bean coffee. I remember Jim talking about the 9 EMA. As long as it stays above the 21, I'm gonna have some fun. I'm not gonna take my profit. It's getting ready. The volume slowed down a bit. And I gotta go into the bathroom and take a shit. It's a triple top. I think I'm gonna sell before the bell. It's a triple top. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. We're at 440. Should I sell it here? Do-do-do-dee-doo-doo. Da-dee-da-dee-da-da. 450. Woo-hoo! Da-dee-da-dee-da-da. Oh hell. If you can count to 4, you just might make a little bit more. Let's keep it going. If it stays above the 9, you might walk the line. Let's get it going. I'm a singing day trader. I eat green and purple potatoes. And I can smell the aroma of that coffee. I think I'm gonna go into the kitchen and sell these contracts. I don't care what I'm missing. $4.90, $5. Whoa. Through the branches of my old magnolia tree up past the window cemetery. Sitting here watching the streetcars go by. Moon in the sky as the light starts to die. Oh, my friends up here. It's incredible. They're now at $5.10. Jimmy, take it. There we go. Come on. $5. How's he do it? Anybody take the trade with Bobo? Randy, did you take the trade with Bobo? Somebody say yes. Please, somebody say yes. I don't want to say yes because the answer is no. And I feel so sick that I didn't, Jimmy. We have a yes, 2-cap. 2-cap has reached level 3. Let's give him a round of applause. I still think that's a rapper's name. And I might have to pick it up for myself. Instead of Washboardjim, call me 2-cap. But you saw how it worked? So you know what an inverse head and shoulders is. You know you can stay in the trade as long as you stay above the 9. And your 21 is your second support. I'm out of the trade because I'm going to go make some coffee and wipe my ass. But I'll be right back. We'll see if there's any cleavage. No cleavage yet.
It's interesting, kind of the makeup. So IT, technology, that makes sense. You continue to see chip leaders, DRAM, all the memory chips. They continue to go up as well. But financials and real estate are holding up very well too. So those are some of the sectors. If you look over the last few days, they have the highest percentage of their stocks above the 50-day moving average. So the breadth is widening out. It's not probably to the level where you consider a strong bullish market, but that can happen if we continue to see some more strength in these next couple weeks.
Yeah, we'll certainly be watching. And no doubt yields pulling back, oil pulling back as well is helping, particularly with respect to some of the more interest rate sensitive parts of the market, like you say, with real estate, Joe. Michelle, getting over to you, I'm just looking at the EWY, that South Korean ETF, rallying up over 9% right now off the back of another record for the Kospi overnight. We saw another record for the Nikkei 225, back over over 65,000 for the first time ever. Taiwan hit an all-time high as well. I mean, just walk us through what is going on here. I mean, you and I have spoken about the strength of the AI trade, but it's something more than that. I mean, it's becoming, I don't know, less cyclical, more secular in nature. Is that the story here?
Well, I think that the semiconductors are probably still cyclical, even though we're seeing a lot of secular growth from the boom in AI. And certainly we're seeing countries across Asia really participating in this boom in AI capex. We've seen export growth accelerate in recent months in China, Japan, South Korea, and Taiwan. And that's because there are a lot of semiconductors built there, but also other equipment and parts that feed into the growth of data centers. And it's pulling up overall economic growth in places like South Korea, grew GDP 6.8% quarter over quarter, annualized in the first quarter. Taiwan, 13.5% growth year over year. And that's really helping propel consumer spending in those countries. But it's also starting to spur more inflation. The Bank of Korea meets this week. They're likely on hold, but they could shift to hikes later this year.
Okay, to watch. As you mentioned, I think the exports have very much been the bright spot for a number of those economies, like you mentioned, places like South Korea and Japan as well. Joe, just getting over to you, and obviously shortened trading week, but no shortage of catalysts here. No doubt, and arguably the most important is going to be that PCE, that's the Fed's preferred inflation gauge, and Kevin Walsh's first read. So just walk us through what you're thinking as far as, you know, the market reaction based on whether that comes in hotter or colder.
Yeah, I think the assumption is, since we've already gotten some of the PPI and CPI data, that, you know, the number's going to be, it's going to be a warm number. I don't know, I guess we'll find out if it's hot or not, but it's going to be a bit of a challenge for the Fed because of the inputs that we've seen that have already flown into, or that flow into it. I think if it comes in line, I think the market can still rally from here. But I think if it's hot, that you got to remember, when we're looking at what's leading the rally here, these are high-tech names that are sensitive to changes in interest rates. Why? Because it changes the multiple and the valuation. And look, they've been crushing earnings, so they've actually seen some of their multiples compress a bit. But overall, I think that if we get a hot PCE number, then that's something that the market's going to have to, you know, figure out how it's going to reset that multiple, because we're looking at, you know, this is a number that probably will stay elevated for a couple of months, so we're probably going to have to reset some expectations.
Keeping an eye on those yields this week, which seem to be backing off for now. And Michelle, just getting back over to you, I'm keeping an eye on some of these Chinese ADRs this morning. Under some pressure, it seems like there's a couple of headlines out of Beijing, but something I just wanted to speak about was, you know, obviously this year-to-date performance. I mean, you and I have spoken about the strength of the Chinese stock market, the resilience we've seen just based on obviously the AI trade, but also the energy security strategy over in that particular country. But K-Web Chinese ETF down 20% year-to-date, BABA down 12% year-to-date. There seems to be some concerns over in China about the heavy-handed approach from Beijing around AI washing. Now,
she said China.
Investing in Chinese stocks does come with a degree of having to stomach some risk associated with the policy setting, but just walk us through the significance of this and what you're seeing as far as the performance.
You're so hot.
China's economy has done better than expected. Despite the war in Iran and the heavy reliance on imports, just due to the strategic petroleum reserve that they...
I'm sorry, honey, but Sammy's got me. I fell in love with Sammy. You're sad, I know. I hate to break it to you live on TV.
Thank you very much. And the overall index is under pressure from downward revisions to earnings amid pressure on profit margins. We're really seeing that involution still continue.
She's very upset.
And
She
again,
took it
like
hard.
I mentioned, regulatory risks might be rising. Signs the government may be wary of the stock gains that are maybe a result of exaggerated AI
It's all right.
claims. So
You'll
until
move
we
on.
see some turnaround in profit margins and maybe a little bit more of a hands-off
You'll be
stance by
glad
the
that I'm
government,
gone.
It probably is a good idea to be cautious on Chinese stocks.
Okay, good to know. Yeah, exaggeration seems to be. The
Oh, look at
key
the
word
smirk
here as
on
far
his
as what we're
face.
seeing, because I mean, you look at Alibaba,
Go on.
all of the other earnings. I mean, the market really buying into the AI trade, even though, as you say, the profit margins have been squeezed by basically the domestic demand just not being there, and also the price wars that they're engaged in with the deliveries. But Joe, just getting back to you. I mean, speaking of this whole AI trade, I mean, this.
He's not happy this morning.
Trade just doesn't seem to be giving
Oh,
up.
there's
I mean,
a
up
smile.
17% right now. We're seeing the other memory names
He
higher
forced
as
it.
well. Any thoughts about what we're seeing here?
I mean, it's a parabolic move. I think the upgrade target for UBS today was around 1,600. So you know, they see a much larger on ramp and further ways to go for this sector. And I think the biggest thing is this: it's not necessarily the pricing power, because the pricing power is there. It's and it's not demand, because the demand is there. It's
Matthew
really supply
Schroeder.
they can keep in front of that, because remember, it was just a little over a week ago that both SanDisk and Micron sold off pretty heavily on this
Welcome to
idea
Verizon
of
Wireless. Your call
what was
cannot be
happening out of
completed as
Asia
dialed.
in
Please
terms of
check the number and dial
Samsung
again.
and
Announcement 4. Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again. Announcement 4.
Announcement, announcement, announcement. See, Matthew Schroeder doesn't come up now. I was spammed. Okay, the calls are now at $4.10. Randy? I will wait until we hit the blue line at 7522.14. We're squeezing right now, but I think we're going to squeeze down. We're under the 9. Pay attention. Pay attention. I'm going to go into the kitchen and get my coffee and put 1 ice cube in it so I can start drinking it now. I don't like to wait. And we'll go back to Sammy, my new girlfriend. She is hot. Now it's got to find out if she's married or not. Then I'll start my courting.
On LinkedIn for more.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
We're back on Morning Trade Live. Let's focus on semiconductor.
We got a
chip
triple
stocks
top.
today. We are rallying across the board. Nvidia's higher. Micron continues to scale these highs here, 17.7%. TSMC up 2.5%. Intel up 2%. On Semi is up 10% right now. And that is very much the focus of the morning trade off the back of a change to the price target here. Looks like we've hit a new all-time high in the market this morning. We're up 136% year to date. We're up 210 over the course of the last year as well. So let's get to Marley Caden to join us to
nice
break down
bounce.
the details of what the analysts are saying here. Good morning, Marley. Hope you had a wonderful long weekend. Just talk us through this note.
I did. Thank you, Sam. Good to see you this morning. Yes, onsemi having a really nice move to the upside today. Up more than 10%. We are at a new high right now, just at about $128 right now. After B of A raised the price target for onsemi, they raised it to $138 from $115, keeping a buy rating. That puts us about $10 their target price, about $10 above where we are right now. They're saying that the company's multi-year content gains seem to be underappreciated in the shares. Obviously, that written before this 10% move to the upside and the new high today. The company's core industrial and auto markets have finally turned a corner, according to this analyst here, going from headwinds to what they're calling now cyclical tailwinds. The firm also believes that these tailwinds are being augmented by what they're calling transformative growth in AI data. Now, if you look at onsemi, I mean, they've gone in a year from $44 up to $128 so far today. That's up more than 210% over the last year, 135% year to date, close to 30% so far over the last month. And B of A not alone here. Just in the last month, we've gotten a broad wave of price target hikes. JP Morgan, Susquehanna, Bank of America, this is their second in a month, and Goldman Sachs, as well as KeyBank. KeyBank raised their price target up to 125, keeping an overweight rating. Now, they're probably going to make an adjustment to that as we're now north of that, and they have a pretty bullish call here. But the unifying message across all of these firms right now, as you look at this company, the ones who are in the buy camp, saying that they're starting to see meaningful recovery from management. AI data center demand is guided to double year over year in 2026. That's cited in pretty much every note.
Two of my girls are showing cleavage today.
Here in the stock. Right now, there's about 40% of the analysts who cover this company have a buy rating or a buy equivalent. About 60% have a hold. And the average price target right now is about $104. And now, mind you, we're at $128. As we look at the bull case, they see onsemi as this leverage play on vehicle electrification. They have their deal with Xiaomi and their EV SUV. They also cite Global Foundries collaboration as positioning them in the company, the cutting edge of next-gen power. So a lot of growth drivers there. The bull scenario points to as high as about $150 price target over the next year. And gross margins re-expanding.
The video's pulling back a little bit.
The bear case is always tied to valuation as you look at those notes. PE sitting at about 340, implied forward PE about 45. Their net income in 25 collapsed about 92%, and that's cited pretty much across the board. They also saw declines in all three segments in the double digits in Q4. However, the bulls argue that these are one-time hits. They're not indicative of something that's going to have underlying issues going forward. They think that they're one-offs, as they say, evidenced by their free cash flow margin expanding to about 24%. So bear scenario, looking at the low end of price targets, is south of $100. It's like right near $70 right now. The high end of that closer to $150. But this move from B of A today is for $138, their new price target. And with this 10% move to the upside, we're about $128 right now, Sam.
Yeah, I guess you could argue that the valuation looks a little bit rich at this point when you look at the others. I mean, except for like an AMD, for instance. But as you say, I mean, it seems to be off the back of the first quarter earnings, doesn't it? And really around that framing, it seemed around the CEO saying that they're in an inflection point with, you, as you say, that data center growth as well. So really interesting as far as the market. Not everybody buying it now, but 10.5% pop. It's very nice as far as the performance is concerned today. Thanks so much for that, Marley. Let's trade on semi now with Tim Bigham, options strategist over at Pilot AI. Tim, hope you had a nice weekend. Just walk us through an example trade on this name.
Yeah, absolutely. Sam had a very good weekend, hopefully you as well. And this is a stock that I would not be chasing here at all. I think it's certainly getting a little out over the skis, to say the least, as you just alluded to. Valuation now stretched. So I'll be a patient buyer on a dip here, using that kind of 105 support level where it broke out post earnings last time. So just going out to July, selling the 105, 100 put spread. Last I looked, getting just over $1 net credit, so like that return on risk, like the downside cushion too with the stock well above that 120 level, right? Have plenty of downside cushion as well. And we're also seeing the call skew. In other words, the IV on the calls so far ahead of the puts, which most of these AI-related chip stock names are showing, that speculation getting a little bit too extreme as well, I think. So I think we're probably due for at least a period of consolidation. So I would not be anywhere a buyer around here, but somewhere down around that 105 level looks more interesting. I'll get paid for my patience by selling this out of the money put credit spread.
All right, good stuff, Tim. Always appreciate it. A nice 10.5% pop now for on semi. Thanks for the example trade. Tim Bigham there, option strategist, Pilot AI. Coming up, we'll take a closer look at the sectors on the move this morning in the international headlines we're tracking in global markets. Morning Trade Live will be right back.
We're at a new high on SPX. It's so much more pleasant to listen to these people here than to listen to CNBC with all the snobs.
Morning movers, be the first being early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Sam Bartlett coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. Alex Coffey joins us from Chicago. Alex, hope you had a nice weekend. So we got a record high for the S&P 500 this morning. We're off the highs now, it looks. In fact, the Dow's just dipped into the red. It looks like a little bit of more red creeping into the screen here. Just walk us through what you're seeing.
Yeah, at least in the NASDAQ and the S&P 500's case, Sam, it actually is strengthening in terms of the rally. We're not in the highs from the futures session on Sunday, but we're towards the highs for today's intraday session, at least from what I've seen. But we've done so, to your point, as the rally has narrowed. And so earlier, near the open, it was closer to maybe a 2/3 of the components that make up the S&P 500 were green on today's session. That number is closer to 55-45 now in terms of names that are advancing versus declining, 54.5% if we want to be exact. When it comes to that, it's pretty much the same for the NASDAQ 100. Sector-wise, you have 6 sectors higher, you have 5 that are lower. No surprise that energy is down the most significant, down over 1.5%. And then IT. IT is up 2.3%, which explains why you do see a market that's being led by the NASDAQ today, Sam, and also one that is you know, I would say still strengthening from a index level performance despite losing some of that more broad performance here intraday.
Yeah, I don't know if it's a case of sort of the old economy versus the new economy today, but obviously rally across our memory names in particular. Micron up 17.5% as well. I mean, just walk us through what you're seeing as far as technology in particular.
Yeah, what really stood out to me, Sam, when you look at the IT sector is that you have a day finally where hardware and software broadly are working together. Look, I know it's not perfect. You still have names like ServiceNow and Microsoft still struggling to move higher. You see Palantir's red there on the screen as well. But if you look at you know, software sort of indexed together, it's up about 0.6%. You look at the semis. They're up about 4.5–5%. And then memory, you pointed it out. I mean, memory is the reason why today is what today is. Memory names are up 13% today, Sam. And these aren't like upstart companies. These are some of the bigger companies on the planet.
Yeah, absolutely. We continue to see these going strength to strength. Alex, really appreciate it. Nice pop for the NASDAQ 100 today, up almost 2%. Let's turn to some corporate news overseas now. Investors sending a very clear message to Ferrari this morning after the company launched its first fully electric car known as the Luce. The vehicle comes with a roughly $640,000 price tag and will be available from Q4. Shares fell sharply, down over 6% in Milan trading on the announcement. The company or the market is said to be disappointed with the concept. There's a view that it dilutes the supercar brand. The stock is down over 30% over the last year. Shares in Germany's delivery hero jumping after reports Uber is weighing an improved bid for the company. The Berlin-based food delivery firm says it's received a takeover offer of $38.39 a share, which would value its market cap at about $11.6 billion. If the plan goes ahead, it would mark more consolidation in the food delivery space after DoorDash snapped up Deliveroo. And watching Chinese ADRs this morning after a report officials in the country are restricting overseas travel for top AI talent at companies like Alibaba and DeepSeek. It's aimed at trying to keep China's strategically important domestic technology safe as the country tries to play catch-up with the US. According to Bloomberg, certain workers will need to get approval from authorities before going overseas. Baba shares down 0.5% right now.
Baba.
Coming up, it's time for Inside Out. We'll take a closer look at Zscaler ahead of earnings and bring you an example trade when Morning Trade Live returns.
Baba.
It moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Boom, 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 boom. Sometimes you know.
Sometimes you just know.
You could have done better.
You got a little sunburn there, buddy.
Same goes for where you invest.
As I drink my cup of coffee, I'm debating on a salad. I think it's what I'll have. Because I went out and bought me some croutons today. And it's very important that I put croutons in my salad. I messaged Squawk Box this morning. They were pumping Disney. I said, messaged them, I said, Disney got way too much indebted in politics, same as the actors. I would not swing trade this. I would scalp it if it went below $100. It's a piece of crap. That's Disney. They're so out of touch.
Which is the first trust edition. They're breaking out to new highs. If you look at Palo Alto, CrowdStrike, breaking out.
Joby's
all
bouncing.
clearing key moving averages and moving higher. We're waiting on Zscaler to kind
Tesla
of play
bounced.
this catch-up trade, and I think earnings could be the potential catalyst for an upside move.
Does anybody remember my target on Tesla yesterday? So we had to break 430.86. Support was at 424.
And it is doing a lot within the AI space. So you've seen, I know we heard an announcement on Friday for the acquisition, the
Baba
potential
triple
acquisition
bottom.
of Symmetry Systems, which is all about this AI kind of detection and data mapping on.
Too much CapEx on AI is what CNBC says.
And security.
I used to be a fan of Squawk Box and CNBC, but not no more.
Out and build a platform and compete against the bundlers, which is, I think, is their biggest threat.
Is it real this time? Because we've seen the software space trying to rally post this whole SaaS apocalypse, as you know, companies have had to come out in their earnings report and address explicitly why AI is not coming to eat their lunch. I know that this.
Again, don't get started on this CapEx crap. The best of the best. The fundamental traders do not understand the new revolution.
The churn.
Bernie Sanders is out complaining about AI, how it's going to take away jobs. They don't give a crap about jobs. They care more about illegal immigrants, getting them and keeping them in power. It's just, I'm sick and tired of hearing that for year after year. I mean, 40 years I've been hearing that crap. They ain't for the working man.
AI expanding the threat vector. This is a very, very important sector in a secular demand story that is AI.
Okay, and just as far as the metrics you're looking for and the language in that call, what are you going to be tuning into the most?
Yeah, I would love to see management discuss the red canary churn, so the customer turnover, to see if that's stabilized. Maybe
the red canary
net revenue
stock term. Let me see what that
stabilizing
means.
or even ticking up. And I want to see annualized ARR, even if they don't quote it organically, moving higher than where it was last quarter. So those are the things I'm watching for.
All right, we're seeing a nice move to the upside ahead of these earnings. So something is working for the company right now, up 3%. Clint,
It's
really
an
appreciate you
IPO.
so much for that. Clint Sorensen, Chief Investment Officer over at Accentus Asset Management. Appreciate your time. Let's trade Zscaler now with George Siller, Senior Markets Correspondent. Hello to you, George. Just walk us through an example trade for us for this one. As Clint said there, it could be a big catalyst for the rest of the space.
Yeah, it could be. I mean, I think the price action, if you look at the last 20 days, has been very positive for Zscaler, and the previous analyst is right. I mean, if you look at participation of Zscaler compared to
I don't know what they're
some of the
talking
larger
about.
peers, it's
Red
been
canary.
underperforming and playing catch up. So there's a possibility there's some good announcement associated with the earnings. If you look at the
Sling
market
term.
maker move, it's
Sling
around 10% or over $20 a share. So what I'm going to do is I'm basically going to sell. Actually purchase, forgive me.
Canary in the coal mine.
A long call butterfly spread here, which is bullish. And it's one way to certainly participate, neutralize the volatility, but also cheapen the long call option in this trade. So I'm essentially going to purchase one of the 190 calls. Now, just to keep in mind, let me clarify, these are
I don't mean nothing. Okay, we're pulling back.
3-day trade. I'm going to buy the 190 call, one of those calls, and I'm going to sell two.
Prepare ye in the name of the Lord.
Essentially, right outside that market maker move that I mentioned just a moment ago.
Should I go ahead and take another trade or make lunch? I think I should sit here and wait for the 63 or double bottom. One more red candle. We're bearish right now. That's the red canary right there. Hit the 63. Better we hold 75.31.64 to the penny. We'll start off with 2. When I get ready here, this is a 75.50 strike. May 26th. 2 in order. And we're right almost at support. There it is. There it is. Prepare ye in the name of the Lord. I'll catch this canary. $3.60. Randy? We're still bearish. We're under the 9 now. So we got a double bottom, a triple bottom, counting a wick. Uncle Sammy, my grandma's sitting here watching us trade, and she heard you say triple bottom. Can you explain what you mean by that? You got a wick, a body, and a body. And we just now hit the 63. So it's important that we stay above the 63 in this orb. If not, I got to add on. But I'm not going to add on yet because I don't want to get in too deep with this. We're in the 75.50 calls right now. It's got to hold to 63. 63 in the orb. Getting real tight. 63 EMA. In the orb. Oh. Okay. My eyes have seen the glory of the coming of the Lord. He is stomping out the vintage where the grapes were rather stored. He needs a breakout from here. Do you understand what I'm saying? Truth is marching on. Orb or not, we gotta break the 9. Orb or not, we gotta break the 9. Jim, you're up $40. Have you ever thought about selling? Jim, you're up $60. If you're new to trading, when I made $60, $80 profit, what did I do? And I'd be done for the day. I'd be up $80. You see where I'm coming from? And then you set goals. Next year, it's going to be $100 a trade. The year after, it's $300. Now it's an easy grand. Nope. Not yet. I took profit previously, yes. If we break the 9, we're squeezing right now between the 63 and the 9. I'm watching the tape. It's slow. We're battling about a 50-50 here from green to red. But if I was new, I'd be out of the trade by now. But I'm staying in it because we're still above the 63, and that was my target. If I go below the 63 in the orb, I got to get out, or I add. And I just got 2 contracts, so I'm not really worried much. We're above the 63 on the 1 minute. Because what? We're on a delay. Now we're below it. It's still above the orb, so I'm going to add right here. $2.85, 280. Oh. Now I'm down $200 just like that. 2.70. Spank. I'm going to tell you in a second. No. Below the orb, we've got to do something. Yeah. Right now, we're definitely bearish. I'm just hold on to this a little bit longer. And then after this, I'm done with coffee. Can't see. Spy calls are down to 106. And they're right under the, I don't know, they're under the, out of the money. And spies broke below support. It's not looking too good, Jimmy. And we just now, I took this trade off the VWAP in 3 black crows, but it ain't working. So I gotta make a business decision. That's my last support right there, that blue line. $2.15. Now I've got 8. Got 2 at 360, 2 at 270, and 4 at 215. Let's go. Oh, look at that long leg doji. That's pretty. That right there. That's what I needed right there. Come on. Come on. You can do it. You can do it. Right now, come on. Just a little pop. $2.65. Can you break the 9? We got a snake. Right now I can get out with the 4. Ooh. Instead of saying 40. I'm down 80. That's the 200 right there. And we held above the 100 over here. If I sell it now, I'm down 200. I'm down 400. I'm done. Come on. We got a snake, bull flag. And we're gonna do it in a minute. Yeah. Marvell's up $8. AMD up 23. Jeez. It's a monster stock. Can you imagine I was in that thing at 9 something, a little under 10? About 8 or 9 years ago. Maybe 10 years ago.
Trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Right where it counts.
Aw, she's got your smile.
Carl.
Yep,
Okay,
number
well,
one broker's here to welcome your new
this
little
ain't looking too
companion.
hot for Uncle Zimmy.
That's for Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies. And Schwab helps me.
AI narrative versus what is happening with yields. And now that we see yields coming down, that's boding well for the stock market. And this week, my focus is really on the consumer. We've got a slew of retail earnings across lots of different income cohorts. We've heard some chatter about trading down and maybe that widening even of the K-shaped economy. So my focus is on the consumer. And of course, this is Kevin Warsh's first week. So how that data is interpreted is also
that's a good
extremely
point.
important as well.
That's a
Absolutely.
good point.
It's going to be a big but a short week. But let's start with your first pick today. I know it's a company that you feel strongly about. You've got Alphabet here as number one in your big three. So walk us through why this is in the big three today.
Absolutely. I couldn't not talk about Alphabet. It actually came up in my growth scan as well, which certainly surprised me, as did NVIDIA, which is rare when that happens from a Mag 7 perspective. But I did attend Google I/O and got to see a lot of this firsthand. And I thought it was really interesting, the AI ad optimization that I'm seeing Google lead with, or Alphabet, and this agentic ad format that's
All of a
expanding
sudden just got
monetization.
weak.
So leading to more different vendors are pulling into that, but also this native checkout. I think that's going to be really improving for e-commerce conversion rates and revenue capture. And I would love the ability to go shopping and have a universal cart with various different platforms. And so it's going to be interesting to see how that translates over to the consumer. That's why the consumer health is extremely important. And then beyond that, I actually was looking holistically at a space theme. So Google is going to be my safe or core play because it has various revenue exposure, one of which is TPU infrastructure. We talk about TPUs quite often and how they're being rented out, used for inference, have some efficiency gains, but they do remain a core competitive advantage. And last year there was Project Suncatcher that was announced that extends TPU experimentation into space-based compute. And I see as we get SpaceX IPO and we're focusing more on space themes, it's been a better performing category. So I'm looking for exposure to that. So from a space perspective, this is a low-risk mega cap AI exposure through search and infrastructure dominance, and the TPUs specifically on building out that theme within my portfolio.
All right, so as we have our space theme today, Rick, we've got Alphabet performing really well. They're up with the broader market today, but overall, they've done really well. And I'm going to make a joke, a pun here, terrible one at that. It's skyrocketing, but we've fallen off a little bit since then.
I liked it, but I will say it's kind of a remarkable time when a huge
Marley's being
company
funny.
that's up 130% on the year is the relative safety play. I'm not being sarcastic at all. I mean, this is kind of where we are right now. So when we look at Google's chart, it's actually quite interesting because we have an upward sloping channel type shape here between our two blue lines. And then here is the part that's really kind of fascinating. We have this downward sloping triangular type shape here. Kind of looks like a bull flag, bull pennant type of shape. We had a big push to the upside. We had a strong gap up. We never even really came close to testing the gap. We formed a consistent low point near 382. So this is the type of behavior that many traders are on the lookout for. We would look for, if you were trying to make a play on this type of activity,
Breakout.
look for a surge that pushes up above those initial highs in the 400s or so, and then for the trend to continue after this brief reset. So really an interesting setup here for a name that's already seen such strong growth during the past year. For now, though, we find ourselves between our two shortest moving averages that we follow, our dark blue 5-day EMA near about 388, our teal 21-day EMA, our monthly EMA, near about 380 or so. RSI trending lower. We did break through our 70 line for the overbought area, but we could see a resurgence if we start to break above that trend line. Look for the RSI to re-enter that overbought area concurrently with making new highs on price for signs of a continued potential strength here. We can also see now that our volume profile study shows that there's actually a sizable node developing here in terms of our volume activity between about 380 to 400. So be on the lookout for if we do start to move lower, you could see fast moving prices until we start to get down here near 340 because there's kind of a gulf in volume activity until that point.
And as we look at Alphabet today, we are at 387.28, trading higher on the day with the overall market and tech moving higher. This next one, though, has had a meteoric move to the upside over the last month. I think up more than 80% on this SpaceX prospectus and its sort of tie-in there. We're talking about Rocket Lab here. So walk us through this one and then where this came up today when you were looking.
Yeah, so I'm looking for core risk, medium risk, and then high risk. So now we're in medium risk. However, because of the parabolic move, this is something I would wait for a pullback or consider deploying a cash secured put, so something that reduces that risk, if you will. So they are leading in something called FSO, or this free space optical communications, and this has to do with their Mynaric acquisition. I'm not sure if I'm pronouncing that correctly, but they've got some projects like Neutron Rocket, which remains on track for the fourth quarter of 2026 for the debut launch. They've got recent acquisitions that are strengthening their vertical integration and their supply chains, and it's critical for satellite and defense networks that is really data centers in space. That's the theme that I'm looking for. It is AI adjacent, but it's also the way that we desperately need compute. There was so many CFOs or people who work very deep in the artificial intelligence. Compute is critical for moving forward, and since moving forward is coming at any cost, compute is a component of that, and so that's the exposure I'm looking for here, and this is critical for that. And there's also exposure for defense networks as well. So again, my strategy, the way I would deploy this one, is a cash secured put, or I would accumulate it on a pullback for longer term exposure, especially after a parabolic move like this.
All right, and right now we're up about 6.5% just today alone for Rocket Lab, in addition to that move this month. As you look at the technical setup here, Rick, what are you seeing?
Well, rising wedge type shape here. We have our two upward pointing boundary lines converging toward each other, with our lower line being much more steep, our upper line being more modestly sloping, typically regarded as a bit more of a bearish type setup, but really it can go either way. What you'd be looking for would be a breakout beyond either of these lines. If you were interested in a cash secured put type of setup, some places where you may be looking for support based on technical factors would be these old highs here near 133, another notable old high before we had a brief pullback near about 124, and then quite a bit lower here, 99,100. That might be too far to really get any meaningful premium, but just trying to throw out the levels that stand out to me as I see them. So when we do look at our moving averages here, 5-day EMA in dark blue, we can see our weekly EMA coming in right around 135, which matches up pretty closely with our trend line here. So this gives us a confluence to watch for a potential break to the downside if you did have more of a bearish outlook, or a supportive area if you were looking for, again, maybe perhaps a buying opportunity. So we can also see our teal 21-day EMA comes in near 113. That could be another area to look for support based on our moving averages. RSI was seeing a decline here, but kind of unlike our last chart, this one is actually breaking above this short-term downward sloping trend line and crossing into the overbought area, so generating more of a bullish signal here. Upward sloping green trend line also still in play. Finally, our volume profile in this case shows that we have developed a pocket of activity here near about 123 to 132 or so. So once again, if you were looking for some kind of cash secured put area, that's the place that stands out for the heavy trading activity. Notice as well large volume spikes during our rapid ascent above our old highs here. Oftentimes, this can be a signal of high conviction on the part of traders when we see it concurrently with large price swings to the upside.
All right now seeing one of those swings. We're up 6.5% more at 144.70 right now for Rocket Lab. Now we talked about Google as our safety play or our low risk play. We've got Rocket Lab as our medium risk play. So now we have to go into speculative territory or our high risk area. And you've brought a name we haven't talked about in the big three today. You've got Black Sky Technologies here.
Yeah, you are correct. Highly speculative, highly volatile. We've got negative earnings. We're looking to turn positive. So it's something to be extremely cognizant of. And the way that I like to position this personally in my portfolio is, again, deploying via cash secured put, but also making sure from a risk management perspective, it's not a huge percentage of the overall portfolio. But again, space, data, AI theme is what I'm looking for. Black Sky delivers real-time geospatial intelligence, and they use satellite imagery and AI analytics, and they provide exposure to drone and autonomous surveillance themes. They have this potential upside is tied to that broader space sector re-rating that we might see from the SpaceX IPO, which we're currently seeing the speculation already coming in. So again, highly speculative, highly volatile profile relative to those traditional aerospace names. But I do think that there is opportunity for re-rating higher, winning more contracts. So it's something certainly to watch. I'm adding it to my longer term portfolio, but I'm also cognizant that this is the higher risk within the themes that I've brought you today.
All right, as we look at it, certainly momentum on its side this year, up about 170% so far year to date. You can see that, upward sloping channel there.
Yeah, a bit wider, a bit more of a volatile name here, as we said here, but up 371% during the past year. So really an interesting setup once again. And even poking out to the upside potentially from this channel type shape. We just drew a conventional trend line going across our lows, duplicate it, put a parallel line across the highs. That's about where we're topping out so far today. So this could be a place to look for potential resistance. If you were interested in a cash secured put, once again, the old highs here near 43 or so stand out as one possible opportunity. You could get a bit more granular and look for this topping point here near about the 46 level potentially. When we also move our chart forward and look at our moving averages here, we can see that our 5-day EMA in dark blue comes in just about 47, so that could be one area to watch as well. Our moving averages are all pointing upward. They're diverging farther apart from each other. If anything, the slope is increasing and getting more steep here, so not really any signs of trend interruption potentially at all just yet. So kind of in between the RSI here, between our first and second charts, we have a breakout above our downward sloping trend line, but we have not quite reached the overbought area yet. That would be the next step, would be a push above that 70 level, and for it to happen concurrently with price making new relative highs as well, and for the RSI to be making new relative highs. That's what you want to see if you were bullish in this name, kind of counterintuitively to the name, the overbought entry on the RSI in a trending market. It typically is interpreted as a sign of more strength to come in the coming days. Finally, our volume profile shows that we have a node that developed here, 38 to 41 roughly, kind of matching up with those old highs, so lending further credence to that idea as a potential supportive zone. Again, two volume spikes here, several spikes that were 50% above our 50-day simple moving average of volume, so again signifying relatively higher trading activity on these days where we saw sharp increases.
Yeah, and Black Sky, a much more affordable stock than some of the other names we talked about. Right now, it's up about 7.5% on the day, but trading at about 51.43. Jessica, really appreciate you bringing those to us, and for that wide range under a space theme today with a safety play and also a speculative play there. Jessica Inskip from stockbrokers.com, and of course, Rick Ducat, our lead market technician, for always breaking down the charts for us. Coming up next, we are going to spotlight the current trends moving the market and how AI has dominated those trends. That's next on Trading 360.
Stay moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey. helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
My man. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all.
Rattle the snake.
And tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events.
Google's at the 200
around the country.
So you get that opportunity to share experiences and knowledge with other traders.
IWM's at the 200. A little bit below it. QQQ's at the 200. SPX is at the 200 EMA. SPY's below support. But still above my previous one. We'll know something shortly. Need a good bounce. Oh. break it. I'm having beet salad with my famous cheese chip. MU, God, look at MU up $126. That's nuts. That's really nuts. I want to short it. LUNR looking nice. FU to U had a nice Friday morning. Or, yeah. That'll take me a loss. Got my lowest possible support. Oh God. What the hell is that? That was disgusting. SPY has a double bottom. SPY has a double bottom. So we'll see. Anybody hear that belch? Come on, baby. Come on, baby. Apple pulled back to the 200. Meta has to break the 200. Just buy hold here. Break it. George, save us.
Integration in their cybersecurity protocol is going to be key for a continuation of the trend for the last 30 days.
ZS.
The earnings estimates for the quarter, it's $1 per share, higher by 19% compared to last year where they earned 84 cents. If you look at sales, they're expected to increase by 23% to 834 million versus last year's $678 million. So I think the estimates right now seem fairly balanced going into the quarter, and of course they still are expecting about $4.02 for the next 4 quarters at the end of this year. So there's not a lot of growth estimated right now based on the next 3 quarters sequentially going forward. So it could be a situation where they have under anticipated the growth of their business and earnings, and they revise their outlook higher. Or we may end up seeing another step back quarter for Zscaler. But overall, the position of the company in terms of the financials, $3 billion in sales last year, getting close to GAAP profitability. That's important because right now they lost $67 million on $3 billion in sales. And if you just rewind to 2023, sales were only $1.6 billion. So they basically nearly doubled their sales, but losses with $1.6 billion in 2023 were over $200 million. So revenues are improving, and the losses on a GAAP basis are also getting closer to break even. So this certainly could be a pivotal quarter as well.
And Georgia, I was looking at some of their past performance, and they've beat on earnings and sales expectations in each of the past 8 consecutive quarters. Overwhelmingly, analysts have buy ratings here. It's north of 80% when I was looking. But interestingly enough, when I'm looking at their chart, I mean, you mentioned year to date, they're still down close to 20%. They're also lagging the broader cybersecurity growth in that same time frame. They're about 8% advance across cyber names. They certainly haven't seen any of that. So what's the disconnect here?
Hello?
Well, that's a good question. There may be this disconnect.
I'm working. I tried to call you.
When it comes down to their technology,
I tried to call you a couple weeks
some
ago.
of the larger, cybersecurity names like CrowdStrike and Palo Alto, which are completely diverging away now from the software space. I think the interesting thing is if you look at the identity solutions, companies like Okta and Zscaler, they're slowly creeping higher, but they still haven't participated as much as some of the larger names in the space, whether it's Fortinet, Palo Alto, or CrowdStrike. I'm just naming a few that
Not
have done
today.
exceptionally well.
Right now I'm down.
So maybe there's a disconnect right now that's being built for Zscaler as it's starting to catch up with the other names, or like I said, it could be another setback quarter for Zscaler. But like I said just a moment ago, the financials are improving. The cash position of the company is rather robust, $3.5 billion on $29 billion in market cap. So they have a lot of financial flexibility, but it all comes down to revising guidance higher. And if that's the case, you could see a gap higher and a continuation of this name perhaps getting closer to its 200-day moving average, which is still quite a bit above the current price, I believe, around $220.
And George, as we look at this name to potentially trade it for example purposes here, I mean, momentum has been on its side over the last month, but certainly not as you look at the full year or the last 52 weeks. So as you look to trade it, how would you go about structuring a trade here, especially with earnings coming after the close today?
Yeah, so with earnings coming up, Marley, there's always a lot of risk you have to consider and time, and you have to price things accordingly. And if you look at the market maker move on Zscaler, so right now the stock is roughly $189. The market maker move is $21. So that places one standard deviation move on the upside closer to that 210 area. So there's a possibility it gaps higher. I'm not saying it's going to, so just keep in mind that that's a risk, but I'm going to play this as potentially a gap to the upside and a catch-up trade. And it could also be another setback quarter, so you have to be mindful of the risk in this trade. So I'm going to structure a long call butterfly that expires on Friday, so 3 days on the 29th. And I'm basically going to buy one of the 190 calls, which is just slightly out of the money. And I'm going to sell two of the 210 calls. So that places us right at the boundary of that one standard deviation market maker move to the upside. And then I'm also going to buy one of the 230 calls to help tap off the risk. So altogether, it costs you about $4 a share in debit, or $400 a contract. So the whole premise behind the trade is it's bullish. The sweet spot is the 210. Your outlay is $400. Your maximum profit, if it hits 210 by expiration, that's the ideal position. It's $1,600. So it's a 4-to-1 return to risk. There's two break-evens, 194 high, and then also 226 low. But also what's nice about this trade is that between those two break-evens, there's a very large range of profitability, which can vary. So again, the outlay is $4 or $400 a contract, and that's your max loss outlay. And the whole trade won't work if it doesn't hit the break-even, at least on the minimum side of 194. So you have to be mindful of the risks in this trade, which is your full outlay.
And right now we're less than $10 off of that break even of 194. We're trading right now about 3.5% higher at 188.66 for Zscaler in advance of those earnings. George, really appreciate you being with us. To take a look at the expectations here and also for that example trade. Coming up next, we've got our 360 round. We're going to take a closer look at the state of the housing market amid an elevated rate environment and a pressured consumer. That's next on Trading 360.
Trade powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college education.
I'll call you back.
Someday it'll be their turn.
Yep, I love you.
bucks.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market.
Right now, I'm too far out of the money in this.
Live on Schwab Network.
I'm down $800.
It's at Walton Global, and Suzanne Miller, the owner and CEO of Empire State Properties. Thank you both for being with us today. Suzanne,
Girl, you need some sun.
We got Case-Shiller today. National home price growth slowing again. We've got several major markets now seeing outright declines. Is the housing market finally rolling over, or do you view this just as our new normal?
I think it's a new normal. I think based on what's happening internationally, we're seeing it a little bit, but we're still up about 1.7% this quarter. And overall, we're slowing down a bit, but since 2012, we've been up, and these last 5 quarters, we're down just a bit.
And Katie, you suggest that the housing story under the surface is more complicated than what the headlines are giving us. So take me through that.
Yeah, I would say that the different markets, I mean, you see Chicago up the highest, New York and Cleveland all up for very different reasons. New York is just a highly constrained market, so builders have a difficult time building at affordable prices. You've got labor unions and you've got high zoning and entitlement regulations and a lot of all-cash buyers. So that's keeping New York very elevated with the land constraint. Versus Cleveland, it's very affordable, $230,000 for a new home in Cleveland, which is also doing very well on Case-Shiller this time around. But public home builders who Walton serves, we land bank for the top public and private home builders. They just can't make that pencil. You can't go into Cleveland and build a new house for $300,000 when you're competing with $230,000 houses. And then on the flip side, the markets that have lost price appreciation, Seattle being
that's freaking cheap.
It's really just a correction. You had a lot of people moving there during the pandemic, and now it's just correcting back and normalizing. So we're not seeing really any strain.
That don't sound right.
Really any strain in any of the markets. There's no housing crash. We're just seeing really normalization, and every market is very nuanced. Based on a lot of it is based on how much land is available.
And Suzanne, I want to stay under the surface here, you know, and away from the headlines for a moment, because as we look at the home prices after inflation, it appears they're actually falling in real terms. How important is that distinction right now for consumers and investors?
Well, I think a lot of
there ain't nothing like around here.
So we're waiting on the chair, we're waiting to see what this new chairman does. And based on, I don't think it's going to make much of a move right now because he's cautionary. Because of what's going on right now, he's not going to talk about a rate change until the Iran conflict is put to bed. I think that's what's holding it, and I don't see much of a change.
Missouri used to be the cheapest place to buy a house. On our average, $255 for the metro area, $255,000. That's cheap compared to what you pay around here. Our rent has just skyrocketed for some reason. Medium-sized sale price is $135,000. Typical home value $117,000. Slightly higher medium price is $255,000. That's unbelievable. That makes me wonder, man, why our house. That's just crazy. Makes me want to move there. Yeah, they don't reflect these. These are definitely higher priced. That's kind of a neat little setup right there. Huh. Well, looks to me like I took a loss on this one.
It's not stopping people, but it's keeping everybody at hold and at bay. What surprises me about what we just discussed is Kentucky. Kentucky got 4.7 high. That's a good one. So I think that right now it's all wait and see.
Rubio says Iran deal talks will take several more days.
Generational living. I'm noticing that people want to live with their grandparents, their children. They get free child care if they live with their parents. We're seeing a lot more of those type of building going on in the future.
Really appreciate you both being with us to take a closer look after we got this new Case Shiller information and also more broadly at the housing market. Katie Hubbard from Walton Global and Suzanne Miller from Empire State Properties. Also want to thank all of you for being with us on Trading 360 today. I'm Marley Caden. You can download our free Schwab Network app in the Apple App Store, but don't go anywhere. We've got Fast Market with Diane King Hall coming up next.
I'm not out of them yet, but I might have to be. $731.10 for SPY. And we're still up there. Not give up yet. $749.14. So we got to get back above 749.14. And then I'll be bullish again. My red line support was 75.22.27 for the /ES, and we just now busted above it. Hopefully we can get back to 38. We're squeezing between the 9 and the 21. Resistance 75.17.12 on SPX. They can do it. NVIDIA's got a wedge. Yeah, it's not looking good for a lot of these. Tesla's under my resistance right now with an inverse head and shoulders. Marbell's up $5.76. Pretty good pullback from 217. Nice run on PLTR after outer high.
It could go crazy the second half of the year. There's just not a lot of negative things. Now, there's things that happen all the time that we don't see yet on the calendar that could be negative at any moment. You always have to be ready for that, but the setup for a Kevin Warsh-led Fed using different metrics and changing is really an interesting thought for the second half of the year. And I think if we get Iran and the Strait of Hormuz and all this cleared up, which I'm not sure we will, but the market could really go. Think about it. The market has been rallying since April 1st. Why? Well, it's really been economic data. It's been a calming of the U.S. and Iran. It's not over, but it's calming. And that's what I think the market is seeing. And I think some of the people that looking at the big picture are getting really bullish, Nicole.
Yeah, I mean, they are. I mean, you have yields coming down. We were at 4.6 last week. We were at 4.4 something today, right now at 4.5 on the 10-year bond yield. But yields are going in the direction that they are coming down. Market breadth, Joe Mazzoli, you noted in your notes about the improvement we've been seeing in market breadth, and semiconductors making this fire comeback. You know, you're looking at the stocks month to date up 22%, 1 year up 173%. Joe?
Yeah, no, I mean, those are monster moves. And I think one of the things that you pointed out, Nicole, about the yields coming down back to 4.5%, that's a 20 basis point move, basically, in a week. We got up to, I think, 4.68, 4.69 was the high. So to see the 10-year yield come down that much, that is that provides a nice bullish backdrop for equities. And, you know, I agree with what Kevin said. I don't have the cool Michael Jordan sprained ankle metaphor that's phenomenal. But I do look at it as a market that has, for the most part, right, a good economic backdrop. And the numbers prove it. And we've seen that in jobless claims. They've held steady and they've come down quite a bit. We're seeing inflation pick up, and that's going to be interesting. I think the core number, the core PCE number this week is really important. Make sure that it doesn't get too much higher than 0.5% in terms of the kind of the expectations. But I think that when you look overall, the package is good, and it's good for a certain segment. And we kind of have to keep going back to this, Nicole. It's the K-shaped recovery. But I think to a certain extent, as markets go up, that begets more money coming into markets. And I think that that's really important point. Is that when we talk, things like margin balances, I know you start to hear things about that. Well, margin balances are going up and blah, blah, blah. Well, remember, margin balances go up and the markets go up, right? So what you want to look at is percentage of books and percentage of margins used within books. And for the most part, some of the interesting trades that we've been seeing going on is kind of stock replacement strategy. So people aren't necessarily loading up heavily on individual names. They're buying calls in those names. They're buying call spreads in those names. So it gives them the ability to optimize some of that cash allocation a little bit more. And that's something that you've absolutely seen with the semis in the amount of kind of call buying on those individual names, or in, you know, in some of the semi ETFs. It's interesting to see kind of how all that activity is taking place as investors are becoming more and more educated in how to allocate this capital.
Yeah, you noted that in your notes. You talked about the options market and still really signifying a bullish tone. May it be sluggish or maybe, you know, sort of cautious, but still the calls are the calls, and they're showing that people are betting on the bullishness of this market. We heard that last week from Bob Lang. He was talking about NVIDIA. He mentioned 4-to-1 calls to put ratio, and I asked him how unusual was it, and he was looking out further, somewhere for last Friday. But he said the big picture, he said it's really rare to really see so much on the buy side here, you know, betting to the upside. So it shows that we are seeing that people are still betting on the rally. I don't know how much volume is always here to show that conviction to the rally. Sometimes it seems
yeah, we didn't even come close on Amazon.
Why don't you add some thoughts here? I mean, we're seeing names like Marvell
Hit my
getting
support.
upgrades, Micron getting an incredible upgrade to 1625 from 535 over at UPS with a nice price target raise. There's a lot going on in tech here, Kevin.
First one.
Yeah, listen, if you look at what the SOX is doing today, and
I need a bounce.
That semiconductor-related index is absolutely off the leash today. And why? It's demand. Look at some of the upgrades you've gotten in Micron. We're going to talk about Micron in the next segment. Why are we talking about Micron? Because it's absolutely going crazy on the upside, and people are starting to think that this demand,
it is. It's nuts.
That's coming down the pipeline for a lot of these names isn't going anywhere anytime soon. And so you're starting to hear numbers like 1929 or 2029 it's going to go out to. It's going to go significantly into the future. And so these stocks, especially some of these big names, you just look at the visualization chart of the semiconductors. And by the way, in an incredible turn of events, we're doing this without NVIDIA. This market is rallying, and information technology is rallying without NVIDIA. NVIDIA is heavy again today. So Micron, you've got Intel, Texas Instruments, Qualcomm, Lam Research, all these semiconductor stocks that are in the SOX are just going crazy, and they're all getting overbought, and their charts look absurd, but the demand, everyone's perceiving that demand is there. Is it long term? I have no idea when it's going to end and from what level. That's the big question for all traders, right? But you cannot argue with this price action, and it's coming from, let's face it, NVIDIA just confirmed what the demand is going to be for all these semiconductor stocks and these memory names, and it's not going to be small. Diane, or Nicole and Jim.
I always love Jensen Huang. He always has the best words, right? One quarter he said, it's insane. Like I felt like I was watching the old commercials, and then this time he used parabolic.
Parabolic.
He doesn't hold back on the language. He chooses it carefully to really demonstrate how incredible the demand really is. I mean, it quelled the concerns about, is the AI revolution dying off or something like that. I mean, it's still very much in full force. Joe, final thoughts.
That's right, baby.
I'll leave you with a statistic here, Nicole and Kevin. Right now, semiconductors make up 18% of the S&P 500. That is just a massive statistic in terms of their size and their importance to the S&P 500's returns. That's the highest among all industry groups in the S&P 500. Tech hardware, if you go back to the 2000s when you were talking HP and Dell and the four horsemen back in August of 2000, that topped at 25%. So we still got a ways to go before we get there, but I think it just leaves the index so reliant on a single industry group that you do just need to be a little bit careful in terms of, because we've seen in the past the harsh lesson of maybe how highly concentrated, markets can unravel. Not saying that's going to happen, just giving you just this takeaway that this move has been so important to the S&P 500 success that it's something to really focus on.
So the industry, in your notes, the industry is now the single most concentrated, the 18% level for chip makers. That weight is the most concentrated since the dot-com era on any one single industry. It really tells the story, right? We think about 1999, 2000, and everything was pretty exciting. And you mentioned 1920. You guys are mentioning all kinds of dates. You know what happened in 1999? That was the last time the Knicks had a chance. All right, so I'm wearing my Knicks orange. And since 1999, now we're in the playoffs. Wish me luck, guys. Okay, so there's that. And then coming up, we're going to talk all about Micron. I really want to take a look at the stock that is surging and all the other names. While Micron is up double digits in percentage terms, other names in the group are up 7, 8, 9, 10%. So we're going to look at that at a new all-time high. The tech stocks overall, right now the S&P is up at 75.08. Fast market will be right back.
Boom, boom. We finally broke out of a snake breakout pullback, higher low, triple bottom. Looks a little bit better. Give me a little bounce. Break the 200 EMA. I'm gonna put on a different shirt. Maybe that'll give me some good luck. We got to break the 63 on the /ES.
Inter is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy it.
Comfortable.
Invest your way with Schwab.
Always clean as Jim.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Please choose from one of the following options. For our fax number and specific information about our clinics, please
Welcome back to Fast Market right here on Schwab Network. We're watching Micron.
Please press 2.
Who's this?
Thank you for calling Vision Clinic. Please choose from one of the following options. For our fax number and specific information about our clinics, please press 1. To request a copy of your contact or glasses prescription, please press 2. And for all other calls, please press 0 or remain on the line for the next available Vision Clinic staff member.
Vision Clinic.
Thank you for calling Vision Clinic. Your call is very important to us. We are working hard to answer your calls accordingly. Please hold and we will assist you shortly. Thank you so much for your patience and we look forward to speaking with you soon.
Okay. Well. Spy snake breakout pullback. Almost ascending triangle set up. Got to break the 63. we do that, we're definitely going to probably land at 750. Right now is it. We're at the ascending triangle out of a snake. Same thing right here. Symmetrical flag though. If we break 63, it'll be an ascending triangle. I got a lot of contracts, so I don't know what to do here. I bought the dip. Got a break right now. Magnificent was right. Break it. We're definitely at a resistance here. It's either break it or not. Marley, you need to see some cleavage.
Some unbelievable speculation in Micron. So, and what Joe mentioned, there's probably a lot of people taking profits on stock and switching to option strategies just for the controlled amount of risk. If you look, I have a year chart.
It is crazy how much it's up.
$92. 92. Now it's $8.80 and going higher. So, yeah, it's been not many times in my career have I seen stocks go like this.
Yeah, I mean, I asked that same question this morning to one of the guests. I said, you know, is that kind of price target increased merited? Because it's huge. I mean, of course, Micron crossed the $1 trillion mark for the very first time, hitting new highs. It's a leader in the S&P 500 and the NASDAQ. It's up 17% and bringing the whole industry up with it and has vision going forward. So let's talk about the trades that we see. I mean, particularly since this has been a high flyer from basically $100 to almost $900 in a year. Joe, why don't you start us off?
Yeah, I don't know if I've ever looked at just doing a basic long call vertical on the show. And here's the reason why. I normally look at something where I'm collecting some type of time decay, and there's no time decay collection in this type of trade. I'm looking at the June 18th expiration, the 830, 860 call vertical, looking to buy it. I think you can probably do it around 15 bucks now.
We broke it.
Here's the thing. Nicole, this is how much this stock has rallied today. When I was pricing it up this morning, about 2 hours ago, it was trading around 13 for this call spread. Now it's up to 15 bucks. So even the call spread itself has gained in value by over 10%. So what's really interesting about this, and here's why I looked at this type of call spread.
On. Get up here and I'm getting out.
Things. Number one, the implied volatility percentile is actually really high right now. It's in the 80th percentile, which would make you think that there's some type of event that's coming up within the next week or two. But what's really interesting about this is all just because of the call pricing. Call pricing has gone up so much. And the stock has moved so much that the straddles keep going up.
You heard me talk like that, and I get scared when I talk like that.
So when you see the call pricing go up and you get the call skew pushing up into like the 15th percentile, meaning 85% of the time it doesn't trade there, buying call verticals is actually a cheaper way to participate on the upside. This gives you the ability to make about a $30 wide spread.
Call verticals.
15 up front. Like when I was pricing it earlier, it was around 13, so it's getting a little bit more pricey now. But you're not that far away from this
453.
this thing kind of breaking even already, given the move that it's already had. The other thing that I would add to this as well, when you're looking at kind of from the
That's a call vertical right there.
Micron set an all-time high today. And
God,
what it did,
450
it
to
just covered up.
490.
And then prior to that May 18th, I believe, or excuse me, May 12th through 13th pullback, when it came back and tested around that 760 level, it's now filled that gap. Which could portend another $50, $60, $70 to the upside, just kind of based upon what the charts are showing right now. So that's why I priced the strikes up the way that I did. And at that time, a $13 call vertical didn't seem that expensive, kind of given the potential. It's now trading around $15, but like I said, once again, this stock's been on a tear, so we'll see. Kevin?
Anders?
Yeah, this vertical that Joe has, and you can see how quickly they can become profitable.
Yeah.
And they are directly tied to the price of the stock. And if that chart on Micron stock teaches us anything, is that you should trade risk defined. Because imagine if you had short options in this environment. If you look at the chart of the implied volatility, it's actually higher than it was a couple $100 ago. So the implied volatility based on demand is holding at high levels. And so this is one that just simply plays the expected move. It's already going higher, but the best thing about it is it displays a perceived direction in Micron, but it's risk defined. You don't have open, the risk on this trade is the debit paid. Now, Joe, I looked at something to the bearish side. I wasn't a happy bearish person. However, we don't know if Micron right now is overvalued. Is it still grossly undervalued like some analysts say? We don't know. They don't ring a bell when these valuations turn or when the stock turns. So what I looked at is the 1 week, buying the June 5th, selling the May 29th, the $750 put calendar. Why am I doing that? Well, the stock is overbought, and it could, it's already up $130 today. Could it retrace? Of course it could, right? That's why. If you want to protect long deltas that you already have or long stock that you already have, this is one way to do it. And so Joe, yours went up in price. I put mine originally in at $9.25. It's actually, Joe, think about this.
Tipton, get out of this.
My $750 put calendar has gone up in price, despite the direction going away from me, favoring yours, which you think should make my bearish trade go down. No, it's higher than what it was. And why? Implied volatility, and what Joe talked about in terms of implied volatility. So both these option plays are higher, the bullish one and the bearish one. Why?
Now it's at
because
380.
mine is long Vega. Mine is long a week out and short this week, and that long Vega implied volatility is exploding, thus making my put calendar more expensive. Joe.
Boom.
So, two takeaways.
Here we are,
Around
resistance.
Early 2000s, when you were just long premium.
We're at resistance right now on the SPX. If this breaks here, we're flying. So I'm tempted to sell and buy the dip. We have more room on the /ES. Back to the VWAP. But on the SPX, we're at the 200. Tempted to take a nap. That call vertical's down now, $70 contract. I'm not in it. I'm just watching it, trying to learn. And I got the 18th, or the 12th of June. And that's at 4:02. Hello? Make sure you got a tracking on this number. Now we're moving 1010. QQQ broke the 200, and so did the IWM.
For cash tax. We bring in Andy Swan, co-founder of Likefolio, and we're taking a look at Dick's Sporting Goods ahead of the company's earnings due out tomorrow morning. We look at some of the trends in Dick's. The stock has been
Andy don't look happy either
lately. And joining me, Andy Swan, to give us some of your trends that you're seeing.
Yeah, the trends that we're seeing for Dick's Sporting Goods look pretty good. The tailwinds that they have are pretty incredible. When you look at youth sports now is a $40 billion industry, with baseball spending alone up 70% since 2019. Seems like parents can't get enough of youth sports. They can't spend enough. They'll do anything for their kid to have any perceived advantage, and sometimes that means a $450 or $600 bat from Dick's Sporting Goods. And Dick's is doing a really good job of capturing these parent wallets. You know, when you look at the consumer demand levels for Dick's Sporting Goods versus peers,
I've seen guys with the best bats and they still can't hit like I can.
In a big way, you know, outperforming Academy Sports, outperforming Hibbett Sports in a really big way. So when we look at this, we also see Nike.
I always thought bat was important, but not that important.
As a big beneficiary to Dick's, they're starting to sell back through those stores instead of being so focused on direct to consumer. So Dick's has a lot of tailwinds going for it, and they're executing really well against those. The only question right now, I think, is valuation. The stock's near 52-week highs. It's a tough bar to get over for Dick's in this earnings call, but we think that they can do it. They have the tailwinds behind them to create what we
better just get out of this.
Andy, this company, with everything I read about,
I don't think I'll ever be able to get where I want to be.
I have a Dick's about 1.5 miles from my house. I spend a fair amount of time there. And
what?
This store and how they keep it evolving. Right now, you go up the center aisle at Dick's, and it's all World Cup. it is World Cup everywhere up that center aisle. Everything else is the same, but they have really moved that store towards focusing on World Cup jerseys, everything that you want to know. But they're really, in my opinion, this Foot Locker acquisition, remember, it was very unpopular when they did it, but you put Dick's management style into Foot Locker, and now maybe you've got a franchise that has a chance. And you look at all the other things that they do with kids sports, like an app organizing kids sports. Their one company, it's Game Changer. Game Changer's the kids sports. The House of Sports is the experience, right? Where you can ice skate or do all these other things. It's more playing sports inside. And my take was they just keep expanding their look on sports. And you're right. Parents now, they're more into sports than they've ever been. Why? I think it's a relationship thing. If your kid's on a team, he's got built-in friends that all have the same ideas in mind. So Dick's, it's amazing how they transform that store and keep it up to date. And it's amazing. Nike is still in a prominent spot. Under Armour over in the corner now, where it used to be right in the
double
middle.
top.
It's amazing how brands move in and out of the main area. And Nike obviously is a big footprint there.
Yeah, it's huge, and I think you hit on something really important, and that is Dick's Sporting Goods knows how to execute really well in retail space, whether it's their House of Sport mega store, where they're actually, they've got golf simulators, batting cages, subscription services for kids and adults alike to come in and play their sport when the weather's bad or practice their sport and get analytics. They're making more money on those per square foot than they are on the retail stores. And just like you mentioned, the app Game Changer, they're getting $150 million a year of revenue from that app, and just added AI coaching to it. So you can expect that to expand. This is a company that just executes really, really well. And when we look at a company that has a history of really strong execution,
they don't have much competition,
of being nimble, of being able to get on trend, and then we throw in the fact that they have two major tailwinds: the Nike unwind of its full consumer strategy and going back towards wholesaling, plus the youth sports absolute bonanza that's going on right now. Those two tailwinds, plus the execution mastery of Dick's Sporting Goods, gets us pretty bullish on this stock, especially in the long term.
And they're really the one and only mega store. I know there were others up there, but when you think about where you go to for sort of everything sports, Dick's always seems to come to mind for folks. You mentioned all the different collaborations and what they're doing, the in-store experiences. They have the Synchrony credit, the Dick's credit card, where you can offer members 10% back and scorecards.
I don't like their website.
There's all kinds of things, collabs and happening, the in-store experiences, also just the monetization of its media network they've been talking about, and that the quarterly comps year over year are due to re-accelerate. The last thing I'll mention is the coaches. I didn't even realize that they have an AI coach, a coach by Dick's, for athletes at any sport at any level. I mean, how would you like to have your own coach, kids? It just seems like they're doing a lot of things right at this point, and the stock is really showing that too. The question is, can they continue at this pace here? Because now they're really, starting to run up in a good way over 1 year, up 33%.
Yeah, you got lucky for sure.
Are these drivers going to continue here, Andy?
Yeah, we think that they are. They seem to be accelerating. I'm with Kevin.
He's
you
with
look
Kevin
on X or somewhere like that, and people talk about all the money that people spend on youth sports and how everybody's chasing scholarships, and it's a terrible ROI. But that just completely discounts the social aspect of sports that both the parents and the kids benefit
Three Black
from.
Crows.
Some of our greatest experiences have been raising our kids and taking them to youth sports events and meeting other parents that we would otherwise never meet and hang out with, Marriott hotel lobbies and things like that till midnight.
Might take a nap.
Good time. So I think that when people boil it down to just a numbers game, they don't understand exactly what's going on. And I think that Dick's Sporting Goods does understand what's going on and does feed into that, lean into that, and capitalizes on the fun, expansion of youth sports that's happened really around the world, but definitely in North America. And we see that only continuing to grow.
All right. Well, I think, yeah, go ahead, Kevin.
I mean, I'm sorry. The world we live in now, in a lot of areas, is sports crazy. I'm a recovering hockey parent, so I know. But here's my question, Andy. You're starting to hear or read about that Dick's is going into malls, and when a store comes open or a big piece of real estate comes open, they're starting to go after some of the mall space and bring Dick's. A lot of Dick's are standalone stores. The one near my home in suburban Chicago is a standalone, but they're starting to infiltrate malls and bring some of these products, and there's so many of them, into the malls. Are you seeing any data on that?
Yeah, I think that's also part
I have a few left.
Locker acquisition is that they got some expertise in mall strategy from the Foot Locker acquisition, because you remember most Foot Lockers, if not almost all of them, were in a mall. Here in Louisville, there's a Dick's that is a standalone. It's a pretty great store, but there's also a Dick's that is front and center of the major mall, the biggest mall in town. And the foot traffic that goes through there, just people wanting to get into the mall. And like you said earlier, the way Dick's has been able to, make so efficient their square footage from a revenue perspective and really key in on what the trend is at the moment. Everyone walking through there gets fully exposed to the sport or the trend that is happening now, and how Dick's Sporting Goods can sell them something on their way in or out of the mall. So I think it's a good move, and I think that the folks that they got from Foot Locker in that acquisition are certainly helping in that strategy.
Yeah, location. When it comes to where they are in that mall, Andy Swan, co-founder of Likefolio.
We got a triple bottom here.
Thank you so much. And Kevin, before you go, I would love to see your thoughts on an example trade. How you would go about trading a winner like this ahead of the earnings or after the earnings? You tell us.
Yeah, so as glowing as this segment was about Dick's, we still have to come to the realization that the stock has rallied into their earnings. I mean, it's rallied from a level of, just a week or so ago, it was 207, now it's 230. So they've taken, about a 10% move on the upside already. So what do you do about that? You want to be bullish, but you also want to be able to be profitable if you're wrong. And so what I looked at, they don't have weeklies, by the way, which is a significant note that you have to make. So their first expiration is June 18th. So I looked at the expected move for the next day, about $17. Then I looked at the expected move out till June 18th, which is $26. And that's how I formed my strike selection, Nicole. So what I did is I went something just around in the middle or slightly lower than the expected move. So I went $20 out. I sold the 210 put and bought the 200 put, but I went out to the June 18th expiration because I have to, right? So I gave myself enough room where this stock could sell off $20 and I'd still be profitable. So it's a bullish trade, but it's also a neutral trade. If the stock just stays right where it is, you are profitable on this trade. I collected about $1.80 in credit. It's over $2 now in credit. So the risk on this trade, and it's risk defined, is the width of the strikes, in this case $10, selling 210, buying 200, minus whatever credits you take in. So if you take in 180, it's 820. If you take in $2, it's 800, right? And so you understand the risk defined nature, and this is a high probability trade because you're in line with the expected move out to that June 18th expiration. So you're bullish, but the stock can actually go down and you can still be profitable, Nicole.
All right, Kevin Hanks, great to see you. Thank you so much. Good luck there at Dick's at 2:30 today. You got your example trade. You got the insight from Folio. Coming up, it's the breakdown here because George Sillis will join us and take a look at Zscaler ahead of the company's earnings that are due out this afternoon. Zscaler has gone from 336 down to 114. It's been clawing its way back. Let's see what he has to say. Fast Market will be right back.
The Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market, right here on Schwab Network. I'm so glad you're with us. I'm Nicole Penelides at the New York Stock Exchange. Let's take a look at where markets stand. We did hit records today for the S&P, the NASDAQ, and the Russell already, but things have come off the earlier highs of the day. In fact, the Dow Jones Industrial Average is now in the negative. While tech and industrials and materials are showing strength, you are seeing some weakness, of course, in energy, consumer staples, and discretionary healthcare and financials. We are seeing the S&P at 75.10, up 36. The Dow's down 131.
Oh, there she goes. That ain't no good.
We're watching Zscaler. Zscaler is set to report its third quarter earnings after the bell today, and analysts are expecting earnings per share for $1, with revenues growing more than 20% to $834 million. The stock was hit hard during the SaaSpocalypse, but has since recovered.
Back to my red line now.
Of its April lows. So right now it's trading at $189. The low in April was $114. Joining me right now to break it all down is senior markets correspondent George Sillis. And we take a look at Zscaler, and the question is whether or not, there's enough to go on there. Some of the analysts were saying there's limited, meaningful growth possibilities for this name. What say you about this name?
Well, this will be interesting, I think, Nicole, because, first off, we know that the cybersecurity names had really been tied together with the SaaSpocalypse, if you will, whatever it's called, in the software space. But we've seen a significant divergence occur as of late with Palo Alto, CrowdStrike, Fortune, stocks that have done extremely well, and they're hitting some new, in some cases, 52-week highs.
I'll be right back. I'm going to take a break.
Some of the other identity access solutions-based companies like Okta, they are starting to show some improvement as of late. In fact, if you look at Zscaler over the last 20 trading days, the stock is up about 39%. So it's still down over the last year by 28%. And in fact, if you look at last year's levels, which are approximately $335, going back to November of last year, the stock is down still significantly from there. I think a couple of things are hitting Zscaler that may not necessarily manifest into some guidance that is revised lower. CrowdStrike and Palo Alto have actually been moving into this what's called mid-tier, single sign-on logins, if you will, or internet identity security protocols, and that's really crowded out Zscaler's business. But at the same time, if you look at the agentic AI growth in Zscaler's business, plus the fact that application access through the internet can be done through Zscaler's technology without actually having to log into a corporate network, that's actually quite compelling because it mitigates some of these lateral cybersecurity threats. And with that said, that's very unique to Zscaler. If you look at the EPS numbers they're about to report, as you mentioned, $1 per share higher relative to last year's 84 cents. It's essentially around 20% approximately, with sales of about 23%. But I do think if you look at Zscaler's trailing sales, over $3 billion, that's nearly double where they were back in 2023, where the company generated around $1.6 billion. But overall, they're getting closer towards GAAP profitability because last year they lost $67 million on $3 billion in sales. But if you just rewind back to 2023, they still lost $200 million on less sales of $1.6 billion. So they're getting closer towards that GAAP profitability inflection point. So if they demonstrate organic growth outside of acquisitions, as well as average recurring revenue that's higher, we may see a continuation in the last 20 trading days to the upside in this name.
The moves that we're seeing, I mean, you mentioned names like Palo Alto, CrowdStrike. I'll throw in Fortinet because I do have a guest later, Luke Lloyd, who's going to be talking about these names. So I did some research on them, and they all have incredible charts moving to new 52-week highs today or this week. Incredible takeoff for Palo Alto and CrowdStrike and the like, jumping back. And so while Anthropic's Claude was supposed to really crush some of these cyber-related names, we're really seeing the comeback here for these names. You know, they're not left for dead yet, and so the moves are unbelievable. Final thought here on Zscaler.
Well, you're right, and that's the trick with this, Nicole. That you know, the rising tide isn't lifting every cybersecurity name. Like I said, the identity access and remote login companies, Zscaler and Okta, by the way, is going to be reporting, I believe, on Thursday. These two companies are still underperforming the rest of the cybersecurity names. So I do think that either some mention of competitive threats, not just from Anthropic or AI, but from larger players in the cybersecurity space like CrowdStrike or Palo Alto. If Zscaler can demonstrate that they've thwarted some of those competitive threats from the same very similar names in the cybersecurity space, that might still be a positive catalyst for this name. But you got to keep in mind that it's still trading below its 200-day moving average, Zscaler now. And that could also be a barrier to a continuation of the upside as well.
Yeah, I mean, right now we're seeing the up arrows. It was supposed to be Anthropic Claude's Mythos that really sort of crushed these, and they all made this comeback. George Sillis, thanks for the coverage on Zscaler in particular ahead of the earnings that are due out this week. And we bring Kevin Hanks back in here, taking a look at your example trade for this name. Some of your thoughts here on Zscaler, Kevin.
So I think there's good news and bad news when you think of Zscaler. Number one, it's made a nice recovery off its lows and the pressure that was on it when software was under pressure. But if you look at its performance versus CrowdStrike, not nearly as well. How about Palo Alto Networks? Not nearly as well. It seems like it's a distant third to those two names. So when they release earnings after the bell today, is it going to recover and maybe pick up the pace? The expected move, Nicole, is right around $23. The stock's trading just under $190. So what I looked at is something very risk-defined an upside play in line with the expected move for Zscaler. I bought the June 5th 205 call, so about, you know, if you look at it, about $15, $16 above where it's trading right now. I sold the May 29th 205 call. I did that for about $1.40. It's trading about $1.25 now. So Zscaler just not performing as well as some of these others, but if it does move towards 205 or $205, you know, you've got only $1.25, something between $1.25 and $1.30 at risk on this trade. And so the 1 week call calendar that's risk defined, that's collecting theta, again, that's long Vega that we talked about in the first segment, and this is one that you're looking for a move towards $205. You have a little room in the middle, but you certainly don't want it to go to 230 on this move, Nicole. So an upside call calendar for about $1.25 debit.
Yeah, well, thank you for that. And you're right, it hasn't performed as well as some of the peers, and we'll have a few other names in tech, Salesforce and Snowflake coming out tomorrow, HP. So we'll have a lot to watch tomorrow and the next all week long. Thank you, Kevin Hanks. Good to see you here on Fast Market, friends. Thanks for being with us. I'm Nicole Petalides. I'll see you at 2 o'clock for the watch list. Please join me then. Keep it right here on Schwab Network. Next Gen Investing is coming right up.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, any SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
I'm Sam Bartis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we have seen some market strength as we kick off this shortened trading week. As of course, we've seen a lot of that led by technology, propelling the NASDAQ higher, which is the biggest real outperformer of the four major averages, but also as traders have weighed the prospects of now this potential U.S.-Iran deal hopefully being reached in the coming days, although we're still waiting for some further clarity on that. But we are higher by about 1.5% here in the NASDAQ, also seeing strength across the other major averages. The Dow is looking a bit weaker here as the day has gone on, but overall a move today. It seems like that was propelled mostly by a lot of these tech-specific names, Alex.
Yeah, maybe even zoom in more. It's more the momentum and memory chip makers that are driving the action. Memory as a subsector is up 13.4%. We'll talk about one of those major players in a bit. momentum as a factor of 3%. Hardware broadly is measured by the SOX index over 3.5% higher, but it's not alone. It is kind of broader tech strength. It's not every software name. As Microsoft's lower, Palantir spent much of the day lower. It's higher now, and a name like ServiceNow is lower. But if you were to look at a basket of software stocks, up about 30 basis points or so. So it is a tech-driven market. I think how Sam Vadas and Nicole were framing it is sort of it's the new economy versus the old economy. Sort of the new economy stuff, this AI-driven stuff, is doing a little bit better today, which, if you look at the last 3 years, it's been the place to be.
It has been the place to be. And I think actually a good call out, because I was looking at so much of the memory trade. I was looking at the broader memory ETF, but actually if you look at the Max 7, it's not that red today. We were seeing some weakness in NVIDIA to kick off another week, as well as Meta looking unchanged, and Microsoft also slightly lower here. Amazon down too. So yeah, kind of amazing to see actually that strength in the NASDAQ without the full participation of our mega cap heavyweights, of course, those being a lot of the Max 7. But we will kick off our next hour of coverage with several of today's movers to keep on your radar. We'll also discuss the continued upside in both Western Digital and Seagate Technology following several bullish analyst calls. And keeping with our tech focus, we'll talk through the near now 9% move higher on semiconductor today. And we'll close out the show with Under 30, diving deeper into Pony AI's recent report with its robotaxi revenue nearly quintupling this quarter. So a wide variety of some of these big movers, as we're seeing some broad strength again, if anything storage and memory related. That's really what's driving a lot of the gains, it seems like, in the NASDAQ here.
Yeah, let's talk one of those stories. Micron is a big part of that story. It has been a big part of that story really for the last, I don't know, let's call it 12 months, but really accelerating since the end of March. And sort of when the market attempted to bottom post this, well, even though it's still ongoing, let's say post the sell-off, the initial sell-off around the war. And really since the beginning of April, it's been a one-way ticket to the upside here in Micron. No different today. It's accelerating today. 17.8% to the upside. I mean, I'm not gonna say I haven't seen anything like it, because we have, but I mean, historical type moves.
Historical, I mean, today up another near 18%, and I mean, not really seeing any signs of this slowdown throughout the session today. This did propel shares to then touch a $1 trillion market cap for the first time, making it then the 13th company to join that very elite trillionaire club. Now, we have pulled back slightly, so I believe we're just hovering right below $1 trillion now, but still, pretty big deal, especially following this UBS note that is more than tripling their price target, pointing to really this structural shift we're seeing in the AI memory market. So they maintained their buy rating, raised their price target to $1,625 a share from $535. Now that does imply roughly 116% upside from where we closed on Friday. But their bullish thesis is centered on what they described as enhanced long-term agreements in the memory market, going on to say that unlike prior off-take agreements that were largely tied to volume, the new agreements do include extended durations, fixed volume commitments, and partially fixed pricing. So these agreements, which typically span 3 to 5 years, they believe could give Micron now a smoother revenue and earnings trajectory, higher cross-cycle returns on their invested capital, and just better visibility overall into their committed customer demand. They also went on to say that, I mean, they're pretty optimistic as far as earnings estimates. They now expect earnings per share of roughly $155 in 2027, 167 in 2028, and 117 in 2029. Each of those was raised substantially from their prior forecasts, and they expect earnings to remain above $100, a level that they see as evidence of this AI structurally driven change in the memory market. But did note that this is not without risk. They did warn that if demand for high bandwidth memory chips weaken, shares could fall to 250, representing roughly 66% downside from where we closed on Friday. And so that, I mean, a wide variety of expectations there. We do get earnings in late June, so they always report to me either at the very tail end of the earnings cycle or the very, very beginning, I guess, depending on how you look at it. I call it the tail end. But I mean, a name that just continues to impress. Now Micron shares are up 211% nearly on the year.
Well, longtime fans of the show will know that my favorite way to discuss market cap is in the units of the business value of Starbucks. And okay, when we've talked NVIDIA, we've said, hey, oh my gosh, the stock's moving around like, 2 Starbucks in a day. But we're talking about a $5 trillion business. Well, Micron isn't even a Mag 7 name. It's breaking into like that top 10-ish zone. It's up 1.25 Starbucks just today alone. It's up about $145 billion. Well, Starbucks, the market cap of Starbucks is like $115 billion. And the reason I use Starbucks is it seems like it's on every corner in major cities. It's all over the country. You're in a random small town. They've got a Starbucks oftentimes. And you think about the scale. I think if we went on the street and we were just to poll random people, like, do half of the people even know what Micron is?
No chance. I would say that I think that you might have been able to say I've heard of this company, yes, because I mean, like, sometimes you can see like what chip your PC or your processor is using. Maybe I'm just too much of a nerd. I am aware of that, but I think most people cannot tell you what they actually do.
Well, yeah, and this is my point. So it's not to say that it's not worth that. It's not to say that it can't go up. It is. It's just more to say just like how compelling that is, because I think everyone knows what Starbucks is to some extent, and is familiar with their scale. And there's levels to this, as Micron now just moves more than that in one day, all the value that Starbucks has created for investors throughout its history. But let's talk AutoZone. So certainly a step back in terms of market cap, but a step ahead in terms of stock price per share, despite the fact that the stock is losing about 10% of its value today.
Yeah, pretty big move to the downside. So not seeing all things higher, obviously, as there are some select names seeing some pretty big downside. AutoZone, no exception today. Now, we did see that they reported better than expected quarterly earnings, but disappointing international growth. So earnings did rise from last year, also did exceed forecast. Revenue totaled $4.84 billion. That was below consensus of roughly $4.86 billion. Same-store sales jumped 5.5% from a year ago and roughly 3.9% on a constant currency basis. So that being said, sluggish international growth was something of a concern, where same-store sales rose 1.6% from last year. And on a constant currency basis, in Mexico and Brazil, namely, two of their international markets were even weaker. This was also a slowdown from the 2.5% growth we saw in the second quarter and about 1.8% growth from that segment last year. So they did specifically call this out. Their CEO did say that while this performance has been below their plan, they believe the market share continues to grow as they outpace their competition in both international marketplaces. So all that being said, we're down about now 10% roughly on the year. You look at some of its competition, that in O'Reilly down about 3% this year, and Advance Auto Parts, which is actually up by about 40% this year. It has been a longer-term story of pain for AutoZone, unfortunately, with a new 52-week low today.
Let's talk this Ferrari story. So it's not even a story; it's news. They launch or show their first all-electric vehicle. It's got 4 doors. Kind of looks like something that might come out of Tesla or Lucid or maybe even Rivian or Neo or one of those companies, and stock straight down.
What's it like?
No love from the investors in Ferrari. And, look, I don't claim to be a Ferrari fan or have any even ambitions or desires to own one of those type of cars. Never been my thing.
Not mine either.
That said, we talked about this with the F-150 Lightning. You just got to know your customer. Is the customer that buys a Ferrari, wants this big, fast, loud, flashy thing, really want an electric vehicle?
I know that's I feel like where there's a disconnect, and actually I have seen some of the commentary on social media that has not been hugely positive, following, of course, the company unveiling its first ever electric vehicle at an event in Rome. It is named Luce, which is the Italian word for light, but it was created actually by a former Apple chief design officer, selling for a starting price of roughly $640,000. So it is expensive, to put it lightly. Now, it has, again, received some backlash almost instantly on social media for its design bearing very little resemblance to what we have seen from Ferrari's slate of cars historically. The car can accelerate from 0 to 60 miles per hour in less than 2.5 seconds, and it has a top speed of more than 190 miles per hour. This also does feature now a built-in system that does amplify the sounds of an electric engine in really a bid to mimic the roar of a traditional car, which I was reading someone that is a Ferrari collector, so they claimed, and said that they feel this is gimmicky and not something that's necessary when, of course, you're, again, spending a pretty decent amount on this car. We don't want it to have noises that basically mimic traditional vehicles, which I thought was an interesting call out, and I think an interesting position to be a Ferrari collector. Very cool. But Luce is their first ever 5-seater vehicle. They did also scale back their previous guidance about electrification back in October, but said they still expect about 20% of their lineup to be electric by 2030. So this, I can imagine, is one of the first real pushes that we'll see, but first but not last, of them further getting into this electrification market. Very interesting though, because again, going away from that like historical look of a Ferrari that has been so consistent since their inception, I think that's where we have some of that mismatch. And I kind of agree. It's like, know your target audience here, but at a price tag of $640,000, I can't imagine this will have that mass appeal that, say, a Tesla Model 3 or like a Rivian R2 is attempting to sort of grab.
You know, I was catching on my way in a look and an interview of the CEO of Ferrari and kind of getting some questions about it. And it was sort of this, it almost felt combative when I was watching it. And it was like a question around, like, have you invested too much into this, like into the R&D and everything? And like the answer, you know, I'm paraphrasing, but I don't know that I'm paraphrasing that much, but it was something like, no, we're spending the exact right amount of money into this. And it was just like, okay. But
way to double down, I guess.
It doesn't look like the street is a huge fan of it. We'll see if it flies off the shelves or not. I mean, it's expensive. I don't think they need to fly off the shelves, but like the Cybertruck, you see them now. Like I kind of doubted whether or not that would have mass appeal, and it kind of has almost like the Hummer of the early 2000s, where like they're not for everybody, but you see them on the road. So maybe in a lesser extent, like how often do you see a Ferrari anyways, but maybe for every 10 of those, you'll maybe see one of these Ferrari. Maybe that would be a win.
Yeah, that would be a win. And I would be curious to know like what their margin is on that car, because again, it has such a high price tag. But as we know, I mean, even Lucid, which is a more luxury EV maker, they are still losing substantial amounts of money per each vehicle.
I've seen a few of those now, which they're good looking cars.
They are good looking cars.
But again, we'll see. Let's talk, the Knicks. We don't talk sports much, but this is pretty fun. First time since 1999. So not only the market going up like it's 1999, but the Knicks back in the NBA Finals. Look, NBA is not my thing. I'm not going to pretend to be a huge fan, but New York loves its basketball. So, hey, congratulations to the city of New York, and most importantly, perhaps, congratulations to Madison Square Garden.
No kidding. So Madison Square Garden has been actually a really nice performer, especially as the New York Knicks did give, of course, shareholders of Madison Square Garden a nice boost when they defeated, of course, the Cavaliers 130-93 in a blowout, capping off then a 4-game sweep in their Eastern Conference Finals series. So the Knicks will now face either the Spurs or the Thunder in the finals. That
we
will
break the 200. I'm going to get back in this trade.
Sports, the owner of the Knicks as well as the New York Rangers, did also get a nice lift, and so that is not only been due in part to the fact that they will be
got another setup
in the NBA Finals for
rising
the first
wedge
time since 1999, but shares have risen this year pretty substantially, so especially after more so stagnating for the previous 8 years. But the value of these sports franchises has, of course, rocketed recently, especially as we have also seen NBA franchises like the Lakers and Celtics selling for roughly $10 billion and $6.1 billion each in the last year. So MSG
God, you look
Sports is
skinny.
Planning separating the Knicks and Rangers through a
Little bitty
tax-free
arms.
spinoff, which could unlock further value for these shareholders. But the holding company has a market cap of roughly $8.5 billion, while the Knicks and Rangers are likely, again, estimated to be worth roughly $13 billion when combined or more. And so definitely does help that, of course, a win never hurts the value of your franchise. And I will say that there's very few sports real franchises that are followed as closely as everything that does feel like it comes out of New York. So a very, very loyal fan base, and MSG shares getting a nice lift today.
Well, what's kind of fun, too, is that this MSGS, which is kind of one of sort of 3 different options that you would have, let's say choice, option's the wrong word, choice that you would have from an investable decision in this sort of Madison Square Garden sphere.
That's a nice one right there.
The MSGS, which is literally just the Knicks
I like that
and
one, too.
The Rangers primarily, and so that's the one we have on the screen. MSGE, which is their entertainment, sort of more their, let's say the venues So the actual MSG, Radio City Music Hall, and then of course the Sphere Entertainment Group has that Sphere out in Vegas. But these are all kind of, you know, the James Dolan, you know, babies. And hey, good time to be a shareholder in MSGS whenever you have a team competing for a title, especially when it's a big market franchise like the Knicks. That said, either the Spurs or the Thunder. Look, I'm a bystander.
I got to make back some money. Period. I shut my eyes for a few minutes back there. Had to get away from this. Race got too involved in wokeness. Looks like it might have had a bounce. No. Yeah, it did. It came back. Bounced off the 200. Now it's below the 200. There's another one too, Ferrari and another sports car. contract orders.
From a heavy trading perspective are here and here, which are 427 to about 445, and then 463 to about 485, with the 463 to 485 area being much heavier in terms of our recent activity here. So that could be one supportive area to be on the lookout for. The lower node in this case lines up with those recent relative lows, so also that one stands out as potential support, Jenny.
Okay, and obviously making a very nice near 9% move to the upside today. And so now as we do think through trading this name, for example, purposes, Alex, leaning into a pretty solid uptrend. I mean, it's hard to fight the trend right now.
Yeah, if you're going to go with the trend, I think there's two ways to think about it. Now, the strategies, there's multiple ways, of course, endless ways, one could say. But one would be sort of neutral to bullish and say, hey, let's give it some space, see if this continues. That's what we looked at here. And what this is exactly is telling to put vertical below the market. So most importantly, first and foremost, it's risk defined. And so there's a higher probability of success with a break even below the current share price and below some of those support levels. It's a 495, 490 put vertical being sold in the June 18th expiration. The trader would look for somewhere around 30 cents for every dollar of risk, and that would get you to $1.50. So assuming you got that $1.50, that would be your max profit on this trade. With a break even at 493.5, you subtract that $1.50 from the 495 short put strike, and then the risk is what's left. So that risk is 350, and that takes place below 490. But what this does most importantly, Jenny, is it gives the trader some room in the event that the stock moves down a little bit or just stabilizes, it goes sideways, given the volatility being extraordinary in this space as of late.
And it has. And I mean, I definitely think that while the volatility has been favorable to the bulls, obviously we can expect the give and take that naturally does tend to occur. So always important to be risk defined there. But now to shift into another name that has been a really nice outperformer also in the broader memory and storage space, that is Seagate, which is up not as sharply
Okay, here we go
as
again,
Western
double
Digital
bottom.
Micron, but again, a really solid outperformer.
Yes, up a comparatively low 655%. So
right.
Very extreme.
Didn't want to
price
break
movement
resistance.
here, and really a chart that looks similar in many ways here. So kind of the same situation I was describing previously, where you could, one, draw a trend line going from those lows to give us this white line that we could see that's a longer term view, or two, you could start from this gap level and give yourself this channel type shape here. However, the trajectory when you combine them is a little bit different here in this case, kind of giving us another new high, 852.86, poking above those old previous highs here. So a setup that also shares some of these other similarities of strength in terms of our price activity. Our relative low, in this case, 693, comes in at a old high point too that we established right after that gap to the upside. So that's one area that's
75.20s.
The gap could be filled here around 593 as well. When we assess our moving averages, in this case here, our 5-day
My confidence level got sucked out of me here.
809.60 or so. Our teal 21-day, in this case, lines up with our white trend line there. So that one comes in near 742. So that also presents
snake breakout, pullback, boom. I don't really see. I see a head and shoulders and a double bottom. So I see a horizontal. to the right. That's the /ES. Let me see here. 255. The 75/20s. Come on now. Enter at your own risk. 75/20s at 255. Break the 9. Call that a Darvis box with a head and shoulders with a double bottom. Down $25. Break it. Bingo. 295. We got to break to 63. Not feeling too good today, folks. No, don't drop. Yeah, it's very choppy today. I was up $40 there for a second. Contract. Now I'm back to even.
The AI narrative, can really add some enthusiasm if it starts to pick up speed.
Yeah, and I think a good way to sort of describe the recent volatility and, of course, the momentum to the upside that we have seen now in ON Semiconductor, which is up about 9% today. And so, I mean, a name that has continued to really impress, frankly, and has not really shown much signs of slowing as we're up another 25.5% so far this month. Of course, expecting to close out the month of May on a really strong note for a lot of these tech names. But so appreciate Jeff Pierce, for all of that breakdown. But coming up next, we will discuss how investors should position for a market that could become more volatile and further dependent on stock selection. So more on some of these macro trends to watch when Next Gen returns.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the
Now
Schwab
I'm
app
looking
and
good.
stream live
Go.
coverage wherever you are.
Triple top. We got a head and
Morning
shoulders.
movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network.
Welcome back to Next Gen Investing. Now, Eli Lilly is making a major push into vaccines, announcing almost $4 billion in deals to acquire 3 biotech companies. So for more details, we're joined by Sam Vadas, host of Morning Trade Live and Market on Close for the Schwab Network. And so, Sam, walk us through this news and what really this means for Eli Lilly's growth now going forward.
Man, up, down, up, down.
Good afternoon to you, Jenny. Well, I mean, it looks as though it's basically expanding its portfolio, diversifying really on the success of what it's seeing with what it's been good at and where the demand has been, and that's been obviously in the GLP-1s.
Where's Big Bang
really
been,
helped
baby?
propel that growth, and now it's basically using that cash that it has on hand, and plenty of it, to reinvest in other areas. So this is basically its foray into infectious diseases, as you say, with 3 vaccine developers. It's going to buy now deals worth up to $4 billion here in total. We've got the breakdown here on the screen with respect to how much cash they're actually looking to deploy here for each of these acquisitions. So this is really a shift for a company, as I mentioned, that is known for really leading the way and predominant in the weight loss business and also diabetes. I mean, the background is that Lilly has dabbled in infectious diseases before, including COVID-19.
Triple top, didn't hold well.
But if these latest acquisitions are successful, then it could be a lot bigger part of its portfolio, and something for investors to obviously consider here, beyond just diabetes and obesity and also cancer here. So the plan is to buy Corrivo, LimaTech Biologics and vaccine company. So these are the 3 on the screen here. Just to break down exactly what these companies do, Corrivo is in the business of shingles vaccine. So it's past the mid-stage clinical trial stage. It's expected to be years off still becoming commercial. There's only 1 approved shingles vaccine out there currently. LimaTech, for instance, is making vaccines for
I had shingles shot.
bacterial pathogens. It's working on a staph
2 of
vaccine,
them.
which can be given to people before surgery. And vaccine companies making
Couple
vaccines
years
for,
ago.
Epstein-Barr virus, and currently there's no licensed vaccine so far. So what you've got is a handful of vaccine or drug makers or company basically in these kind of early stage trials that aren't yet sort of licensed or commercialized, or there's not much alternative out there on the market. And so this is what obviously Lilly is looking at as far as opportunities here, where they've not yet been approved, or there are a few options out there in the market. So back to my
shingles
shot.
shot.
I mean, Lilly has plenty of cash to splash, and that really is the story here. It's made a lot of money on the success of the GLP-1s, the Zepbounds, the Mounjaros of the world. And the big
It's a
question is,
nasty
what is it
thing
doing
to
with all
have.
of that? Well, it's taking all of that growth and it's reinvesting it, and that's what we're really seeing. And it looks like it's being rewarded because shareholders are liking what they're hearing. Investors obviously reacting positively to the news today, up 1% right now. It's not just been obviously acquisitive, it's been reinvesting in manufacturing as
Why
well,
50
and really building out that
plus
capacity
people
too.
should
It
get
has
vaccinated
been
with
very
shingles.
acquisitive lately. I mean, this is not the first we've heard of. It just feels like another week, another deal right now with Eli Lilly. Obviously, it's been looking in the areas of cancer, in sleep disorders, also autoimmune diseases. So it's using, as I mentioned, the success that it's seeing in weight loss and diabetes here to diversify the portfolio. And the GLP-1 is basically allowing the company to do that. So as far as the analyst calls, obviously,
They want me to take the flu shot, and I told them no. I don't want to take the flu shot because I'll start catching the flu.
at 10.78 and change.
I'm still in these. We're at 230.
They say that basically they expect revenue and profit growth to be driven by the doubling of the GLP-1.
We kinda got a wedge.
Sales by 2033.
Kinda.
And new product introductions.
We definitely got a wedge that
to
way.
Expand the market, which obviously is what they're trying to get into with this foray into infectious
Lower lows and
Yeah, and I think a really great summary of course, what's
Lower
driving shares
highs.
higher today. Modestly still up about 1.2%, adding to overall it's pretty strong pipeline. So appreciate it, Sam Vadas, for all of that breakdown. But now to shift our coverage to a more macro focus. With
Could have got
markets
him at
now
185,
pushing some of these recent
$2.
highs, but we do see some uneven expectations on that growth now going forward. And so
AMD
the next
new
phase
high.
of course could look a lot different than what we've seen
It's gonna be the next
previously.
MU.
So more on this, we're now joined by Nancy Pryl, the co-CEO and senior portfolio manager at Essex Investment Management. Nancy, first and foremost, thank you so much for kicking off the trading week.
Nancy!
Now, the market is at new highs, but you have noted that the biggest rewards may be in areas that are not fully discovered yet. So what would you say are the clear signals that a theme is still in this undiscovered phase?
Well, we look at things obviously like the valuation, but we really look at ownership and we look at the percentage in the benchmark. So if you think about what's been driving this market, particularly since the action in Iraq began, and as we know, it's really been driven by the theme of AI, by the semiconductors, most particularly the memory stocks, all data centers, etc. And those are great themes. But what we see is the growth of those sectors as a
Back at
percentage of the
resistance.
benchmark is really crowding out, in a sense, other areas of the economy in terms of the stocks.
3 black crows
in
with a
terms of their
tweezer.
fundamentals, that are also seeing some good tailwinds to growth. Areas like energy, areas like housing, areas like the rest of industrials, areas like healthcare.
Oh,
And so
God.
we look at
I don't
those
like
areas
people when
that
they
are
talk like
smaller
this.
to benchmark, where the valuations are attractive, and say,
Benchmark.
there are things here that are going right that aren't yet recognized.
Benchmark, a standard point of reference against which things can be compared or measured.
Capital, you're faced with those decisions. We look over and we see these names like the Microns of the world, you know, making years in a day. I don't think that it's, you know, out of consensus, statement to say that some of these trades have certainly become pretty crowded and a little bit euphoric, but how do you balance sort of participating in some of those moves and being exposed to the AI stuff, but also being prudent and taking a step back when things get a little bit out of whack?
Right, and that is, of course, the hardest decision to make, and we all know they never ring the bell at the top, and generally you have to choose between being either early or being late, since you don't know exactly when this trade might come to an end. But when we look at stocks and sectors that have gone parabolic, like many of these stocks do, what we tend to do is to start trimming off the top so as not to let those positions get to be bigger than where we originally wanted them to be. As you know, as stocks go up, they gain in weight in your portfolio, and as all of a sudden, instead of maybe having a 25% weighting in technology, you have a 40% weighting in tech. Take some of those profits off the top, reinvest them in areas that are less exploited. You still have exposure. You still have the exposure you were targeting, but you're building exposure in other areas that may be the new leaders going forward. It's really traditional portfolio rebalancing, but we think this is an excellent time to do that.
Okay, so you do expect some more breadth in, say, chop at these current levels. So if we do get more of this volatility spike, what is your playbook for then adding risk, frankly, and just evolving your exposure, let's say?
Well, we think that we take advantage of the volatility. So when the volatility is on the upside, you want to trim. When the volatility is on the downside, you can look at adding to exposure overall. Again, today, we would tend to be adding in those areas of the market that are less exploited, even on some downside volatility, and using the upside volatility to move part of the money out of those areas that are most exploited. But it always makes sense to take advantage of those outsized moves in individual stocks or sectors to help with that rebalancing.
Nancy, of course, some are stock pickers, some do things factor-wise, some do it by just simply asset allocation to different types of products. But, one thing's for sure, since, this AI, cycle began, let's call it early 2023, it's a narrow kind of mega.
These things are moving pretty fast.
Are you looking down the cap spectrum as
I mean, we're above the trend line. We just got to break out of this here little area right in here. In the 200. See, I sell it at the 200. Because it's hit it twice here in the last 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes. They got to break this one. It's either going to stop there. We hit the 200 and almost the 200, the 50. So it's got to be the 200.
Expectations.
Yeah. So close to our year-end target for the.
Schwab's annoying me today. Elon Musk CEO sits on board of both. You got a problem with that, bitch?
In control. Who doesn't want this? What would the downsides be? Downsides, I think one question is just on the market narrative. Right now, SpaceX is viewed as this high-growth, tech-savvy company that...
Come on, break it. Get a big old bounce. Get a tweet. Micron touches a $1 trillion market cap. Oh, Jim, you're up $30 a contract. Have you ever thought about selling? No. We just hit it now. That's resistance. So I either sell it, which I don't want to do, but that's definitely a hard resistance right there. I want to break the double top. Just like that, it's back down to 270. I was going to say 265. Blink it. It's giving me one more chance to get out of this trade. It's $40 a contract. It's 120 bucks. But if I break it and get up to 75.15, I'll make most of my money back. And then we got a double top. So you have so many obstacles, if that's the correct word to use. Head and shoulders, double top. That's a hard resistance. That's a real hard resistance. I want to make that clear. That's a hard resistance. I did it 255, but I'm skeptical. We got a head and shoulders, a hard resistance coming up. Damn it. Just like that. It's time for a little music. Well, you're up. You're looking good. All of a sudden, they pull a knife. You know you're at a hard resistance. It was trying to break that resistance of the 200 EMA. Now it's pulled back to the previous resistance. Will I ever get a chance? Today, I was looking good this morning, and I got stuck in a trade. I was too out of the money. I had to scalp it and stayed. I was down about $800 at one time. Then I scalped the bottom. Ended up going red again. Will I ever get that win? Well, we're back at support with a two-headed snake. Broke that resistance at number 4. What will it take? It shit on me again. My lost friend. God. Just like I thought, man, that was a hard resistance to break. And then you come over here and look at the /ES. You got, oh, I didn't see that one. 1, 2, 3, 4 attempts with a lower low on that one. Now we're at the bottom again. That pivot point from that double bottom. We got a two-headed snake. So this will probably be the last. If it comes back up, it'll be probably its last chance. And we got 1 minute until my worst hour of the day comes by, so I'm holding this thing. Turn this country song into a bluegrass song. I'm down $30 contract. We held the support with a hammer, and that's 3 black crows with a hammer. That's bullish. Hold that previous resistance. But still, yeah, this thing's real choppy. I mean, I was up there looking fairly good. I was up at $50 a contract. Now I'm down 35. got a TTM squeeze happening right here on the 7th dot. 1, 2, 3, 4, 5, 6, 7. That's when I like to, that's the sweet spot of the TTM squeeze. Fuck. That's back to $2. No, I don't want to delete shit. Now I'm back down to 285. Get rid of that sucker. Yeah, this don't look good. This looks like it wants to sell off more. Back down to support again. It's like that, from 170 back to 230. Hickey. Uh-oh. The Ferrari loose.
That. What is that? What is that?
It's a cheap ass Ferrari.
What is that? What is that?
What is that?
What is that? What is that?
It's nothing I want. Ezo Ferrari. Have you seen the Ferrari loose? That's a stupid name for one. Kind of gay. What is that? Got a problem here. Oh God, they look uglier than heck. I don't want one. It better be cheap. What is that? Okay, we're back at that stupid 200 again. I said this was the last chance to break. I say gravestone and an inverted hammer. Let's break the resistance this time. 75.12. 70, or first the shoulder line. These are depreciating now. They're not as worth as much as they were right here. They're worth about 3 something there. Now we got frickin' triple top. Come on, all these obstacles. I can't take it. And every time it just goes longer and longer, the 200 goes farther down and farther down. Jim, you're back to even. Have you ever thought about selling? No. I'm going to stick it out. Like I did my last girlfriend. She ended up with a house. And I keep thinking about it. What the hell was I thinking? I bought a new air conditioner for the place. Painted all the walls. I put new flooring in it. And I won't forget about that tree I chopped down. Now we're at the shoulder line of that head and shoulders for the last time. Can we break the 200 on the slash ES? This was the last time to break and it did it. I called it out and said so. But it ain't getting me no mo. If I sell, I'm up 15, 25 a contract, 30. We're at resistance again. I mean, it's been resistance after resistance after resistance. Now, if this breaks, boom, I can double my money. If not, I need to sell it. So if you're in this trade, make a business decision. Never trade on hope. Come on, break it, baby. Oops. You're looking good. Said it's got to break this last chance. Hey baby, you want to go out for some romance? Well, I broke the 200 SMA. I was looking at this Ferrari, and what is that? Some call it loose. I call it goose. I'm up almost $100 a contract. Keep going, baby. Don't stop now. Don't stop now. Don't stop now. Break new high, or I'm gonna cry. Should I sell here? Take you out there in my new loose Ferrari car. It's kinda gay. They went and took wokeness too far. They bought and made this car. Come on, baby. You can do it. Loose. Let's see how this thing drives. Oh shit, going back to $3. It's a disaster.
Every day, especially the bit.
This is Ferrari's first ever electric car, but it doesn't even look like a real Ferrari. What have they done?
The Luce is the biggest Ferrari ever made. It's longer than an Audi Q8 and wider than a London width restrictor. Have fun driving this around Knightsbridge, guys, and that's just the tip of the iceberg. Many Ferrari customers don't actually care about performance. They want a car that looks good on their social media feed. But I think this thing looks dreadful. The front is a little bit like a
I do too, sir. I think it looks very dreadful. Now we're retesting the previous resistance. So that's normal. That means we got to stay above the 200. And it'd be better if we broke out right here and not even went down there. We just went ahead and shot on up right there. See that right there? That's $50 down. I told the rookies to sell before the fall. This is called a retest. Let's break it all. I'd like to see these go to about $4.50. I'll make back my money and I'll be able to pay my rents. If you imagine one trade, be able to pay your rent. What do you think about that, Mark? You think I'm nuts? Say yes or no. We all are kind of nuts. I flew over the cuckoo's nest. My sister wants me to put a new back door in her trailer. She buys a bunch of trash on, what's it, Hulu or whatever you call it, from China. She's also a hoarder and a little bit trashy. Do I care? She's my little sister. I help her when she's in need most of her life. Put her in a trailer. Last year I bought her a washing machine. Last time I was up there, I looked at her microwave. I said, I'm going to Walmart. I'm gonna buy you a new microwave. My mom, she couldn't hardly figure it out. So I put a sticker on the start button. That's no doubt. Everybody I know is kind of broke. Some asked for a smoke. That's no joke. $100 a contract. I want more. I want more. Okay, well, I got to make a business decision. I want more, but I don't think I can get it. So we're going to look at the... Oh, look at here. I had to pull it out a little bit. So we got a double top. Now, if I want to be really, 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 really anal about this, and it's not really being anal, it's telling me if I do this, we're actually bullish. Big time. If I go straight across, we're not at resistance yet. Come on, you chicken shit. Oh, I seen something here. So let's look at this. We got a head and shoulders. Oh, no. No, that's not going to happen. Oh, look at their 420. Randy. 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 God darn it. Oh, we hit the top. Oh, you dumbass. Will you stay above the 9, please? All we need is a Trump tweet. Walk the pipe, baby. Don't say a word. Mama's gonna buy you a mockingbird. If that mockingbird does not sing, Uncle Jimmy's gonna buy you a diamond ring. Let's break this double top. Please don't stop. Come on, break it. I mean, have you noticed I've been sticking in these trades a little longer than usual? Because I'd have been out of this trade a long time ago. If this breaks, I'm going to get 100%. And that's what I need. Or I get out now and I'm definitely green for the day, plus make back my loss, which is a big deal. Jimmy got that arrow in the way. So what we got here, 3 white soldiers. Spinning tops. I mean, did anybody take this trade? Say yes or no. If you did, it's time to go smoke a bowl. We're at 440. Woo-hoo-hoo-hoo! Yeah, I don't mess around. My name's Washboardjim. I think that's it. It's got to hold the 9. See what happens here? You get something like that, a big old feckin' candle. If it doesn't hold the 9, get another one, then you're back to even. I wonder what life would have been like if I kept playing music. I'd probably be in worse health than I am right now. Stopping from bar to bar, town to town, sleeping in a van or a bus or at some girl's house. I'm not gay, I'm not gay, I don't wear a dress, I'm not a mess. I'm not gay, I'm not gay. It don't matter if you are, though. I don't care. Oh, here we go. This is it. We're getting a signal. I hate to sell it, but I'm going to have to. Because all of a sudden you'll get this big old dip. Now that's strange. It's actually going up. See, right there, just wasted $350 by not getting out. Just like that. See how it hurts? Snake, breakout, pull back, boom. Snake, breakout, pull back, respected to a double top. So if it holds this here previous resistance, which was that right there, we'll go back up. I seen trouble coming once we broke down below the 9 right there. We had that gravestone. And the big old bodied. Now you got a tweezer bottom. It's now 2:30 Eastern time. And back up $100 a contract. Said tweezer bottom. Now you got a head and shoulders, which will probably bring it to a double top. So if you did what I did and held, I would probably get out now. And get out at the head and shoulders. And that was a double top, if I remember right. Yep. So that's your warning shot. Last time you did that, boom. Now you're right there. You're right at the shoulder line. If it breaks, we can make a new high. Or not a new high, but a triple top. To 75.18. If not, you get out here at $4. Well, I pulled out this guitar and the market started to move because I got it in that groove. That's it. Oh. Snap. I kept 2 of them. Hour. That's one thing about typing. When I type a T, it's always an R. Not always, but 80% of the time. And I'll regret selling these like always. Ooh. You ever pass a school bus when they're parked? Bus Patrol put AI cameras in tens of thousands of school buses. Bus Patrol plans to scan the license plates of all vehicles and buses drive past and then let law enforcement search that data. The plan would essentially turn school buses into roaming surveillance vehicles. I bet you that's a company to invest in. Okay, Jim. What you gonna do? Well, I sold 3 and I have 2. I'm up $100, right? 200 off if I sell them now on the other 2. Or I wait for the VWAP. That's a real hard resistance right there to break. Bus Patrol put cameras in tens and thousands of school buses. Let's see if I can find that article. I think it's a good idea. I don't like being surveillanced, but 4 hours ago, I wish they'd never invented them vacuum cleaners.
Vulnerable children.
Vulnerable.
Every day, over 23 million children rely on school buses to get to and from school. Yet drivers illegally pass stop school buses nearly 40 million times every year. These aren't just statistics. They represent children in danger every single day. And with more than 500,000 school buses on the road, there simply aren't enough officers to monitor every stop. At Bus Patrol, we believe that every child deserves a safer ride, and that starts with a connected approach to school bus safety. That's why we offer an end-to-end solution that transforms ordinary buses into smart, connected vehicles capable of catching drivers who illegally pass stopped school buses. At the heart of our solution is AVA, our proprietary AI engine, proven to be 30% more accurate than the human eye. Our advanced stop-arm cameras detect violations across up to 8 lanes of traffic, far surpassing traditional systems that typically cover just 1 or 2. But Bus Patrol is more than just cameras. We manage the entire stop-arm enforcement process for our partners from beginning to end. Here's how it works. When a school bus extends its stop-arm, Bus Patrol's smart cameras automatically activate and begin recording. If a vehicle illegally passes the stopped bus, that footage is securely sent to our team of trained reviewers. We analyze the video and prepare an evidence package, which is then sent to local law enforcement for final approval. Once approved, a violation is issued and mailed directly to the registered vehicle owner. Our support doesn't stop there. We also provide court and adjudication services, from organizing dockets and coordinating hearing dates to working with prosecutors and managing pre- and post-hearing correspondence. From start to finish, Bus Patrol handles each step, enabling school districts.
Just like that, I'm back to 280. It was too big here. I mean, it's these things ain't holding up very well. The price. We still dropped down to 63. Or got a yin yang. And that's right around the 63. Blanche. Just like that. We're at 63 on the SICES. Okay.
VIX is actually slightly higher on the day. Now that's a Friday-Monday relationship with VIX, but all things considered, a much more mixed market than the numbers are saying. The S&P 500 is up about 0.5%. The equal weight is up about 0.5%, the exact same number. So this is a pretty balanced day throughout the day, Nicole.
It's been an exciting day. I saw the SOX at a new high right now. It's at 5.25%. We had a huge call on Micron today, you know, and so much more coming out. A variety of earnings too this week. Kevin Hanks, thank you. It's great to see you. Appreciate it. It's time now for our ETF watch list segment. Joining me right now, Andy Baer, Managing Director of Asset Management at GSR. So I'm so glad you're with us, and congratulations on your new role.
Thank you.
You know, something different and getting the folks involved more, it sounds like, Andy. Really, tell me a little bit about the Crypto Core 3 ETF.
So yeah, we launched Core 3 ticker Beso, Spanish for kiss, which is a nod to our founder and our founding city in Spain. GSR is a 13-year-old crypto market maker, one of the original ones, which has become the primary capital markets partner across the crypto ecosystem. So Beso, we wanted to answer the question that we get all the time: what crypto should I own? Everybody asks us, our friends, our relatives, people outside the industry, and we keep coming back to your core portfolio should have Bitcoin, Ether, Solana. This is Bitcoin for your macro asset store value, and Ether and Solana for the two dominant layer 1 blockchains that represent blockchain adoption. So put those three in a package.
SOL.
Get your staking rewards for Ether and Solana, and then we threw in active management to help tilt the portfolio to anticipate market conditions. So for all that in one ETF, it can be a core holding for most folks.
And it gives you the opportunity to have all three. And how do they move? They don't always move together, right?
They don't always move
or
together.
Or do they sometimes, most often
and
move together?
We have a bunch of quantitative signals that we run at GSR for proprietary and client portfolios. We've used some of these to help steer Core 3. Its kind of base weighting will be a third each, which we think is a good place to start. But then those weights can move between 0 and 60% per name to make sure that it remains diversified, but that it positions more actively for market conditions.
So many of the guests come on and they see, of course, Bitcoin go back to 100,000, 200,000, a million. I mean, we're getting all kinds of calls. At the same time, really not doing that much. In the last 6 months or so. I mean, what's going on here? The crypto winter, now it's spring and summer.
We're certainly,
what's happening?
Certainly, I think acknowledging bear market conditions, we're certainly, and what does that mean exactly, right? So one of the things that keeps striking me, having been in the equity business for a long time before crypto, is that volatility was a scary word, right? Volatility usually meant people were impatient to get out of their stocks and dump them, and that created big price moves. So when you think of a higher VIX, you think of more volatility, you think of turbulent markets, scary markets. Crypto is just the opposite. We love volatility. Volatility more means people are impatient to get in, right? Volatility is usually experienced on the upside. It's more a measure of energy in the market than fear in the market. And right now, volatility is very low. Bitcoin volatility is now sitting in the 30s, whereas a couple of years ago, any number below 60 would have been surprising.
We just had a great conversation with Greg Bracca, who's an industry titan because of his role that he played at TD Bank. He was the CEO there, but he has put together a group of bankers and brokers with tokenization and stable coins. Where does that fit into a portfolio?
It's so exciting because, you can't really say you are allocated to crypto without owning some Bitcoin, but having Ether and Solana in there as the two dominant layer 1 blockchains, which are kind of like the Coke and Pepsi of layer 1 blockchains, really representing all of that adoption growth. There's $322 billion of stable coins outstanding right now. Ethereum, settles about half of those, and Solana settles about 1/10 as much as Ethereum. So there's room to grow for Solana, but pretty good market dominance there. A lot of these tokenization platforms are going to settle on one of those two blockchains as well. So to the extent that demand starts to blossom for tokenization and stable coins, you have Ether and Solana in your portfolio.
And how bullish are you in the big picture? Just a quick thought.
It's, right now we need a catalyst to get some immediate energy back into the market. But with all of this,
we've had a catalyst, baby.
Built, and things really standing to make things a lot more efficient for markets in the future, it's hard not to be bullish on blockchain adoption. With the inflation
blockchain, yeah, it's different.
And the forward-looking inflation picture the way it is.
Come on, let's not talk about crypto, you dumbass.
Well, congratulations to you and your team. Beso, GSR Crypto Core 3. Thank you. Andy Baer, Managing Director of Asset Management at GSR. Coming up, we'll take a close look at the options trades on Wall Street. Alex Coffey standing by. He has some big moves.
How come you ain't showing any cleavage?
American Airlines, Oracle, the watch list. We'll be right back with options trades.
SPX dropped big.
The final 90 minutes of the trading day, that's when markets make headlines and
We're back down to the 200 here. Prepare ye in the name of the Lord.
Sector rotations. We're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving
$1.65.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close
He's about ready to go have
every
another cup of
single
coffee.
day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over
Schwab.
1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Damn.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful
Come on,
trading
hold you, bitch.
platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
If it drops down here, it could be a
I'm
buck.
Sam Bartis, live
So we
from
gotta
the
hold
New
it.
York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Time for Big Moves, where we highlight outsized options trades taking place in the market. Joining me right now, Alex Coffey. We want to take a look at some real trades.
There we go.
As HP reports its earnings
Blanket.
tomorrow afternoon. Now, you found a trader making a bullish bet, bullish play here for HP. I want to hear more about it. Could you tell us?
Yeah, this trader is making quite the bullish bet, Nicole, as they're buying some upside calls in the June option cycle. This trader bought 2,350 of the June 25 strike calls for $1.41 as a debit. Doing the math, that's about $331,000 worth of options premium ahead of earnings
that's nothing.
tomorrow after the close. Now, this trader would have a break
Come
even
on.
of 26.41 to the upside and would have unlimited upside profit potential. So this is a trader who's hopefully then perhaps believing in a big move around this earnings event to be the catalyst for the next upside leg in HPQ.
Yeah, well, Lenovo did well recently, and that helped a name like HPQ. So that was a sort of maybe a precursor, maybe not. But we did see Lenovo get a leg up. What about American Airlines?
I get a leg
Well,
up
we
every time I
American
look at
Airlines
you.
Getting a jump this month. It's up about over 25%. What stands out in the options market when it comes to American Airlines?
Yeah, one of the things that we've seen since this
They get a
conflict
real
in the
leg up,
Middle East
baby.
began, Nicole, is that long-only expression of positive outcomes for the conflict or negative oil outcomes have been expressed through these travel stocks. And this is a trader perhaps doing just that with a large call buy. 13,800 of the June 14 strike calls for $1.26 on each one. Doing the math, that would be about $1.738 million worth of options premium with a $15.26 break-even price. So again, same strategy. Defined risk, unlimited upside, but the break even above the current share price, Nicole. And again, maybe that catalyst is some sort of resolution to the conflict in the Middle East. You see oil go down, and then sort of that reaction function, a name like AAL perhaps moving higher.
Hey, I also heard earlier today that Starlink signed a new airline customer, that being American Airlines, to have the in-flight provider for internet. So American Airlines will use SpaceX Starlink to focus for the premium travelers, so they have onboard Wi-Fi. Oracle, this has been a winner.
I'm up $20 a contract. Have you ever thought about
Real
selling?
Software has been sort of in fits and starts in terms of its attempt at recovery. Oracle no different. But this particular trader drawn a line in the sand below the current share price. Right now in real time, Oracle's about $192 per share. This trader sold 4,400 of the July, so let's call it midsummer, 175 strike puts for $8.80 of a credit. For this trade, they collected $3.872 million worth of options premium. That would be their max potential profit on this trade if Oracle stays above 175 throughout the duration and through expiration on this particular option, which expires in July. In exchange, the risk on this trade would be potentially being put this stock in assuming that risk. So this trader would potentially be put $73.128 million worth of Oracle stock with an effective purchase price of $166.20. So again, drawing a line in the sand and perhaps being willing to being quite the shareholder in Oracle if things turn south.
Yeah, thank you for those. Tomorrow we'll hear from Salesforce, Dix, Capri, Snowflake, HP. Thursday's Dell, Best Buy, Gap Inc., American Eagle, Costco. Any final thoughts here, Alex, on the big picture of the market that, look, we hit records for the S&P, the NASDAQ, and the Russell today?
Yeah, exactly right. And it's back to the leadership that we've seen really going back to the beginning of April, Nicole, which is, one, you're starting to see some moderation in the energy markets, but momentum, and that momentum being the tech sector, particularly the memory chip makers within the semiconductor subsector leading the way. Memory as a subsector is up over 15% today, largely due to the 21% rally in Micron, but momentum as a factor is up 3.3%. Both of those, multiples of what you're seeing even for the NASDAQ 100. Other than that, it's kind of a split day, Nicole, about 50-50 under the surface.
All right, and Micron up 20% right now. The high was 908. The UBS call is 1625. A year ago, it was $92. It's about to be $1,000. Amazing. Thank you, Alex Coffey. Thank you, friends, for being with me here every day. On the watch list at 2 p.m., 2 to 3 p.m. every day here. I'm Nicole Petalides, and I'll see you tomorrow morning at 9 a.m. for opening bell. Join me then. I'll see you. Goodbye. Market and Clicks next.
Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
This woman... I thought this was kind of cute.
Well,
this woman's got a hole. Looks like somebody put their head through someone's bathroom. So I put it in here. I got some art. Then I scroll down a little bit.
Inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance.
That's pretty smart.
Not the same rate of change on EPS.
Follow the biggest headlines, live analysis,
That molding right there.
and sharp trade ideas, minute by minute.
With shows built for action.
I used to sell that shit. That picture frame molding. The exact same frame. I mean, to the T.
A risk-defined way here going into earnings. So,
too bad it ain't the mugshot. But, yeah. That frame right there would cost me probably about $12 a foot. So you got 1, 2, you got 6, 7, 8, 9, 10. You get a 10-foot stick. And hopefully you cut the frame right. Make it 6'4" or 5'5". Yeah, it'd have to be 6'4". 20. I mean, that would be close. You'd probably have to almost get 2 sticks. So 20 feet times $12. And then you'd have to cut it perfect. Maybe they come in 8-foot sticks. We'll just go 16. You might get it in 8-foot sticks. That'd be almost $200 for just the sticks. Then you got to cut it perfect, or you have to go out and spend another $200 on that job. So I'd charge them something like that with no glass. I'd $400, $450. Other people would charge $600, $700, $800. But I'd do it for $450, and if she kissed me on the lips, I'd do it for $350. Picture framing was a good job. I mean, I really enjoyed it. Fly can get to 69, 70 something here. $70. God, ugh. What am I not doing right? Fly can make it 70.03. Oh, never mind. Oh, here, I missed this. I missed it. Man, that'd have been a sweet trade. Shoulder line. Well, it's power hour, post 4 minutes. I'll be getting my shirts tomorrow that I ordered. Maybe. Track package. It's been shipped. Or a blue shirt with a palm tree and a black shirt. And then another shirt. Cheap. We'll see how they fit. Well, this weekend I said, is it going to be one of them sell the news kind of thingamajiggers because we're up so much? We had that big breakout this morning just on the news itself, and it wasn't finalized again. There's my man.
Blue Origin or a SpaceX.
Yeah, you raise a really interesting point. I mean, what do you think it says as far as the moves we've seen in sympathy alongside this announcement and, you know, obviously revealing its prospectus last week? I mean, we've seen this all the way across Europe as well with some of the kind of SpaceX type rivals in places like I saw in France and Germany as well. I mean, what does it tell you that we've seen this price action? Is it validation, do you think, for the space? And what happens, do you suspect, as you're saying, do we see a pullback on that IPO day?
Well, I mean, it's definitely a new frontier for the market to actually have some access to space development outside of just defense. And we know that some names like Boeing, for that matter, or even a Lockheed Martin or RTX have had exposure when it comes to satellites and deploying particular rockets into space. But now you're starting to see this become a little bit more I would say retail focused, if you will, many different applications that can be utilized in space. I think the big one that's really catching a lot of traction, at least for now, even the concept, is putting data centers into space in some form. That's obviously going to see and complement some of this AI trade here, but also maybe even looking at deploying additional satellites for defense systems, and even maybe individuals like yourself, Sam, that might want to go out to space and check it out for an hour or two. Who knows?
Yeah, wouldn't mind, certainly. Let's move on to Apple. Quite a quiet achiever, you could say. I mean, I don't know, it kind of looks like it's been slightly overlooked to some degree as far as what we've seen in the whole AI trade, with the fact that it's been on this sort of 9-week rally and now hitting a new all-time high as well. I did see it got also a price target hike. Just walk us through what stands out to you about this price action and sort of levels we should be watching in Apple, particularly as we head towards WWDC.
Yeah, so we are seeing B of A raising their price target to $380, and that's up from $330, and maintaining their buy rating on the shares. They're optimistic when it comes to agentic AI. Now, obviously, Apple has not been at the forefront of that as far as CapEx spend, but they do believe that they're going to be a very big player when it comes to agentic AI and the ability to really kind of control their own platform and who has access to some of the cutting edge models that are hitting obviously the market right now. So they think that they're going to be a very big beneficiary of that. Technically speaking, you can make the case that since December, pretty much December of last year, we have been in this kind of consolidation or this basing formation, and the breakout level is sitting at around this $285 level, and that's where we have been able to extend higher, above $300 right now. And I think if you can look at that 320, 325 level, that probably is your next major area of resistance, and that's basically just building a trend line off of the lows that we saw back in April and leveraging that as an area of support, and then also creating a trend line from the highs back from those lows in April, creating a really decent bullish channel here that gives you that 320, 325-ish area, the major area of resistance. But this is a CapEx light company when it comes to artificial intelligence. Let's see if they're going to be able to position some of these AI tools in the right manner in order to generate cash flow, not only on the services side, but maybe even on the hardware front. This is not something that's out of the ordinary for Apple as well. We have seen them lag the market when it comes to innovation, but really lead the market when it comes to actually marketing and getting dollars and eyeballs onto their products. That's really what they're known for, and let's see if that's going to pay off for them this time around.
Yeah, and you've got to credit the markets with being so patient with this story, with this sort of lack of a sort of meaningful AI type of narrative that it's been able to kind of present to the market. And I mean, I think a lot of eyeballs will be on WWDC for any signs of that, and particularly under this new leadership as well. So I'm just wondering, as far as what you're seeing out there, as far as what the analysts are saying, and all the expectation and the hype around this event, what do you think we can expect? I mean, is this the next leg higher for a stock like this if they sort of hit the right notes?
Yes, it is, baby.
Well, potentially. I mean, unfortunately, if you look at the past for WWDC and these events, it's usually a buy the rumor, sell the news type of reaction. So I would not be surprised if we do see that run up to that 220-ish area or that 320-ish area, and then maybe a pause, a pullback even coming back to around 290, Sam, is not out of the realm of possibility, and actually probably would be a little bit more healthy for this name. but we are kind of expecting maybe some new innovation hitting the market, and then their strategy around agentic AI. If they are going to be able to provide a wide array of LLMs on their devices, I think that probably would be a tailwind for them when it comes to the share price, rather than trying to pick a winner or loser when it comes to the right model or the appropriate model for their base devices. And I think that's really what the market wants to see, a little bit more clarity on that throughout this event.
Okay. And moving on to Eli Lilly, obviously some big news around this company today, making its foray into these infectious diseases. Just walk us through the highlights here, the headline, and exactly the significance of this to a name like Eli Lilly.
Yeah, we are seeing them acquire 3 different companies here for a combined deal of $3.8 billion. Now, the infectious diseases business, especially when it comes to prevention, has obviously gained a lot of traction since COVID-19. And even though it is going through its own kind of cycle right now, COVID-19 vaccines obviously have lost a little bit of favor in the market. They do come in waves when it comes to the importance of these particular products hitting the market here. So it looks like they are kind of doubling down on that particular effort, and then also diversifying themselves away from just the GLP-1 obesity drug cash flow. It's been really a big driver for them over the last couple of years here. So this is going to be a very big deal. I think your big headwind that you have is obviously regulatory approval, especially as administrations do change over the next couple of years. But they are hoping that they can actually build out a good product backlog here and pipeline that could be going through some approvals over the next couple of years that could actually put them on the forefront for some of these diseases that obviously may be in the back of people's minds right now, but could also be on the forefront in the future, and they want to try to get ahead of that type of cycle.
Yeah, and it really is the success of the GLP-1s that is driving a lot of that growth, and they're using that growth to reinvest it. And I think obviously it's being rewarded today, as you can see here with this announcement. So, yeah, interesting story to continue to watch here, KG. Really appreciate it. I'll check in with you a little bit later as we break down some of these earnings together. Coming up, we'll discuss the state of the semiconductor industry after NVIDIA's earnings and trends to watch in the bond market. Market on Close will be right back.
You know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Boom, boom. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Someday. Not today. Snake, breakout, pullback, inverse head and shoulders, boom. See it? Snake breakout pullback, respected resistance, boom. On the SPY. We have 40 minutes left. Yeah, I don't know about today. I ate all my hummus last night. I think I'll eat them chips with my soup. I gotta go. I forgot I gotta go get towels. Let's see how much money I got in my bank. I think I can get him. Ooh, it's getting close. Oh, getting real close. Yeah, I did pay that. I really did like running a business at one time, but now it's just got too expensive. It ain't worth it. Especially after Biden. It was bad. It was hard to make it through Obama because of Obamacare and inflation, and then Biden came in and it got worse. Crime affected me bad during the Obama years. When I say I've seen days a whole lot worse trading stocks, I have. I think I had 9 crimes against me during the Obama years. Car stolen, shot at. Two wrecks by drunk drivers. Car broken into 3 times. Mugged. Homicides were up like, we had 65 one year, which is like 20x, 10x. Then the gas, about $4.50 a gallon. And then I lost 3 accounts because of Obamacare. Then Biden came in and it was like 30%. Cost me almost $1,100 more to run my business. A month. Now I'm showing a profit again, but not that much. It was just like a job. But that inflation, that was probably the hardest. I complained for about a year about my chicken. And the eggs were $12 a dozen. Now they're back down to $2.99. Steak was about $35 for a frickin' steak. We got a double top. Kind of choppy. It could go up to right there, 749, 62. And the VWAP on the SPY. We hit the VWAP over here. Pulled back, created a beautiful little snake. I had a business during the Clinton years and Bush. Clinton, I got audited. And that cost me a couple grand. For lawyers and stuff. Then when Biden said he'd increase the IRS, I got a little nervous. Hello?
Good afternoon. My name is Erica. I'm just something as per our records from your local county in the state of Missouri, and this will take a quick 30 seconds. Are you currently enrolled in Medicare Part A and B?
Yep.
Perfect. So our records indicate that you haven't claimed your free upgrade, which offers benefits like food cards, $300 cash back, flex cards, and very low premiums. So let me get a benefit specialist on the line who can activate these benefits on your current coverage free of cost, okay?
Last time, I'm kind of leery of this because I always get somebody that's foreign, third world country calling.
That might be someone else. This is my first time calling you, but I'm sorry, as I know how frustrating it can be. I just want to talk to you about the new benefits, including food and flex cards, with coverages inclusive of hospital visits and doctor checkups. Now you can even get cash back rewards up to $300, and I want to make sure you get the best plan possible. So you're getting connected to our agent, okay?
Yep. We'll see if it's a third world country.
You're getting connected. Meanwhile, listen to this song.
Oh, God.
Hi, this is Sam. How are you?
Yeah, third world country. I'm so leery of that shit, man. I'm from Indonesia. I want your social security number so I can rip you off. I don't know to trust. I just don't know to trust. Would you give somebody information from a third world country? Chin's up. I'm here to rip you off. There you go, man. I'm back to even on mine. This is my first time I called you. She's called me before. I know that woman's voice. Good job. Never give up. I regret it every time I give up. I mean, I really got down today on that one loss. It just like, God, too far out of the money. It's like it lost grip. And I was down. I made it back. But I wasn't going to make it back. If I held it, I wasn't going to make it back. Not at all. I'm going to go get some paper towels. Oh. There we go. I'm out. I'm out. $2. Snake, breakout, pullback, boom. Don't sell the SPY yet. I did. Oh! There we go, 265. Damn it. Look at that. That's just crazy. They've been $100 contract. Hello. I'm here to rip you off. I'm from Indonesia. Gosh, right to the VWAP. Ugh. Gosh, right to the Here's a good one. It needs to be a two-door. This thing does. They made a mistake by making it a four-door. If that was a two-door, I guarantee it'd look a lot better. IWM was up $5 today. AMD 36. It broke 500. Ooh, Randy. Yep. I've been there many times, their franchise. I've learned to hold, but I think even if I'd have held them ones I took the loss on, I would have done, well, I don't know. They were pretty far out. I don't think I'd have done it. No. $75.50s went to zero. So I'm glad I got out of them. Would have been a lot worse. So I'm going to take a road trip.
Which is our heaviest trading area of all, 190, or excuse me, 180 to 189, and then
CRM.
a smaller one up here between 192 to
Looks like it pulled back.
197 here. So a bit of a gulf between those two areas, but then
Falling
things
wedge.
really thin out here. There's very little activity in this whole range up here. Things do finally start to pick up again near 238. And then to get into the options market specifically for Salesforce here, we can see that the sizzle today, 1.26, so 1.26 times the 5-day moving average of options volume here, so slightly above average in terms of our trading activity. Our expected move for June.
I learned how to use that sizzle.
23 days out is our orange box here, plus or minus about 12.5% here. So some volatility on the horizon here. Today's options activity, 70,000 contracts, trading hands, give or take some. About 63% or so were calls. The most active month in terms of open interest was indeed our June 18th expiration, with about 26% of all open interest. Finally, our trade that we wanted to highlight, an interesting opening trade here. May 29th, plus 2,195 strike calls at a 325 debit. So a very short-term play, a $650 debit paid. Looking for some bullish upside in this name after earnings, Sam.
All right, we'll be watching tomorrow's CRM trading down now. Rick, thank you so much for getting us across some of that options activity for us and the charts today. Appreciate it. Coming up, it's time for Overlooked Stocks. So George Sillis has his eye on Modine heading into the close, so he'll break down the news about that. What you need to know coming up next on Market on Close.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
How's it going? First day, so...
Sometimes, you know...
Next. Try again?
You could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's why
9 minutes left.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything.
Nailed
in between.
Resistance today on Amazon.
We have to buy that now.
Schwab. Invest your way with Schwab.
Welcome back to Market on Close. I'm Sam Bardis on the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. Modine is rallying to a new all-time high today after announcing a cooling contract with a major data center customer. So I'm joined by George Sillis, Senior Markets Correspondent. A lot going on with this one, it seems, George. It's at a new high today, rallying up 15%.
Jeez.
It's got earnings after the close. It's got this announcement about this new contract. Just walk us through what's going on here.
One of them days where...
Well, I think this is really interesting.
I should recognize these kind of days. I usually do. wait until the end of the day and then take the big trade. But we were looking so good, these higher lows. It was hitting every single resistance and pulling back. I mean, it really kind of threw me for a loop. And that went on for almost an hour something. Wouldn't break that 200, then finally I said it would, and it did. Then it hit the double top, triple top, pulled back, right to support. And it did the same damn thing, kind of trick you out. And then you have a head and shoulders, breakout, pull back. I mean, really clean. Cleaner than you think it is at the time. But look at that breakout. And I'm bullish. I mean, you all know that. I think I'm probably one of the most bullish people out there in the market right now. Sounds like a duck or goose. So I'm going to go buy a case of toilet paper and some towels. I'm going to take my nephew out to eat sometime. He got him a job. Being a night auditor at a hotel. Oh, these things run up, man. That would have been a good trade. If I'd have held them right there, 10 contracts, I've been 75 20s, went to 5 something. 550. $4 times 10. 400 times 10 is $4,000. That music, it changed everything. Me singing.
Well, I think there's a couple of things. I saw
George.
this. One is we don't necessarily know if this $4 billion new landmark deal is an addendum to an already existing customer or if it's a completely new deal, because it'll make a big difference. The reason I say this is if you look at the revenue estimates for the current year, 3.15 billion. So this deal alone is worth more than this year's revenue, next year's revenue based on consensus estimates. Now this could certainly change tomorrow based on earnings as well as updated analyst estimates for revenue because of this deal. The estimated next year's sales were 3.83 billion. So again, you know, this is a 3-year deal between 2027 and 2029. So again, it would be important to know if this is a deal that is on top of an existing deal from an existing customer, if it's completely new. You're right, if you look at the forward PE this year at 43 times, next year it's around 32 times. So it's going down because based on consensus estimates for next year, it's $7.38. The earnings are expected to grow 51% right now. From this year at $4.87. So, you know, based on the current price, as well as the earnings multiple at 30 times, but if it's growing at 51%, one would say maybe there's a little bit more room to the upside on this one. But again, there are going to be questions about the nature of this deal, who it is, and whether or not it's an addendum to an existing deal. In other words, they're adding to an existing deal or it's a new one altogether. B. Riley today, if you look at the news, did basically increased their price target to 264, which is really right around the midpoint. The high target right now on the street is close to the current price at around 310, low at 250. So it's near the high end, which suggests maybe the high end is too low. But needless to say, I think this will be interesting to see how earnings play out. And lastly, I'll point out that there may be a secondary offering down the pipe here for this name because the cash position right now is only around $98 million on market cap of $2.75 billion. So this may be an opportunity for them to issue a secondary to raise capital to fund that contract.
Yeah. Right now, it's got about 10 analysts covering the stock. You've got most of them in a buy camp, 3 with a strong buy rating here as well. So things are looking pretty good into the print. Let's see. We'll get some answers tonight, hopefully. George, thanks so much for breaking that all down for us. MOD trading up 14% higher. We're nearing the end of the market session here, so we'll bring in KG to break down another record-setting day here on Wall Street. Plus earnings from Zscaler and Box. Stay tuned. Market on Close will be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Yes.
Yeah,
now
Daddy.
We're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been...
You picked up your dad from being vulnerable. You're very vulnerable. Okay, well, that's it. I got to go pick up some supplies, get some fresh air. Not a bad day, but it could have been a lot better if I didn't go into panic mode and buy them dips on that trade. I mean, I'm down $800. I'm going, shit. I'm scalping my way out of that. It adds up fast when you got like 12 contracts. It looked like a good deal, but it wasn't. Everything just kind of shit hit the fan. I kind of expected to be careful. I said that this morning, or this weekend. Randy said, might as well, if I can't beat them, join them. I said, it might be too late to join them. Then you get the big runs like these tickers, like, what's that one? SKND, SunDisk, or whatever it was. And then you get MU running like that. I said, MU's not going to go up there. I said, your people are crazy. It's not going to hit 500. And then you got AMD. Man, I was trading that thing at $9, 10, just under 10. If I'd have just held them, I'd be a millionaire. I'd be a millionaire. 500 times 50. I had 50 shares. So $500 times 50. That'd be more than that. Well, 250 grand, $25,000. Seems like it'd be more than that. 50 times 500. 25,000. Then I had options. I traded options on it forever. And called the bottom too here just recently. That's been a fun stock. So, we'll catch y'all later. See you later, YouTubers. I gotta get. Where's my.